then I think your bandwidth is getting distributed, not serving the purpose. But if they are completely pull out from these activities, who is there to fill that vacuum? That is the second largest question. The third question is, are we expecting these global banks, when they come into existence, to finance the kind of activities which was indicated? Exactly the risky area where we have seen the adverse fallout in the past.
Oh.
To my mind, a blue blood commercial bank should stay away from those areas.
Okay.
That is for someone else to do. So I think those are the largest questions which I was trying to say.
Fair point, sir.
So answer your question in a sentence. If any merger is being planned and designed, these are the sensitivities which must be taken into account.
Fair point, sir. Unfortunately, out of time, Mrs. Chandru, you have the last word. If you had a choice, what are the strengths you will look at? If you were sitting in Indian Bank and you had to choose a bank, what would you look for, the positives?
I would definitely look to see if the IT is possible to integrate. Yes, it is mentioned that the IT has evolved. So you can probably do, different platform also, but it will take much more resources, much more training, much more rewriting of the system and all that. The second and maybe equally important is the culture, the HR. How would people react? The third is, what is it we are planning? Like the other panel members said, are we going to achieve? Suppose Indian Bank is a very regional, it was a regional dominant bank. It is still in the south and now also in the north. But are we losing something in the process? Are we, especially language, culture of the local population? You have that focus in some banks.
That's right.
Should we retain that while also making them bigger? Maybe a similar bank, which also ensures the cost and efficiency parameters. Yeah.
This is an extremely rich discussion, and we will send the link to the DFS and to the government. I'm sure they're also contemplating and thinking about these issues, that there is a need for even localization, just as there is a need for globalization. That's one very big takeaway from this very elite panel. Thank you very much for starting the debate, sir. We will have more on this, on how India should consolidate, why it should consolidate, and what are the costs and benefits. Wrap up on this edition of Indianomics. Thanks much for watching. Hello and welcome to a special Market Masters edition that coincides with the end of the second quarter earnings season. The question we're asking our guests is whether the results season shows a clear recovery in Indian earnings, and hence, will the foreign investors return? Our guest today is Timothy Moe, co-head of Asia Macro Research and Chief Asia Pacific Equity Strategist at Goldman Sachs. We have invited him because Goldman Sachs has just turned overweight on India from their underweight position almost 13 months ago, since October 2024. Timothy, thank you very much for coming into our studio. That's
thank you
making
very
it
much.
all the better. Okay, well, straight away, why have you turned overweight on India?
Really, Lata, the reasons are that the causal factors for engendering our downgrade 13 months ago, as you mentioned, have dissipated and look as though they're turning aside. So to be specific, we downgraded for two main reasons. One, that a lot of India's good news got priced into the market valuation in September, October of last year, when the market was trading about 25 times forward earnings. So we've been very positive in India, as many people have been, but felt a lot of that was in the price. So that was number one. And number two, we had a developing conviction that there would be what we were terming a mid-cycle slowdown in the economy and in earnings. And as I'm sure you're aware, when you have a richly priced stock meeting a downgrade, you tend to get some hyperactive move to the downside. So we just felt, look, let's step back here and take our foot off the accelerator and take our view down. And we're fortunate that our timing was reasonably apt. And since then, India has underperformed by the most in a decade or two, particularly compared to China, which has come out of its doldrums and has had a very good year. So if you look at the scorecard for year-to-date market performance, China's up 35%, In India, just recently was up only 2-3% in dollar terms. And that's.
As traders assess the impact of sanction on Russia, gold gains on soft economic data. Traders also weigh US rate cut chances. HUL sets December 5th as the record date for determining the eligible shareholders who will receive shares of Quality Vault's shares in 1:1 ratio as its ice cream business demerger becomes effective on 1st of December. Infosys will open its 18,000 crore rupee buyback on November 20th, offering to repurchase up to 10 crore shares at 1,800 rupees each via tender route. The buyback will close on 26th of December. Hello, good morning. You've tuned into Power Breakfast on CNBC-TV18. I'm Vinny Motiwala. Thank you so much for tuning in as always. And in terms of the Asian markets, let's start with that, right? Given that we saw a bit of a sell-off coming in on the Wall Street, Asian markets today have opened up a big mixed in the trading session. Look at Taiwan index, very flat, 0.04% decline there, while Hang Seng is managing to hold on to mild gains over there. Now, other than that, when you're looking at it in terms of the other indices, ASX 200, that's all Australian index very flat in terms of opening. Hang Seng, like I mentioned, a very muted start there. Kospi is seeing a sharper decline, down almost 0.5%. So that is what we'll keep an eye out on. Nikkei is holding on to gains on the flip side of around 0.6%. So very mixed opening, an indication that we're getting in from the Asian markets this morning. Nifty implied open very, very muted start, just 2-point decline right now. So we'll see where the Indian markets are going to be headed. Yesterday, obviously, so we ended the trading session with cuts of almost 0.25%. Today, whether we see a further decline or we recover from that is key to watch out for. As of now, a muted start for the Indian market. But we have a lot of global market action that's taken place, a lot of cues that have come in from the Indian market as well. And we have a team of research here to set you up for trade, tell you which are the important stocks to watch out for as well. First up, let's go across to Vivek, who's joining us to tell us which are the important market cues to watch out for in today's trading session. Good morning, Vivek.
Well, good morning. Like you mentioned, the kind of sell-off that especially the tech, both software as well as hardware, have seen in the US markets actually drag them quite significantly lower. US markets now have seen a prolonged slump, especially as far as the tech side of the market is concerned. Now, when you're looking at how commodities actually fared last evening, oil prices ended marginally higher, went up by over 1%, now trading near the $64.8 a barrel marker. Now, coming to the Indian markets, especially given the kind of cues that we saw yesterday, we managed to snap a 6-day gaining streak. All of the sectoral indices yesterday actually fell across. And however, there were a couple of listings, amongst them Physics Wala. It was an extremely strong listing, almost a 37, over a 40% pop. In fact, Industrials Day was largely dominated by large trades that took across some of the names that tracked quite closely. So the first one, of course, was Emphasis, Paytm, Emcor, a few other smaller block deals too happen in the session. What is it that we'll be watching out for today? Well, there is a listing, Tenneco Clean Air. That particular stock would be watched out quite closely. And keep an eye out on KC International. The company has been barred from power grid projects, at least for the next 9 months. That could see a bit of a knee-jerk reaction in the session. Like you pointed out at the start of the show, Asian markets, GIFT Nifty, all of them pointing to a subdued start for our own markets today.
Okay, thanks so much for that, Vivek. But let's move on and go across to Upasana, who's here to tell us which are the important stocks to watch out for in today's trading session. Good morning, Upasana.
Good morning, Winnie. First up, let me start with TCS. The company has signed a 5-year deal with NHS Supply Chain to transform healthcare delivery using AI and cloud. Next up is HUL. Ice cream spin-off plan effective from 1st of December is what the company has indicated. And it has also declared December 5 as the record date for the share issue in the ratio 1:1. Next up is Infosys. The 18,000 crore buyback is to open on November 20th and closes on November 26th is what the company has indicated. Next up is LTI Mindtree. Company has announced expansion of its global collaboration with Microsoft. Next up is MGL. The company says that the rectification work of GAIL's damaged main gas pipeline has been completed, and the company confirms that the gas supply by GAIL is fully restored and operations are back to normalcy. Next up is KC International. Company has been excluded from participating in tenders of Power Grid and an award of contract for a period of as high as 9 months. Next up is Choice International. The arm acquires 100% stake in Iolisa Consultant and adds nearly about 2,000 crore plus in live orders. Next up is Azad Engineering. The company signs agreement with Pratt & Whitney Canada Corporation for development and manufacturing of aircraft engine components. Next up is GR Infra. On the back of order win, the company gets an order worth 262 crores from Western Railways. And lastly, coming to CAMS, the company has fixed December 5 as the record date for the purpose of share split. So all in all, we'll be closely watching out for all these stocks today.
Okay, Upasana, thank you so much for that. But let's go across to Sudarshan, who's here to finally tell us what we are keeping an eye out on in the world of F&O. Good morning, Sudarshan.
Good morning, Vinny. So it was weekly expiry yesterday, and after that we have seen that global cues remain weak, and range for Nifty continues to be in the range of 25,700, and on the upside, call writers are very active, first at 26,000, and then next major resistance comes around between 26,300 to 26,500. As far as the flows are concerned, just we have seen a minor buying by FIs in the index futures yesterday. They have bought more than rupees 117 crore, and also they've added longs position of around 400 contracts, reduced short positions of around 72 contracts, but they remain heavily on the short side, and now longs exposure is around 12%. In the options data, the reason I've told you that call writers are very active, look at the 26,000 call options. There the increase in the open interest was of almost 47 lakh shares, and the similar increase in the open interest was seen in 26,500, but at the same time premium for both these options has seen a sharp fall. But on the put side, 26,000 put has seen addition of 24 lakh shares. Here also premium has seen a minor fall, but 25,500 put has seen an addition of 22 lakh shares, and premium for this put option has seen an increase. So now on the downside, first support remains around 25,800, but if Nifty slips below that, the next support comes around 25,500. On the upside, first resistance is 26,000, then 26,100, then the door opens for 26,300 and 26,500. As far as Nifty Bank is concerned, support remains around 58,600 and resistance 59,000. One stock remains in the band, that is SAIL. One stock that has seen fresh longs after a long time is Container Corp, and some of the stocks that have seen fresh shorts, RVNL, Ireda and Piramal Pharma.
Okay, Sudarshan, thank you so much for that. Surely we'll be keeping an eye on all those names in the world of F&O as well. But we're going to sip into a very short break. And as we sip into the break, here's some important market opinion coming from Gautam Shah of Goldilocks Global Research. Listen in.
Our last two interactions, I did speak about PSU banks being the poster boys. I think they've had a phenomenal run if you look at the top 4 or 5 names. And I think the PSU banking index is going to do much, much bigger things, even from current levels. The private banks will do well, but then it's going to be in line with the Nifty returns. But the real trade is with PSU banking, and the overall financial space, NBFCs, housing finance companies are all likely to do well and take this market higher. Then if you look at the top PSU banks, even at current levels, including the top PSU bank there, I think there is potential for 15 to 20% upside, something which I don't see from any other financial stocks. And I think the top NBFCs also we've liked. And third in the pecking order would be the housing finance companies, which I think is a trade on what RBI has done and the pickup in the economy. So that would be my pecking order: PSU banks, NBFCs, and housing finance companies. I do believe that the market is at the perfect platform to confirm that breakout above 26,100. And once that gets confirmed, we are looking at 26,700, possibly this year itself, and thereafter 27,500. But I think the leader will still be the banking and the overall financial space, but I think it will be very well supported by the energy space led by Reliance. I've liked the way it has shown relative strength in the recent past. It's a stock that has not done so well in the last 1 year, but I think the signals are there to suggest that even it could move to lifetime highs and beyond. And not just Reliance, the entire energy index seems to be on the cusp of a major breakout. And if that were to happen, I think a 15% move on that index is likely. So IT, we remain negative. So I don't think technology is going to do anything special, because I think that's a multi-month underperformance that IT will go through and is still going through. But Reliance and the entire banking space will help this entire market higher.
Okay, on that note, we're going to sip into a very short break and we'll come back with more on the other side. Welcome back to Power Breakfast on CNBC TV18. And now moving on to the US market and what happened on Wall Street. Wall Street ended lower for another session with Dow falling another 500 points. S&P logged its longest slide since August as well. CNBC's Bertha Coombs is getting us a wrap on what happened on Wall Street.
U.S. markets were down across the major indexes in Tuesday trading, although rebounding off session lows as the tech trade continues to face headwinds over AI valuations. The Dow lost 499 points. The S&P 500 was down 55, while the tech-heavy NASDAQ fell 275. A big victory in court Tuesday for Meta, winning its antitrust trial against the Federal Trade Commission. The dispute began 5 years ago when the FTC accused the social media giant of being a monopoly after its acquisitions of Instagram and WhatsApp. It could have been forced to sell off those businesses, but a federal judge released an opinion today writing that the government failed to show Meta held a monopoly in the social networking market. And Microsoft on Tuesday announcing new strategic partnerships with NVIDIA and AI startup Anthropic in the latest sign that Microsoft is working to reduce its dependence on OpenAI. Microsoft will invest up to $5 billion into Anthropic, and NVIDIA will invest up to $10 billion, while Anthropic will commit to buying $30 billion of compute capacity from Microsoft. But that deal doing little to help shares of NVIDIA and Microsoft, which were both down about 3%. But a source tells CNBC that with that deal, Anthropic is now valued at about $350 billion. That's what's happening here in the U.S. Back over to you in Mumbai.
Thanks so much for that. Meanwhile, Donald Trump said that he was speaking with various people about the Federal Reserve Chairman's job and had some unexpected candidates on the list of those who might replace Jerome Powell. Listen in.
Have you started the interviews for the Fed chair?
Yes.
Who have you interviewed?
I think I already know my choice.
Who is it?
Well, I liked him, but he's not going to take the job. He refused. You like Treasury better, right?
Much better, sir.
So we are talking to various people. And, I mean, frankly, I'd love to get the guy currently in there out right now.
And Ashwath Damodaran of NY Eastern School of Business says that tech stocks are overvalued and are riding on just the money coming in, but with no guidance on where the money will be invested. Listening to his views.
I think it's part and parcel of a big change coming to the economy and markets. And I think we've overstretched ourselves in terms of what that change can accomplish in terms of money being made off that change. People are throwing money at investing without really telling me where the money is going to come back from those investments. Starting with, Sam Altman, when he's asked about how does OpenAI expect to make money? Blowing off that answer without giving me a business sense of OpenAI. What I get are companies like Oracle, like Meta, like Microsoft, like OpenAI throwing insane amounts of money to building AI architecture without providing any tangible. I mean, I don't even want evidence. At least give me a story of how all this investment is going to play off in terms of products and services on which you can make money. I think the more a company spends, the more caution is called for. So I would just take the AI spending of each of these companies, now outside of NVIDIA, and the more spending they have, the more cautious I get, which is one reason it might, if you're planning to buy one of the Mag 7 stocks, it's not a great time to buy any of them. I would say buy Apple because it's the most cautious of these companies. And this is a time where caution might actually be the byword.
Okay, that's the view on IT stocks coming in from Ashwath Damodaran. But moving on to some other developments in the US, Saudi Crown Prince Mohammed bin Salman received a warm welcome at the White House. President Donald Trump greeted him with a ceremony that featured marching bands, flag-carrying horsemen, and military flyover. The visit emphasizes deepening ties between Riyadh and Washington. This is Saudi Prince's first visit to the United States since the 2018 murder of journalist Jamal Khashoggi. Addressing the media, Donald Trump has said that Saudi Arabia has agreed to invest $600 billion in the United States, and Saudi Arabia was being designated as a major non-NATO ally.
I want to thank you because you've agreed to invest $600 billion into the United States. And because he's my friend, he might make it $1 trillion, but I'm going to have to work on him. But It's 600. We can count on 600 billion, but that number could go up a little bit higher. Yes, sir. I don't know. We'll see. But we appreciate it very much. So Saudi is going to be investing at least $600 billion, and that means investments in plants, in companies, money on Wall Street, and what it really means for everybody that really counts is jobs, a lot of jobs. Tonight, I'm pleased to announce that we're taking our military cooperation to even greater heights by formally designating Saudi Arabia as a major non-NATO ally, which is something that is very important to them. And I'm just telling you now for the first time because I wanted to keep a little secret for tonight. I just heard him say, oh, that's nice. That's another point you won today. And signing a historic strategic defense agreement, which we just signed a little while ago. So congratulations. It's our great honor.
And continuing with other updates, the U.S. House of Representatives passed the bill on Epstein files with a 427-1 vote, sending it to the U.S. Senate, which unanimously agreed to pass the bill and now will go to President Trump for his signature. The development comes as survivors of Epstein abuse have spent months at the Capitol Hill demanding the release of files. The bill now heads to President Trump for his approval. Okay, on that note, we're going to slip into a very short break. On the other side, we'll come back with cues in the world of commodities. Stay tuned in for that. Welcome back to Power Breakfast on CNBC TV18. Now let's get to the updates in the world of commodities. And as always, we have Manisha Gupta joining us for that. Good morning, Manisha. Today, what's on the radar? Crude, gold, silver. What are we keeping an eye out on?
Well, I'll start with the crude oil prices because we've seen 1% of gain in the overnight market. This is after traders are weighing impact of Western sanctions on Russian oil flows. The U.S. president also says that his administration is now interviewing for the next Fed chair. So a couple of these events really bringing in uncertainty into the markets and is the reason you've seen the prices gain up. Also, there's a report from Goldman Sachs which says that the crude prices could decline in 2026 because of higher supplies, but the prices have a chance of going to $70 but that is only in the instance if Russian output falls. In the precious and the base metal prices, well, everything really seems to be going down on profit taking. One, because the US dollar continues to be stronger. Second, there are waning chances of a December rate cut now. What the markets are now waiting for is the US non-farm payroll data that comes in tomorrow. That perhaps is going to be an important data event to watch out for ahead of the US Fed meeting on December 10 and 11.
Okay, Manisha. Thank you so much for that. Surely we'll be keeping an eye out on crude as well as gold prices from where they will be headed from here on. But now let's move on. And in a defining moment in the world of art, a headlining artwork by Gustav Klimt, portrait of Elizabeth Lederer, became the second most expensive painting sold for an auction for a whopping $236.4 million, which is way past the estimate of $150 million. Okay, and with that, we are absolutely out of time on this edition of Power Breakfast. Nifty implied open indicating a bit of a muted start for the Indian market. So let's watch out for that. Just a 1-point uptick now. But up next, your Bazaar Morning Call to take you through all the market action and what we're expecting going forward.
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. Middle of the week, that wobble in US continues, especially on the back of the Magnificent Seven companies. Nasdaq is down once again. So that's, I think, the starting point at least. Markets here fared much better compared to the rest of the Asian region. And the question is, will that continue? That relative day-to-day outperformance continue? I'm Prashant. With me, my colleagues Surbi and Nigel. Guys, morning.
Hi, good morning, folks. Morning, Nigel. Morning, Prashant. I was a little disappointed. My whole theory about the India being the anti-AI trade, we didn't get the FPI follow-through. I would have been very happy seeing about 1,000 crores of buying in cash. Didn't get that, but we'll see. But by the way, folks, I mean, such sparks flying in the White House and the Oval Office, including Mr. Trump threatening to ban one of the US television networks. So plenty of masala out there.
Well, that's right. And I don't think you should be too disappointed because yesterday there were a lot of large trades. So maybe that FI buy number is due as well. We remain optimistic. And the globe partied all through the year. Maybe the year end belongs to India. I like to be optimistic.
Well, I think in markets you have to be optimistic, right? I mean, there's no point looking at... you've got to be careful, but you've got to stay optimistic. Things perhaps will get better as you go forward. Let's just take a quick look at where we stand, right, as we begin this fresh trading session. We'll start with US, right? So the color is red. US equities were lower and largely led by the technology sector. S&P 0.8% lower, NASDAQ 1.2%. By the way, these final closes were off the intraday lows, both on the S&P and the NASDAQ. And I just want to make one particular point. If you exclude, 4 out of the Magnificent Seven companies out of the picture, I mean, the cuts were about 0.2 to 0.3% on both the NASDAQ and the S&P. So that is essentially how dominant the reaction, price pressure from just 4 out of the 7, not even 7 companies, 4 was. Actually, almost 60% of the S&P companies, S&P 500 companies ended in the green. So, just look at the overall color. It was not as bad. So I think just to make that point as well. Now, NVIDIA was down 2%, another 2%. Amazon is down about ended about 4% lower. And of course, NVIDIA will report numbers post-market tonight. The big talking point about NVIDIA is, will Jensen Huang, the CEO, touch upon that $500 billion revenue guidance, whatever that number which has been spoken about from the data center business. So, I think a fair bit of focus around that. Now, in AI, deals continue. Microsoft and NVIDIA. I mean, just look at this, right? Microsoft and NVIDIA are the biggest backers of OpenAI. Who is the biggest challenger of OpenAI? Anthropic. Microsoft and NVIDIA are committing to invest a combined $15 billion, 10 from NVIDIA, 5 from Microsoft, into Anthropic. And we've spoken about many of these circular deals, and this is one more, because Anthropic is saying that they're going to buy about $30 billion worth of compute capacity from Microsoft's Azure cloud service. Interesting times. Again, on the with regards to AI and product launches, Google launched Gemini 3 overnight, and it looks like it's kind of topping AI performance charts across the board. Lots of conversation chatted around it. Yesterday, while we were trading, most of the crypto coins were all down between 4-5%. Bitcoin was down 5%. And I think it briefly fell below 90,000 levels, but it's come back above. I mean, using Bitcoin for nothing more than just another indicator of what risk sentiment is looking like. It's, of course, pulled back quite a bit from the highs. Macro markets largely quiet. The 10-year lost about 2 basis points. Oil prices up, but up very, very little, 1%. So just under $65 a barrel is where we're at. Just to tie in the levels, I'm just looking at supports here. 20-day both for the Nifty and the Nifty Bank, as we've highlighted. Those numbers have moved a bit. 25,808 is the support for the Nifty, which is the 20-day. The Nifty Bank support is 58,137, again, which is the 20-day moving average for both. On the upside, I mean, the swing highs and the highs for the last 4-5 days, I think those numbers are pretty clear. But the market knows what it has to do. 26,100 is that upper end of the range of the Nifty we put out. So iron supports as we start this session. GIFT Nifty will give you a quick sense of how we likely to start. It's about 20 odd points high. Remember, yesterday was much more quieter as compared to Monday or even Friday for that matter, in terms of broader market and the breadth of the activity, etc. So we'll see if we get a repeat of that or something else. Tonight, after US market closes, when NVIDIA will report, and that's being kind of seen at least as a bit of a pivotal moment for this shakeout and AI trade that we are seeing out there. But that's the big debate, really. It's not here in India, it's outside India. Well, Nigel is now walked across with that F&O statistic and the positioning. Nigel, over to you.
Well, over the last 12 to 18 months, AI has dominated, all the news. It's dominated the earnings. It's taken a large chunk in terms of global indices as well. And now we are seeing some kind of give back from the big rally that we have seen. And it appears India is the anti-AI hedge. And I say that with some data points. The last 5 trading sessions, actually, the Indian markets in dollar terms have outperformed some of these AI-heavy markets, which have done much, much better than India. So the last 5 trading sessions, actually, India's been an outperformer. Can we outperform towards the end of this year? That's the hope. And in fact, I remain optimistic on that front as well. Moving to yesterday's trading session, yes, we ended down. And yes, we outperformed as well the other Asian markets. But I'll tell you what, bulk of that fall came in the final 30 to around 45 minutes, which is telling you the weekly expiry factor did play out. That's why I'm not so worried with regard to the fall that we saw yesterday. If we start off a little bit soft today, we could see a good rebound in today's trading session itself, provided the lower levels do get protected. The FI as well, not too much positioning is what we saw in terms of change in open interest. But if you're looking at the Nifty as well as the Nifty Bank, well, there was unwinding of long positions that we saw on both these two indices. And the FI, since not much moved in the index futures, well, they continue at around 12% long positioning and 88% short positioning. Moving to the absolute terms as well, yes, there are opposite ends of the spectrum, and that's been the case, the FIs as well as the clients. Clients net long, FIs net short. Moving to the options data, this is now for the next series. That's the coming Tuesday as well. You have the 26,000 call. Good amount of open interest build up, and we've seen constant addition at around this 26,000 call or thereabouts. So the call writers, they believe higher levels are going to get protected. However, on the downside as well, the 25,900 put, you saw a good amount of open interest built up, which brings us to the levels itself. So on the upside, the 26,100, 26,150 will be the resistance mark that the bears will look to defend. However, the bulls, they'll fancy their chances that this 25,750 mark could actually be a good entry point. Because the 20 DMA is in that vicinity of around 25,800 or thereabouts. So that's a crucial support. Don't rule out a bounce from the lows in today's trading session. And if that has to happen, then the Nifty Bank, it outperformed yesterday. It's been the index really to go to, and the bulls have been turning to that till the 20 DMA is protected, which is a good 1,000 points or 850 points away from current levels. You'll fancy your chances that this is the one that's going to take the bulls higher. So we'll keep an eye out on that as well. Starting off, I think, a little bit softish or flattish, but going by yesterday's close, maybe some bit of a pullback, and an outperformance could continue for India.
Yeah, perhaps, that can actually happen because Asian markets have stabilized. They had their share of the fall yesterday. Major markets like Japan were down over 3%, Kospi was down 3%. So today, this morning, it's a day of recovery across most of Asia, including markets like Hong Kong and Taiwan for the time being. So let's see if this recovery can last and whether we will be on the upside. Let's pull up the implied open and what it's indicating right now. So yes, more in sync with our neighborhood, 20 points up. That's the indicative start now. Well, before we introduce our first guest on the show, let's tell you about all the latest happenings at the White House. And these are important developments when you talk about geopolitics. Saudi Crown Prince Mohammed bin Salman received a very warm welcome at the White House. President Trump greeted him with a ceremony that featured marching bands, flag-carrying horsemen, and a military flyover as well. The visit emphasizes deepening ties between Riyadh and Washington. This is the Saudi prince's first visit to the U.S. since the 2018 murder of journalist Jamal Khashoggi. Now, addressing the media, Trump said that Saudi Arabia has agreed to invest $600 billion in the U.S. In fact, he's saying that this amount can go up to $1 trillion. And Saudi Arabia has also been designated as a major non-NATO ally. So interesting. And then, of course, lots of interesting exchanges with reporters at the White House. Plenty of sparks flying out there. So let's just hear out the U.S. president describing the relations with Riyadh.
Thank you, because you've agreed to invest $600 billion into the United States. And because he's my friend, he might make it $1 trillion, but I'm going to have to work on him. But it's 600. We can count on 600 billion, but that number could go up a little bit higher. Yes, sir. I don't know. We'll see. but we appreciate it very much. So Saudi is going to be investing at least $600 billion, and that means investments in plants, in companies, money on Wall Street, and what it really means for everybody that really counts is jobs, a lot of jobs. Tonight, I'm pleased to announce that we're taking our military cooperation to even greater heights by formally designating Saudi Arabia as a major non-NATO ally, which is something that is very important to them. And I'm just telling you now for the first time because I wanted to keep a little secret for tonight. I just heard him say, "Oh, that's nice." That's another point you won today. And signing a historic strategic defense agreement, which we just signed a little while ago. So congratulations, it's South Carolina.
Okay, so it's all smiles and hugs out there. Meanwhile, Donald Trump also said that he was speaking with various people about the Federal Reserve chairman's job and had some unexpected candidates on the list of those who might replace Jerome Powell. Take a look.
You started the interviews for the Fed chair?
Yes.
Who have you interviewed?
I think I already know my choice.
Who is it?
Well, I liked him, but he's not going to take the job. He refused. You like Treasury better, right?
Much better, sir.
So we are talking to various people. And, I mean, frankly, I'd love to get the guy currently in there out right now.
Okay, so it was an action-packed day at the White House for sure yesterday at the Oval Office. Well, let's move on and get back to markets now. We have emerging markets commentator Jeffrey Dennis with us this morning. Mr. Dennis, thanks so much. Always a pleasure having you on the show. So, from our perspective here, while we watch all these parlays that the US is having with other countries, we just want to understand when this deal gets done, because both sides have been talking in a reconciliatory tone, but we are yet to see any specifics. What's your sense on how this is progressing and whether investors can actually look forward to that deal getting done?
With respect to India, I assume you mean, right?
Yes, India and the US, the trade agreement, and knocking off that 50% tariff.
It's difficult for India or getting a deal between the US and India because, of course, of these agricultural sectors that India does not want to open up fully to US exports. And I think that's probably the biggest hurdle that we've got. But ultimately, I think, as with so many other countries, I think a deal will be done. It just, I think it's going to be slightly more complicated than some others because obviously agriculture is massively important to the Indian economy by definition. And there are certain sectors that are not exactly closed to foreigners, but there are tariffs on those. And I think the Indian government is rather reluctant to open up those sectors to free competition. And so I think that's the big stumbling block. But I would be surprised if we don't get a deal in the next month or two.
Yeah, no, absolutely. And we'd be surprised too, Jeffrey, if something doesn't come through. And of course, I mean, the actual rates also will matter, right? I mean, markets are saying, well, anything between 16 and 18% effective perhaps works, but anything over 20 is going to be not great news because, I mean, that puts India at a disadvantage relative to others. So, yeah, I mean, we'll see what happens. The big question of our times, Jeffrey, of course, is what's happening in the US, right? NASDAQ is down 7% from its recent highs. And the question is really whether this is a technical shake-off or this is a real rethink in terms of, investor confidence and owning the AI trade. What do you think?
I think it's a partial move down. I don't think it's a massive correction. I certainly don't think it's a February, March 2000 situation. The companies that are under pressure now are in much, much better shape than the companies were at the peak of the dot-com collapse, or the dot-com bubble, I should say. And there are a number of supports here still for markets. I mean, earnings growth has been good. Bond yields are staying pretty stable. The dollar's been pretty stable. And I think that although there are concerns, obviously, about the amount of investment these companies are doing, particularly in data centers, et cetera, and there's all this concern about individual companies investing in other companies who then invest in other companies, et cetera, making this sort of circular investment process, which bothers people a little bit. But at the end of the day, I don't see this as being a major pullback. I think we're probably short-term somewhere near the bottom, probably quite healthy. And I think markets will stabilize in the next few days. We'll probably have a good run up to the end of the year.
All right, Jeffrey, good to see you. And as always, and you have maintained that on the longer term basis, India is the market to go to. But those FI flows, they are missing. A lot of investors like the India story, but they're not showing us the money. The holding of FIs here in the Indian markets is at multi-year lows. Do you think it's time that we gradually see some of that FI money coming back? Because some of these AI-related trades, they're getting a little bit expensive, little over-owned as well. India fundamentally should start looking better as earnings come back. Do you think we should be prepared for the FIs to come back?
I think so. I mean, this is a conversation we've obviously had before, and it's something I've been thinking for quite some time. Now, I think one of the interesting things about what's going on here recently is China's pulled back certainly more than India has done. There are continuing doubts, of course, about the Chinese economy in large chunks of the Chinese economy, in particular, the lack of consumer spending growth in relative terms in the property sector. You've now got this spat between China and Japan as well. So I think some of the heat is coming out a little bit of the Chinese market. That's going to pull money back towards India ultimately. And as you've said already at the start of the program here, in this pullback we've seen in global markets, driven above all by the US, India's been a relative outperformer. Now, you don't get these flows suddenly turning around in over just 3 or 4 days. You probably need to see a period of outperformance here to really drag some of these foreigners back in. But I think this would be exactly the wrong time to get too negative at India. I think there's so much good going on in India. The economy looks in decent shape. The inflation numbers, albeit I'm sure for temporary reasons, partly the food price story, is in tremendous shape, and that possibly gives the RBI the chance to reduce interest rates, etc. You've got some simplification on the tax side. So I do think it's a matter of time potentially, but I wonder what's going to help here is if the China bubble itself starts to blow itself out to a certain extent, and that will, I think, encourage investors back to India. On a 3 to 6 month view, I would much prefer to be in India at this point now than in China.
Great.
All right, Jeffrey, we'll leave it there. Thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC-TV18. Well, these are the interactions which are lined up here on the program over the next 2.5 hours. 8:35, we have the management of Gulf Oil Lubricants to discuss their FY27 outlook. We'll have Kumar Rakesh of BNP, and we'll talk about the hike in cost for renewal and the fitness certificate for older vehicles, and whether that will have a meaningful impact on new auto demand. Conrad Saldana of New Berger Berman will be with us on markets at 9:20, 9:35. The management of Vinity Organics joins in to break up their September quarter earnings. Vishal Kampani of JM Financial will be speaking with us at 9:45 from the sidelines of the JM conference. And towards the end of the program, Lata in conversation with Neeraj Gambhir of Axis Bank and Anubhuti Sahai of Standard Chartered, the impact of October trade deficit data on the rupee and macros. Well, time for a quick break. Our research team is standing by on the other side. Top stocks to watch out for coming up.
Welcome back. So as we've been telling you, Asia is actually looking better than how we had the Wall Street finish yesterday, because Asia had its share of drubbing yesterday on Tuesday itself. So today there's a bit of a recovery in some of these markets. Now, how long it lasts, we'll have to see. For the time being, markets like Korea, markets like Japan, all of them are flashing green, as is the Hang Seng. The implied open suggests we'll have a quiet start on the upside, but the critical question is, can the bulls really take out the zone of 26,000 to 26,100? That's where they've been getting stuck repeatedly. Well, there are several stocks in the news today, so let's hop across to Vinny for all the action. Good morning, Vinny.
Hi, good morning. So firstly, we'll start with TCS. Why? Because they've received a 5-year NHS supply deal to modernize their IT services. So obviously, this deal is positive for them. What TCS will be doing, they'll be deploying AI-enabled solutions that will help NHS supply better in terms of operational efficiency, as well as improvement in terms of its IT systems as well. Next one, we'll keep an eye out on Punjab National Bank as well as Bank of Baroda. We're expecting green here for both of them. Moody's has upgraded Punjab National Bank's baseline credit assessment and adjusted baseline credit assessment by a notch up. So that is why positive for PNB and positive for Bank of Baroda, because Moody has affirmed the Bank of Baroda's Baa3 rating and upgraded the baseline credit assessment rating to a Ba1 from a Ba2 previously. So that is why positive here. Azad Engineering, green expected here as well. They've signed an agreement with Pratt & Whitney Canada Corporation for development and manufacturing of aircraft engines. This is a long-term contract. They've not mentioned the amount or even the time period of the contract, except they've said long-term contract. So we'll keep an eye out on this one. KEC International, we are expecting red here after the company has been barred by Power Grid from tenders for 9 months. That means that they will not be participating in any tenders or receiving any contract awards starting from 18th of November. That was yesterday. So red is what we could see here. Lastly, Wari Energies, that's the one we'll keep an eye out on, as the Income Tax Department has conducted some visits at its offices and facilities. The company said that the proceedings are still underway and they're cooperating with the IT department, but we'll keep an eye out on what comes out of these searches. As of now, red is what we could expect on the screen for Wari Energies.
Okay, all right. Thanks a lot for that, Benny. Long list of stocks you're tracking. Let's hop across to Sudarshan. Sudarshan, we saw a lot of block deals. Tell us more.
So yesterday's block list data had some interesting names, and one thing was common. Some of the names had GQG as a buyer, and those companies include ITC, Adani Group companies, Bharti Airtel, JSW Energy, ICICI Bank, JSW Street, PFC, Sun Pharma, Lodha Developers, Patanjali Foods, all these companies. Now, was it a fresh buying? The answer is no. It was a transfer, and it was a transfer from Reliance Institutional Trust to GQG, because Reliance Trust is a trustee for collective investment trust, including those of GQG. So it's not a fresh buying done by GQG in those companies. Second block deal was in Emphasis. We know that promoter has sold shares of almost 4,300 crore. But major buyers in this block deal include Kotak Mahindra Mutual Fund, ICICI Prudential Mutual Fund, and HDFC Mutual Fund. Keynes Technology, Motilal Oswal Mutual Fund has sold shares worth nearly rupees 300 crore. And last one is Paytm, where SAF Mauritius and SAF Group have sold shares worth rupees 1,500 crore. And Society Generali has bought shares worth rupees 400 crore.
You know, the first one is interesting and important. So thanks for that. 6.5%, but you know, stock was up 6.5% yesterday. I mean, so just I don't know. Volumes were very, very large, but we'll have to see. Volumes, of course, explained, but why would the price jump is the question. But 104 now on GMR Airports at this point in time. Grow is the other one, and this is an interesting story which you know, we're going to get to you. So Hormuz is standing by with this one. Hormuz, take it away.
Good morning, Prashant. And Money Control reported about this yesterday, and they mentioned, of course, we have been speaking about Grow and the gravity-defying moves that it has been making. As of yesterday, the stock is up 90% from its IPO price. But during yesterday's trading session, as many as 30 lakh shares of Grow were pushed into the auction on the NSE. And analysts that Money Control spoke to are describing this quantity to be unusually large. Now, why did this happen? As there were several traders sellers who were betting on the fact that this post-listing rally that Groww has seen will eventually cool off and hence had shorted the stock. But contrary to their expectations, the stock kept moving higher, and when they could not complete the delivery process, the settlement, and therefore the shares got pushed into the auction. Now, what is this NSE auction window? Now, it generally takes place between 2:30 to 3 p.m. every day. Now, this is to address the situation where sellers who failed to adhere to the delivery of these shorted names, and they are only, of course, it needs to be specified that only shares that are in the demat account can be sold in this delivery window. Now, the price here also is restricted to 20% circuit from the previous closing price, but in case the auction fails, now here the exchange can close the position at a higher price and compensate the original buyer by giving them cash instead of giving them the share. So that is how the settlement is done if the auction fails. Here as well, Money Control spoke to analysts. They mentioned that even if shares are purchased through the auction window, the procurement cost is relatively the same, does not have any impact on the fundamentals of the company. It's just a technical process, and the stock will continue to react as per the market fundamentals. So as of now, that's Groww. Shares got pushed into the auction yesterday. The stock continues to move higher for 5 days in a row now.
Oh yes, absolutely. It's been a absolute rocket of a move. Gravity defying, Groww continuing to grow. Thanks for that, Horma's interesting story there. With that, let's turn our attention to the commodity markets. Manisha is here with the latest. Good morning, Manisha.
Thank you for that, Surbhi. Well, I'll start with the crude oil prices, where we've seen 1% of gains in the overnight markets. Well, a couple of things here. One, the markets are looking at Western sanctions on Russian outflows and the impact of that. The second is the U.S. president saying his administration is interviewing the next Fed chair. So there are some uncertainties cropping up because of that as well. Having said that, the Russian ports have resumed offloading. The U.S. inventories have continued to rise as well. And there's a Goldman Sachs report which says that the crude oil prices could continue to decline in 2020 as well because of higher supplies. The only event that the prices can rise to 70 is if the Russian output actually does not find market outside. I also want to talk about the base metal prices because we've seen constant declines onto this one. If you look at aluminum, that's trading at a 1-month low, zinc at a 1-month low as well. You have nickel trading at a 31-week low, copper at a 1-week low as well. So base metal prices, which had continued to gain in October and then in some point in November as well, finally seems to be getting in some profit taking.
Okay, all right, Manisha, thanks a lot for that. For the time being, let's hop across back to Sud. He's here to give us some brokerage calls of the day. Sud, busy morning as always.
So recently listed company LG Electronics has got the coverage. Two brokerages have initiated coverage. First one is Morgan Stanley. It has initiated coverage with overweight call, and target here is 1864. That implies an upside of almost 15% from current levels. It says company stands out in many categories in a competitive consumer durables market, and revenue and margin to be driven by new capacity, increasing exports and increasing B2B contribution, and believes that earnings will fall by 9% year on year in FY26 with 16% earnings CAGR that it expects over FY26-28. Next one, JP Morgan. It has initiated coverage with overweight as well, and here target is 1920, implying an upside of almost 19%. It says it's an attractive play on rising consumer discretionary expenditure in India and offers best-in-class superior execution, and it sees gradual improvement in growth trajectory enabled by macro tailwinds. As far as expectations are concerned, it sees revenue and EPS CAGR of 12%, 21% respectively over FY26-28. Now another comes from auto sector, that is Hero MotoCorp, which has outperformed in Q2 FY26 as far as earnings are concerned. JP Morgan has upgraded the stock to overweight, and target is increased to 6,850. And this upgrade was driven by several factors. First one, market share stabilization after several years of losses. Second, improving outlook due to launches and judicious inventory management. Second, recent GST cuts have revived bottom half of this segment. Fourth, improving EV market share that company has seen. And last one is potential for a narrowing of the valuation discount that Hero MotoCorp faces against peers. Another, Deepak Fertilizer, MK, has initiated coverage with a buy, and target here is 2,000 rupees per share. It says company is a leader in mining and industrial chemicals, and it has plans to move from commodities to specialty offerings, and capacity expansion will help company to increase its EBITDA by almost 50% over FY26-28. Also, company is planning starting to restructure its businesses and to demerge some of the businesses over the next 2 to 3 years, and that will also aid value to the company.
All right. Thanks very much for that. So appreciate it. So keep an eye. More coming up in terms of brokerage calls as we go along. We'll take a quick commercial break here. Gulf Oil Lubricants, as promised, is the first corporate on the program. You'll hear from Manish Gangwal in just a bit.
Welcome back. You're tuned in to Bazaar Morning Call on CNBC-TV18. As promised, let's invite our first management. We have Gulf Oil Lubricants. That's the first management on the show. Remember, they reported a strong set of numbers in Q2. Volume growth came in at around 15%. In fact, their EV charging subsidiary, Tyrex, the revenue out there surged more than 70%, came in at ballpark around 40 crores. To discuss this and how's the outlook for the second half of the year, we have Manish Gangwal, the Chief Financial Officer at Gulf Oil Lubricants, who joins in. Hi, Manish. Good morning. Good to see you in as always. Well, let's talk a little bit about the past quarter's numbers. 15% volume growth, that's good. Revenue growth, however, was only around 12%. What's the reason for that? Was there some kind of pricing pressure? If you could help us out with that, pricing pressure in the past quarter. And what is the volume growth for the year? And also on margins, it was impacted due to the rupee depreciation. What's the margin guidance for the year? Volumes, pricing, and margins. Go ahead.
Good morning, Prashant. Always pleasure talking to you and Nigel. So our overall core lubricant volume growth has been, 9.5%. And compared, there is a category called AdBlue that grew 24%. So overall, you are looking at a number of 15%. But AdBlue is a lower price, more of a commodity item. So our core lubricant is what is really comparable, and that's 9.5%. Against that, we have grown our revenues by nearly 13%. So there is an improvement in the product mix, and there is an improvement in the realization, leading to a 13% revenue growth on a 9.5% volume growth.
Oh.
So that's the right comparison from volume and revenue perspective. And of course, coming to your second part of margins, crude was very stable during the quarter, but foreign exchange, the rupee depreciated sharply in the quarter July to September, and that too led to an increase in the input cost, blended input cost. Please remember, we import nearly 70% of our raw materials, and that's why there was some pressure on the margin side. We have taken pricing calls selectively in certain segments and try to pass on. But there is some, time lag between when you realize fully the price increases. So overall, from margin perspective, rupee played slightly negative on the margins. But overall, on volume side, fantastic double-digit growth, and revenue growth was also quite double-digit.
So you're saying that, for the year, we should be working with mid-teens volume growth. Would that be fair? And margins holding at around this 12-13% mark?
So typically, we grow 2 to 3 years the industry. Industry of lubricant grows 3 to 4%. And we have been growing double-digit, near double-digit. So our core lubricant growth, we continue to maintain that we should end the year at double-digit volume growth.
Okay.
And AdBlue, of course, is a factor which is we are also trying to grow nearly 10 to 15%. So on volume side, yes, double-digit volume and revenue growth.
But double-digit, sir, double-digit when you say, some more color. I mean, are we talking about the high teens, or is it going to be closer to the, 10-11% mark? What's the sense on volume growth and then overall revenue growth as well? Because this quarter, what the issue was that your volumes were growing, but the revenue growth was not, in the same clip. So what should we expect for H2?
So as I explained, Bharti, our volume growth was 9.5% in core lubricant. And we grew our revenue by 13%, which was higher than the volume growth. And overall, we believe that since the industry is growing 3% to 4%, and we grow usually 2 to 3x, we maintain around, high single digit to 10 to 12% volume growth for the year. That's what our projection is for the full year.
Got it. All right. Let's focus on another smaller part of your business, which is growing very, very well. Tyrex. What's the revenue guidance for the year? If you could give us a ballpark number. I think for the first half of the year, you've already done close to around 68 crores in terms of top line. Last quarter was good, 40 crores or thereabouts. For the year, what do you aim at doing? And is it profitable?
Sorry.
Tyrex.
No,
Question on Tyrex.
Yeah, on Tyrex, you see, we have grown 75% in H1 on the revenue side. So H1 revenue was 42 crores. And last year we had closed the year at 80 crores. It's a very fast growing segment. We have acquired this company, Tyrex Transmission, which is based out of Ahmedabad. We increased our stake actually during the quarter, and we have completed that transaction. Now we hold 65% in Tyrex. And we believe that this company is poised for a very fast growth. And of course, for the year, we are aiming to cross above 100 crore in terms of revenue for sure. But on a near medium term basis, we believe that this company can touch 300 to 400 crore revenue in next 3 to 4 years.
3 to 400 crores. And will you go ahead and increase stake? I think you mentioned it's 65%. Will you want to go the entire hog and, buy the entire 100%?
See, we have all the offer clauses, but founders are running the company. They have been, instrumental in technology, and they have made this company where it is. So we are continuing to work with them, but we have all the clauses at appropriate time to exercise.
Mr. Gangwal, hi. Morning, Prashant here. Just lubricants and the business of AI and data centers has been this talking point. I remember having this conversation with Mr. Chawla, and he had indicated that you're working on, I guess, 2 products, right, for data center cooling, and as an opportunity size. Any update there? Is something happening? Because of course things there are moving so rapidly. The spends are mind-boggling. So in terms of cooling, of course, is an important constituent of all of this. So any update you can share with us?
No, so I think you're right. We have 2 products already in the pipeline, and we are looking for a POC to be done on those. You see, we have been of the opinion always that data center, while it's an interesting segment going forward, but from the size of the market perspective, it is going to be less than 1 to 2% of the total lubricant market, even at its peak, when every data center is liquid cooled as against air cooled, which is a very unlikely scenario. The overall volume impact is going to be very, very minimum from the industry perspective. But yes, this is a futuristic product, and we are looking for a POC. India, as per our understanding currently, is not moving very rapidly in terms of liquid cooling data centers. But yes, there is a perspective for future, which we are already trying to, get the POC done at 1 or 2 places.
Okay, proof of concept, basically, right? So 2 products and got that. But fair enough. We'll leave it there and wish you all the best of luck. But good conversation, Mr. Gangwal. Thank you very much for joining us here on CNBC-TV18. So that's the overall picture with regards to Gulf Oil Lubricants. We'll take a quick commercial break here. Devin Choksi of DR Choksi FinServ with some fundamental conversation, specific stocks, etc. in focus. Welcome back. I think, 15 minutes to go for the pre-open session to kick off. Hormuz is here with the big movers, which we saw yesterday, volumes, etc., behind the price action itself. Hormuz, take it away. Morning.
Morning, Prashant. And the focus, the spotlight has been on these new listings, and you'll put the spotlight on them. There was Physics Wala listed yesterday, so of course the trading volumes were on the higher side. Almost 28 crore shares were traded, and a third of that, almost 8.5 crore shares were marked for delivery on their trading debut for Physics Wala. But as we were mentioning yesterday as well, for the other names like Grove or Lenskart, even if the trading volumes are higher, the delivery percentage is significantly lower, and that possibly also explains why shares of Grove were in the auction yesterday. Grove had almost 50 crore shares traded yesterday, almost 6 crore shares marked for delivery. Lenskart too, close to 70 lakh shares were traded, only 15 lakh of those were marked for delivery, and Urban Company too, close to 1 crore shares were traded, 35 lakh of those were marked for delivery. Now, Sequent Scientific was the other mover yesterday among the top gainers on the small cap index. It has gained in 6 out of the last 7 sessions, which has moved almost 15% during this period. The volumes yesterday were the highest since September of last year. But if you look at the trading activity during the 7-day streak that Sequent Scientific has had, the average daily traded volume is almost 35 lakh during the 7-day period. Compare that to the prior 3 months, that volume is only 10 lakh shares. And yesterday, close to 91 lakh shares were traded. The 20-day average is only 15 lakh, and 30 lakh shares of those, was 1/3 of the traded volume, was marked for delivery compared to the 20-day average of just 7 lakh shares. Keynes Technologies were under pressure yesterday after the lock-in period came to an end. Volumes yesterday were the highest in 4 months. Almost 32 lakh shares were traded. 20-day average is only 4.5 lakh, and 12.5 lakh shares were marked for delivery. Here too, the 20-day average is only 1.5 lakh, and the stock has corrected significantly, also 25% now lower than its 52-week high. And lastly, Ugro Capital is a third straight day of gains yesterday. We spoke about this during closing. Volumes yesterday were the highest since July of 23, and yesterday's volumes were the sum total of the last 30 sessions put together, with 72 lakh shares traded. The 20-day average is only 1.5 lakh, and here almost 32 lakh shares were marked for delivery. The 20-day average here is less than 1 lakh. So gaining on substantial volumes yesterday was Ugro Capital.
Okay, all right. So we'll keep a lot of these names in mind as well. Thank you very much for that, Hormuz, for all the trading details. We're just about 15 minutes away from getting our pre-open rates. And the indication is that, like Asia, we'll probably have a soft start, a muted start. Oh, some of the Asian markets have actually changed color. Let me see the others as well, if that's true for markets like South Korea and Japan, because they all were bucking the weak trend otherwise. Japan's still up, but yeah, the Hong Kong market has turned negative. So let's see if we can continue our momentum, because the market managed to buck the overall weakness yesterday. But no, even the implied open has turned slightly negative now. So we'll talk more about this with our technical experts as we go forward. I think we have them actually. Yeah, we have them with us. So good time to bring in Sudarshan Sakhani as well as Mitesh Thakkar. Gentlemen, great to have you on. Good morning to both of you. Sudarshan, how would you read into this? The fact that we didn't fall as much as the other Asian markets, does it indicate strength? So are you a buyer on dips, or is the market, till there's clarity, is the market, at least at the index level, are we in a no-trade zone?
Good morning. No, I'm a buyer on dips. There are two facts. One is, of course, that we were outperforming, relative outperformance of the other markets as compared to the other markets. And the second is that this is a seasonally bullish period for India, November and December. And we are coming out of a 6-month consolidation. You know, once this breakout of a 6-month consolidation happens, the market could go up like a rocket. I mean, it's all possibilities. But I'm upbeat, and the dip is a buy.
Okay, all right. Dip is the buy. Got that, Sudarshan. Mitesh, what about you? What do you believe? The Indian markets, you know, I just put out some data. In the last 5 sessions, India has actually outperformed, which is a bit of a rarity. In dollar terms as well, we're mildly higher, while a lot of our Asian counterparts, they're actually down 3 to 5%. You think we can outperform from here as well?
We can outperform, yes, but you know, the reason could be the fact that the rest of the global markets could decline, and India could, you know, possibly consolidate. My belief is that the Nifty, you know, might be forming a range, and these are early signs, but I think it looks a strong possibility. 26,100 to about 25,750 broadly, give and take a few points, I think is the range which the indices might, which the Nifty index might enter. The Bank Nifty is still looking good and strong, and as long as it's above 58,600, 500 zones, I would be positive over there. So in that sense, a worry of a breakdown may not happen, and that's why we might actually, kind of end up outperforming the rest of Asia or maybe the rest of the world.
Okay, so that's at the index level. Let's talk stocks as well. Mitesh, morning to you. What's on your list today?
Yeah. On the list, I have a mix of buys and sells. I have two buys to about two sell calls. On the buying side is Bharti Airtel. It's been making it's been making new highs, and the stock remains very strong in terms of outperformance to the other stocks as well. So buy here with a stop at 21.29 for a near-term target of 21.90. After a long time, Siemens comes on the buying side. It had a breakout day before yesterday. Yesterday was good kind of continuation signals. The indicators are positive. So buy with a stop below 3,200 for targets of 3,350. Couple of sell calls. DLF is a sell with a stop at 763 for targets of 725. And Bajaj Finserv is a sell with a stop at 2067 for targets of 2015.
Okay, got that. Thanks for that, Mitesh. Sudarshan, what about you?
Well, I continue to have an all-buy list. AU Bank is a buy with a stop under 905. JSL is a buying opportunity with a stop under 735. Voltas, which comes in my list after a long time, is a buy with a stop under 1360. And ICICI General Insurance, ICICI GI, is the last buying opportunity in my list that is last. 1990 is the stop loss. I would prefer to be on the long side in this market.
Okay, all right, got that. Gentlemen, thanks very much. We'll come back to you for some final trading calls a little closer to market opening. Right now, a break. And when we come back, we'll of course have the pre-opening rates. We'll also connect with Kumar Rakesh of BNP Paribas. The government has hiked vehicle fitness test fees for all vehicles. So we'll try and figure out what that means, if anything, if it can add as a bit of a kicker to auto demand growth. Also, Deven Choksi is going to be joining in.
Okay, well, I think you got about 5 minutes to go for the pre-open session to kick off at this point in time. Devin Choksi is with us, Managing Director at DR Choksi FinServe. Devin, good to have you with us here. Thank you very much for joining us. What kind of activity at your desks have you been seeing on Grow, if you've kind of seen any kind of activity? Money Control put that story out that a lot of people tried to short it initially as soon as it listed because it had run up in cash. I guess couldn't cover during the day, and then those shares have gone into auction. So maybe that also perhaps responsible for some amount of short squeeze. Float, of course, is limited in any case. But just your thoughts here, Devin.
Yes, Prashant. Good morning. I think largely due to what you explained, I think technical reasons, I think for which I think the stock pricing is on fire. Some of the funds definitely, I think, are keeping a good amount of space for adding some of the consumer tech companies, fintech companies, ad tech companies within that. I think they try and create that particular portfolio for themselves. And that's a reason for which initial demand post-listing started coming in. To my mind, I think the valuation-wise, everything is in price. Even if you look at last year's profit, and even if you have to assume that I think this year it will be double from what it was last year, which is about 3,500 crore. On a market cap of around close to 110,000 crore, I think you're talking about already 3.25% kind of a yield, I think, that you get on this kind of a profit. So frankly, I believe that everything is in price. It's a costly affair right now at this point of time. Maybe short squeeze related issues as the channel has reported, I believe that I think could possibly subside at some point of time. One will have to wait and see how the valuation plays fair. Then only I think one can look at such businesses from adding into the portfolio.
Okay, all right. Point well taken, Devin. And, I think there is that float issue as well. You have a large amount, close to 59-60% is with institutions, promoters at around 28%. So you have 90% between them. And from the public holding as well, there is, some part of that, which is, again, you have the unclaimed shares, which are another 5.6%. So effectively, there is only 4 to 5% shares that are in the open market. So float is limited. That could be another factor at play. That said, let's talk about a few more companies then, Devin. KEC. That could be the stock in focus because late last night at around 10 p.m., they put out on the exchanges that, they're not going to be able to, they're barred from new power grid projects for a span of around 9 months. Now, the current order book doesn't get impacted, but the street will be a little bit cautious because of this barring for the next 9 months with regard to power grid contracts. And back of the envelope calculation suggests that maybe, in fact, T&D is approximately 60% of their order book. And 50% of that is domestic. And a large part of the domestic part could be coming in from power grid. That's in the order book that is not affected. But this will be a sentimental hit. What would you do? Would you look to buy the stock if it opens up weak?
Good morning, Nigel. Well, not too sure immediately because we haven't done the impact analysis of, I think, how exactly is going to play out. And neither we have, I think, followed the sentiments at this point of time. So we'll probably wait before, I think, making any call or taking any call like this.
Okay. All right. Got that. Let's focus on a couple of other names then. Let's talk about the auto pack. Some of those auto ancillaries actually have started doing very, very well. I was looking at a chart of FIAM, that's done well. LG Balakrishna has done well. Beg your pardon on that one. You have Lumax as well, that's done very, very well. Madison, they came on the channel and they sounded very optimistic. Anything you like from the auto ancillaries pack?
Yes, I think this is the pack, I think, which probably would look relatively more stable going forward as well. Because on commercial vehicle side also, the new demand getting generated. On the passenger vehicle side, of course, I think with a higher amount of money in hands of people with a lower cost of interest, I think you're seeing a good demand coming in as well for passenger vehicles. And ancillaries are right in place. Some of the ancillaries which are basically also applying into the electric vehicle space where probably I think either in the space I think where ADAS is operated or where infotainment is operated, companies are coming up with the newer product lines and that could possibly be a larger one. Because I think today in any vehicle, 45 to 55% kind of a value comes out of the electronics. And some of these companies like Minda Corp, Minda, those companies they have I think a significant amount of new product development in their R&D. which probably suggests that they are looking relatively good from the long-term perspective, of course, but I think in near term also playing a very solid role with some of the OEMs. So we like few companies from investment perspective. The tailwind is very, very strong as far as this business is concerned.
Absolutely. Devin, any thoughts on LG Electronics with the recent listing? It's gone sideways post-listing. Two initiations with slightly higher price targets. I think this Morgan and one more. Any thoughts here?
So we love the company, the kind of distribution reach that they have created, the product line that they have, and the backward integration that they are putting in. Definitely suggests that the business is going to possibly produce better profit than before, and a sizably good one. But the fact remains that everything is in price. Today, the valuations are not suggesting that one should get immediately into it. Maybe post-listing, many companies, they find the institutional investors in order to fill up their books. They buy at a higher valuation. And that's where probably I think you're not getting them cheap. In my viewpoint, I think it's worth waiting for some time before adding a fresh into the portfolio. Not expecting, I think, major or sharp correction, but even if I think the market gives you a sideways some time correction, and with some price correction of around 10% or so, could be once again becoming a good case to add into the portfolio.
Okay, all right. Devendra, yesterday we saw a lot of large trades. Keynes Technology was down 5%. There was a lock-in that opened up. Motilal Oswal went ahead and sold. You had Paytm as well that was under some pressure because there was a large trade that took place out there. And Emphasis as well was another one. So, you know, sometimes once these large trades get out of the way, the stock continues to move according to the fundamentals. Any of these three you like? All three of them were under pressure yesterday, whether it was Emphasis, whether it was, Paytm, or even Keynes Technology.
Not really, I think, Nigel, because as we see, most of the portfolios are getting reshuffled. Some of the tech companies which I'm mentioning, likes of Paytm, I think those companies are basically being shifted out of the portfolio by some of the fund investors and are getting into some of the other ones, like newly listed ones like Grow and other stuff. So frankly, I think it's a portfolio shift which is happening. And as you rightly observed, I think the post-listing scenario now, when some of the market investor goes out, you see the earnings coming back onto the real terms, that is on the core strength of the fundamentals. Today, I think the market technicals are getting out of the way from as far as these companies are concerned. So as far as I think I am concerned, I think let the price acceleration take place in some of these counters, after which I think one can relatively look at them afresh as far as business is concerned. Business model may be good, but the valuation probably needs to come down to get rationalized. Then it is a better opportunity.
Devin, just two other sort of stocks, right? GMR Airports. There's Sudarshan was telling us that there is Intersay kind of, not Intersay, but basically transfer GQG's name showed up, but basically it's transferred from one fund to the other, one scheme to the other. So it's not fresh purchase in that sense. If you have any thoughts, stock was up sharply. GMR Airport over 100 rupees now. And if you look at Piramal Finance, I mean, after post the demerger, you know, from 1250 to wherever it is now, 1600 plus. Any thoughts here? 1700 plus. Devin.
So I think in general, we like, this particular business, airport business proposition becoming very, very strong. In fact, I think under the new Udaan scheme also, I think some of the smaller airports also attracting larger amount of traffic. I think that works very well. Likes of GMR and even Yada airports, I think they are basically correlating a significant large amount of passenger traffic and cash flow generating model as far as I think the infrastructure play we want to consider that as. In my viewpoint, I think the companies are relatively good. Not too sure whether I think they are worthy adding into the portfolio immediately. But yes, GMR looks, I think, relatively more decent than what it used to be. More stable, rather, I would call it, now to add into the portfolio.
Yeah, no, absolutely. Devin, thank you very much for joining us. Good speaking with you. And it's a pleasure speaking with you, as always. Now, the government has amended the Central Motor Vehicles rules and has increased the fee for fitness tests of vehicles across the country by up to 10 times, especially in the case of commercial vehicles. To discuss, this more and, of course, also get a bit of a check across the board. I mean, in terms of whether this GST fuel demand is, sustaining as we go into the second half of November and beyond is Kumar Rakesh, India analyst, auto and IT at BNP Paribas. Kumar, good to have you with us here. Good morning. Prashant this side. So the first part, which is this, the hike in fee to get a fitness certificate beyond 15 years, is it material and how do you see it?
Hi, good morning, Prashant, and thank you for having me on the show. So we have seen the scrappage policy being implemented for a few years now, but since it's a voluntary implementation, we haven't seen a dramatic increase in terms of scrappage or new vehicle demand since then. So this is hopefully helps in driving more of scrappage happening in the country and incrementally driving more positive demand for the new vehicle purchase. That being said, in the last few months, we have started seeing positive indication for the new demand to start coming in. We believe that we have largely crossed the trough of the commercial vehicle, at least the heavy commercial vehicle industry. We have started seeing diesel demand picking up. The freight rate has been holding up pretty well. There are multiple indicators which are indicating that we should start seeing improved demand in the coming months. Last month or two have been promising. The base is also relatively lower for the last financial year, and hence we should start seeing better volume growth for the heavy commercial vehicle. Light commercial vehicle benefits from the GST rate as well, and that is something also which has started seeing improved demand in the last few weeks. So both the segments of commercial vehicles should start seeing an improvement in demand from here on.
Kumar, hi. So, various governments, center and mostly center actually, I'm not so sure about states, but there have been policies to try and discourage use of vehicles for too long. Basically scrappage, right? The scrappage policy itself, and now the fitness certificate renewal is going to get that much more expensive. Do you think these end up being triggers for additional demand? And if yes, then this latest move that we've seen, do you think that could give somewhat of a small, fillip here or there?
So there are a couple of aspects to that. First is we still have pretty old vehicles on the road, BS3 vehicles as well on the road, which are really polluting. The emission standards of those vehicles to start with were pretty lenient. And now that these vehicles are 15, 20 years old, anyways, their emission would have significantly increased. And hence to control emission, it's a fair policy move to promote more people to move into the new emission vehicles. And these are of global standard in terms of emission and would hopefully help in reducing the emission overall. And that's why from a broader policy perspective, it seems like a move in the right direction. Would it help in driving new demand? I think that is consequential, not necessarily the key reason why these policy would be getting implemented. But definitely we would expect that to have a positive effect on demand because the average age of vehicles we have been seeing in the country continuously rising up. And that is definitely not positive for the new vehicle demand. And that as we start seeing some containment on the average age of vehicles increasing, new emission norm vehicles coming into the fleet, that should be positive for the new vehicle demand.
Okay, so let's boil it down to stocks. Now that we've seen the post-GST festive bump that's over and done, from here on, purely in terms of growth, on the PV side, first of all, which are the stocks that will outperform? Just throw in a word on Tata Motors PV. I mean, it was a total washout quarter, right? So painful for the local business, for JLR as well. For the local business for Tata Motors PV, is that a short-term phenomena, maybe one bad quarter, or are there bigger issues at play here?
So most of the auto companies' September quarter result didn't had any benefit of GST rate reduction, just a few weeks or so. So the bulk of the benefit will start showing up from the December quarter results onwards. And that is what the street and we would be focusing on, is that if there is a sustained recovery in demand, A, that is the first thing to watch out for. B, if there is a sustained recovery in demand, is that translating into better margin of these companies or not? Some of the companies have indicated that it should. The other companies usually do not speak about it. We would still be expecting them to start seeing a margin expansion. So that brings us down to that from stock perspective, what is already priced in and what is not. If you see many of the passenger vehicle stocks have done reasonably well post GST rate reduction, especially stocks like Maruti. But earnings upgrade has been only about 6 to 8% or in that ballpark. We think if there is a price elasticity of 1.5 to 2 times and there is margin expansion, the earnings upgrade should be about mid. So we think there is still more room left for earnings upgrade to play out. The catalyst for this would be the sustenance of the recent strong demand and margin expansion. And if those two things keep on playing out in the coming months and quarter result, we would expect more earnings upgrade. And if that is happening, we would expect a positive momentum on the valuation side as well, because there is a general shift towards consumption in the country. And auto within the consumption pack is one of the few places which is showing the strong growth, while the rest of the pack is largely an expectation. And hence, we would expect this sector to have a better valuation multiple as well.
Okay, all right. So passenger vehicles, particularly stocks like Maruti, you're saying maybe there are more upsides if we keep getting a re-rating on the earnings front. A little short on time, so we can't discuss the two-wheelers. We'll leave that for another day. Kumar, thanks very much for joining in. You have a great session going forward. Well, with that, let's quickly revisit the screen now that the pre-open session has settled and get back to our final trades. It's very flat, so quiet. Nifty is not doing anything at all for the time being. Just pull up KEC International. There's negative news flow around KEC because they have been barred from bidding for any future power grid contracts. This goes back to an issue, which came up to light about 7-8 months back, allegations of bribery. But anyway, it's for future contracts and not the current contracts that KEC is executing for power grid. That stock's down about 4.5%. Let's go to our experts for final trading area. Sudarshan, which stock?
It's AU Bank. Buy AU Bank with a stop under 905.
And Mitesh?
We'll go with a negative call on DLF, sell for targets of 715.
Okay. So, got that, gentlemen. Thanks very much. With that, let's get to Nimesh. A lot of interesting brokerage notes out today. Let's see which one Nimesh has picked out for us. So, which one is the standout brokerage call, Nimesh?
Hi, sir. Today's standout is on private bank names. An interesting report from UBS. They've today upgraded Axis Bank to a buy from neutral and a contrast sell call on IDFC First Bank. So, they've downgraded to sell now. Coming to Axis Bank first, UBS has today raised the target price on Axis Bank to 1,500 versus 1,300 earlier. They believe that the credit cost is on a gradual decline and easing pressure on liabilities is going to help support the loan growth. So UBS is expecting a loan growth of 14 to 15% for Axis Bank between FY26 to FY27, ROE of nearly 1.7% and ROE of almost 15% over FY26 to FY28. And they believe that valuation is quite reasonable at 1.5 times price to book on FY27. It's basically on a discount to all of the other private bank peers. And management has actually said that they expect a better second half. So expect a gradual recovery in earnings, and that will lead to a re-rating. That's the call from UBS and Axis Bank. Coming to IDFC First Bank, as I said, it looks like a contrast sell call from UBS. I haven't seen any sell call post they raised money a couple of quarters back. So a downgrade to a sell, target price cut to 75 from 80. And UBS says that the credit cost is likely to see a limited improvement because of the risk in the SME segment. In fact, valuation also wise, it's an expensive bet at 1.4 times on FY27 price to book. And they've cut the EPS estimates as well. So a bit of a contra sell call on IDFC First Bank, but a big upgrade on Axis Bank with target price raising now to 1,500.
Okay, all right. Nimesh, thank you very much for that. So interesting banking calls coming in from UBS. We'll keep those stocks on the radar. By the way, before we get to the open, so KEC is one stock you want to watch out for. The other is Wari Energies. And that's on the back of these so-called, questions from the IT department. I'm not calling it raids, but there was some back and forth and some questions raised by the income tax department. Wari is down 5.5%, at least in the pre-open.
No, absolutely. And, market open, right? Coming up in just a bit, about a minute or so to go. Under that, 8 points, so flattish on the Nifty. The Sensex is down about, 30-odd points. And we look at individual stocks as we go along. Should we look at Grow again? I guess we should, where it is in the pre-open. And then we'll move forward with the opening. So looking
it's quiet finally. It's 0.5% lower Grow today.
Okay, all right. So the market, I think, should be, at least the word go, should be quiet as well. And then we'll, I guess, pick up on action through the course of the day. The pre-open is certainly indicating that. What do we have? First rates, 25,900 on the Nifty. Nifty Bank is down 0.1. The Sensex is flat. The small cap index is flat. The mid cap index, I think, is also not doing very much at all. So 840 stocks are higher, 700 stocks are lower. That's the advanced decline ratio, which is coming up on your screens. Nifty 50 heat map will give you a sense, I guess, should be kind of balanced with more down than up. But what do we have? Yeah, so just about 6-7 names are higher. Everything else is starting in the red. Lever is up, Infi is up, TCS is up, but otherwise it's mostly in the negative territory. Nothing very large on the downside, I guess, but it's in the red. Surabhi.
Yeah, so let's talk about some of these red stocks for the time being. BEL, Tata Motors, Max Healthcare, Eternal, Eicher Motors. No patterns or trends in terms of sectors right now. In general, some profit taking, that's what we're seeing. Hindalco and ITC and Cipla, some of the other names. What's up is HUL, 1%. Remember, they've got all the approvals and that whole process of demerging the ice cream business. That's, of course, underway. Infosys and TCS, along with Wipro. So Indian IT is seeing some buying this morning. Shriram Finance is up and about, which brings me to the financials. Let's pull up Axis Bank, right? The call that UBS has given. They're expecting 20% upside on the stock. The target is 1,500. Right now, the stock's not reacting too much to it. 1265 on Axis Bank. That's about it, really. Trend, hardly anything. It's just IT and HUL. Those are the leaders on the Nifty. Nigel.
Well, Azad Engineering, that's a stock that's going up on good volumes. It's up close to 4%. I think they got a new order, green signal out there. So that's why that stock is up close to 4%. KC getting smacked, Vari getting smacked. KC because of that uncertainty with regard to what's going to happen on the way ahead. Though the current order book doesn't get impacted, but the stock is down 6.5%. Vari, as you mentioned, that as well is lower. The stocks that are gaining from the broader markets, just keep an eye out on Infra. That's up more than 6%, and volumes for the first few minutes are more than 65,000 shares. So it appears, there's pretty high volumes for a counter like this. Big up move is what we're seeing on that particular counter. So keep an eye out on that name. Billionaire or Billion Brains, Grow. That one's down close to around 6%. So now it's at the low point of the day. And Physics Wala as well, it started off with a pop of around 2%. It's quickly corrected into the red. So, gravity is catching up with these two, looks like. A bit of a downtick on them. Cupid from the broader markets is up 3.5%. Big up move is what we're seeing. And MV, photovoltaic, yesterday it listed. The stock ended a little bit flattish and mildly in the red. Today it's up close to around 2%. Volume's quite high on that name. So a flattish to a mildly negative start is what we're seeing.
Absolutely. So sideways, basically, right? The word goes. 1,200 stocks are lower, 1,000 stocks are higher. That's the lay of the land. Actually, lots of stocks opening up right out of the gates with actually more down than up. Yesterday as well, more down than up. But yesterday was quiet, quieter compared to what we had on Monday's trading session. Intellect Design is something which is up 4%. It's got very large volumes. Hero MotoCorp is the number one volume-led gainer. I think there's an upgrade from one of the brokers, I think JP Morgan. So they've raised price targets in their view of the stock. KRN is up, 4.5%. Goldium International, the lab-grown diamond maker, 6% higher. Studs, I think this is the helmet maker, right?
Yes.
Studs had a big move yesterday. So it's up another, 3.5% this morning. We've got Deepak Fertilizer up 2.5%. And so it goes. Basically, just about opening up, but with very, very kind of sort of quiet kind of vibes this morning. 25,875 is where the index is opening up. Conrad Saldana is Managing Director and Portfolio Manager, New Berman. He's with us here in our studios. Conrad, great to have you with us here. Thanks very much for joining us. So, I guess some of the stuff is similar to when we've spoken earlier, which is the India-US deal is still happening, but not yet. And the AI thing, NASDAQ is down about 7% from the high. So let's just actually start with the US and your view on things. Do you believe it's just a technical shakeout at the end of the year? Protecting profits, that kind of thing, or this is a turn in sentiment? Because if it's a turn in sentiment and people are now fearful to own the AI stocks because of fundamental reasons, now that's a bigger problem. What's your sense?
A difficult one to call. We think long-term here now. Even coming to India, for me, there's so many AI bubble headlines and people on the other side of it and trying to justify it. I think this is here to stay. This is real. Now, saying that, we've got NVIDIA's results, right? There's going to be well watched for in the next day or so. Tonight for us. I'm getting my time zones mixed up. But that's going to be one to watch in terms of growth. But I do think the ramp up in AI is still here to stay. You're seeing tons on the GPU side. We haven't seen fully the ramp up in ASICs. And enterprise spending hasn't really come through. So I think part of that, I think people might be a little bit ahead of themselves. I'm not saying that there aren't pockets of where there's euphoria and the fundamentals are quite not there, especially cash flow. But you look at the NVIDIAs of the world, there's plenty Broadcom. They're cash-generating machines. Gross margins are super high. You're talking these businesses that are 70+%. Those are great businesses. And people question where they're deploying their capital potentially now. But I think they're building the whole ecosystem. I still think we're early innings in that. Valuations is something you've got to keep an eye on. And as fundamental investors, that's our challenge, right? And we have to pick those points. But otherwise, I don't see a broader bubble. There are pockets of that do happen. But I do think where there's, Surabhi, I know you're laughing at this, but I think there's profitless companies that are building out, right? And you're seeing with the computing power that's happening with every generation shift that we've seen from Hopper to Blackwell now to Rubin, you're seeing the cost of the cost per token come down so drastically. But there are people who make money off the tokens too.
I was laughing, Conrad, because Prashant and I keep a tracker. Is it a bubble tracker, right? And the overwhelming consensus right now is that it's not a bubble. Okay. So,
Ignore those headlines, because those are SEO optimized headlines. Conrad, which is, when bubble gets you hits.
Yeah.
But I don't think, Surabhi is absolutely right. I mean, look at all the mainstream sell-side research, right?
Everyone's saying it's not a bubble.
Everyone's asked the question.
Is that the risk? Because everyone says it's not a bubble.
Yeah, I think there are definitely pockets of it, right? And valuations are not what they are. But you look out a year out with even NVIDIA, you're talking if it's a 30 PE stock, that's not egregious, right? Now, you can find loss-making businesses on the rental side as you go down the curve. How much, people question OpenAI, how much are they spending, right? But their tokens are just turning profitable, right? Now, would that spending slow down? It's been a big driver for US GDP growth too, keep in mind, right? Yeah. All this tariff, all this other stuff gets pushed aside because you've seen that growth come through in Q2, et cetera. So that's helped the economy as well in a reasonable way.
Conrad, so that's the global AI theme. Yes. So now I just want to ask you an India question. We don't have clear AI plays in India, but we have consumer tech, and we have these new companies that are disrupting.
I thought you were going to ask anti-AI.
No, anti-AI is for later. I'm asking something.
That's the new term.
We're the anti-AI.
Actually, it's not. Go on. Sorry, we'll get to it.
But that later, whether we are the consensus anti-AI trade of the world or not, that later. But actually, my question was a little more serious about corporates. So we don't have these deep technology companies and these AI companies. What we have is consumer technology, right? We have platform companies, and we have, whether it's brokers, whether it's food delivery, and all of them based on the digital theme. And these stocks are getting top dollar valuations. Many of them are listing, and one example obviously is Grow. I don't know if you've seen it or not. But I mean, this is not a stock-specific buy or sell question. Does that, does that make you uncomfortable at any level? Is it that we lack AI, and therefore any company which has anything to do with digital otherwise is just getting bit through the roof here in India? Is that a worrisome sign?
But potentially, I mean, some of those, I would say what's happening on the hardware side, right, looks like it is going to be disruptive on the software side, right? And what OpenAI is doing, and you're seeing the valuation differential globally, that trend. Now, India has been a net loser in a sense. IT service companies, more time and material. If you can automate, and the workload that took you 3 weeks to code takes you 3 days, there's obviously a risk factor, right, on your billing. Now, the Indian companies will have to disrupt themselves, right? And the old business model that they've had for the longest time has to change. Are some of the companies actually going to be big beneficiaries? I think so in India, where efficiencies, can be massively improved. I think there's a broader spend. It's super early days right now. When you look at the AI DC spend here, if NVIDIA is thinking and talking about 1 gigawatt in India, that's really scratching the surface, right? So I think it is a big runway for India for sure. There's going to be disruption. People worry about the social aspects of it on the job front, right? And IT was a big job creator. Is that lull and pause now? To be honest, if I look at the US, there's firings across the space in tech, except for hardware, and NVIDIA's hiring. But otherwise, so that's something we in the near term, it could be painful, but we all have to think and be disruptive, just like we've seen on the car side, which was a crowded business, one company in the US showed us how it can be disruptive, and that's followed through with the Chinese. Same thing's happening right now with AI, the same roadmap, and I think India needs to get onto that bandwagon versus worrying about it. So, to answer your question on some of the companies getting bid up, yes. You've got a closed capital market here, and when those companies and some of the platform companies are showing growth, that's great. Can they get disrupted? Yes, but they've got the consumer. They've disrupted what was historically 1 million points of presence on retail sales. That's changed so quickly. Then India's been innovative with quick commerce, which hasn't picked up in a lot of places. Even now, China's following through. We're seeing that in other parts of the world. But that's been a great opener, I think, for India. And when growth is scarce, growth is coming down. You ask me, when you look at broadly in India Inc., EPS has slowed down so dramatically, so where you can find it, people are going to chase it.
Yeah. All right. Hi, Conrad. Always good to have you in the studio. As you've mentioned in the past, you're more bottoms up, right? And you're looking for various opportunities. I recall a couple of them that you mentioned last time around. The power infra space. I think you like stocks like CG Power, Voltam. Those were the couple of names that you mentioned. And the domestic healthcare theme as well. Apollo Hospitals was something that you liked. They've done quite well. And JB Pharma as well in the new avatar is something that you liked. Tell us what's new. What's the recent addition, say, in the last few months that you'll have done to the portfolio?
Nigel, we haven't changed that much. We generally take a longer-term view to investing. When the companies I mentioned to you, I still think they look solid when we speak on that AI side of it. We've been big proponents that power is going to be the real bottleneck globally, especially in places like the US. I think India's got, I think PSU Bank last night and day before night in a conference mentioned about power capacity on the grid with good reliability. I think the Voltam still look good. I know the stocks have been softer. That's going to be a very long-term play. There's going to be cycles in it, but that's going to be the bottleneck. So still look good. I think the area where I think there's opportunities, Nigel, in terms of more recently, I would say, the banking side where we all got worried about loan growth. Yeah. Right? Then NIM compression as RBI cuts. And thirdly, what's the asset quality? The good news is for the bigger banks, that's looking good. Yeah. And the stocks are starting to react a little bit, but there's still a lot of upside. You're looking at some of these on single digit, just about double digit PE terms. And even on price to book, there's been a massive derating. I think that's an area which to me looks a sleeper with a longer term.
You want to name a few of them? HDFC Bank, ICICI Bank, Kotak Mahindra, which one is it? Or the big boy, SBI from the PSU banking part?
I think they all look good. Honestly, I think HDFC with the merger issues now behind, I think that's looking undervalued. Axis is cheap. If you want to, it's trading a fair bit of a discount now. Kotak also is derated, but I think you've got so many picks. I'd say on the if I think of the PSU banks, SBI comes to mind as the bellwether. The numbers look good. The underlying assets and the list goals that they have are also executing really well. So that's also a good stock to own.
Talking about that anti-AI point that Surbhi and Prashant were mentioning as well, US markets ended under pressure. If I look at the last 1 week or so in dollar terms, India has been actually an outperforming market. And as we speak, the Indian markets have moved into the green, which is good news. And tech is a sector that's actually standing out while NASDAQ has pulled back. Remember that correlation broke totally because NASDAQ did well and Indian tech, the index itself did fall apart. What do you like from the tech pack? You'll have mentioned you'll like various niche companies in the past. You want to name a few of them?
Yeah, I think we own the similar names. If you talk about and split it into in the hardware side, NetWeb is a stock we like. It's an assembler, servers. When I look at India Inc., it's not what Taiwan does on the assembly side, but it's got a long runway. It's early days, albeit. I think that looks good. I would say on the software side, someone like an Orient Pro, we still own. On the IT services side, growth has slowed down, Nigel. When we look at it, we are talking about low single digit. I think you had mentioned, I think maybe Surbhi had mentioned Wipro before. You're talking a margin of just, flattish growth. Yeah. And that's where you need to, you need some operating leverage here. And I think that's where there's pressure. So we don't own much on the IT service space at all. And that's been for a while.
Since we're talking, actual themes that you like in the Indian market, I think you all also invested in the EMS space, the electronics manufacturing, right? Now, these companies are absolutely going all guns blazing, and we were speaking to Keynes yesterday. Their OSAT business is coming up, and these printed circuit boards, and everybody's in them. Amber announced an acquisition on the PCB side. What do you think of valuations now here?
Valuation.
And are you still owning some of this, or have you?
We do own. I think when I look at that space, and Surbhi, if I had to rank them, Dixon's has executed over the cycle. I can go back 20 years, right? They can keep on reinventing themselves. They can do scale, right? Now, valuations aside, but they're growing, right? And I think the opportunity is huge. Keynes is moving up the value chain. You mentioned about OSAT. And some of these will come with a fair bit of capital intensity, to be fair. And to get yields up, it's going to take a little bit of time, right? It's just a natural path. And then you've got, like you mentioned, Amber is trying to break in from its old AC supply business. So they've got a good shot. There's a few interesting names as you go down the list, but I would highlight those 2, 3 are still executing. And I do believe that if you take a 3 to 5 year view, they still look solid. You have to digest the valuations that have gotten re-rated.
Okay. So on a larger note, Conrad, as you look at this market and you compare it with anywhere else in the world that you want to be, because its life is relative, right? India was a market which got its premium for growth, like you also mentioned. But now the growth is coming in short bursts in certain pockets. It comes and stocks go through the roof for 2, 3 years, and that theme fizzles out, the narrative moves on, and the market moves on. I mean, is this the new normal of investing in India? And do you think foreign investors will be okay with that? Because the rest of the market at an index level, we're talking earnings of basically 10%. Will that be enough to get the foreigners back?
I think so. I mean, how did we get here? Growth started to decelerate, and keep in mind that nominal GDP has come down, right? That's a good predictor of your EPS growth. But valuations were high, and because of how much of money that is coming into the system, right, through SIPs, that's kept the valuations up. Thankfully, a few of the IPOs have come in and put a little bit lid on the market, given how much of capital that also sucked in, right, on the IPO front. I think India is going to be the contra trade in a sense. It's a domestic economy. Obviously, we've seen a fair bit on the tariff noise that has come through. I think it's proving more resilient, but I think you've got to see the growth come through. And I think that's where India... And we debate that in our own team. I think India, Nigel, you mentioned it earlier. If Nasdaq's down, India seems to be outperforming. I think that's the way I think it plays out as such. So it's going to be much more the domestic engine. Foreigners have sold a lot. The alternatives you mentioned in a relative sense, Korea was really cheap coming into this year, and they have some great businesses. Same thing for Taiwan. So as we look out, and those have gotten re-rated. Korea's up 70% this year. So when you look now, that gap has gone. Now it's about earnings coming back, and I think that relative premium that India traded at has narrowed. So I think there's that relative opportunity now into next year. I think the setup is looking good for India, where overvaluation, maybe overowned, and earnings decelerating, and I think we're starting to base.
We are the reverse side of that trade here.
Well, Conrad, good to hear your thoughts, and I'll tell you what, the Indian bulls, market participants will say, the bulls partied all over the world, but who partied with Santa towards the end of the year? The Indian markets. Let's hope that comes
Fingers
through.
crossed, Nigel.
All right, and wishing you a good festive season. Hope to chat with you, rather soon. Thanks.
Thank you so much for coming.
Well, let's focus on the stock of this week, though. Grow. It's been growing and growing. It started off with a dip of close to around 5%. It's recovered a little bit. Float very, very limited. Let's go across to Hormuz. He's here for a quick analysis on that. Hormuz?
If you can call it breaking news, Grow is down in today's session, and
not growing.
It's almost doubled in the last 5 sessions. So of course there is some bit of profit taking that's coming in at higher levels in today's session at the start. But yesterday, Money Control did this very interesting story about the fact that there were 30 lakh shares of Grow that were pushed into the NSE auction window yesterday, and that is what analysts are describing as an unusually large quantity. Now, why did this happen? Now, some of those traders who were betting on this post-listing rally to cool off, they had shorted the stock, and contrary to their expectations, the stock, instead of cooling off, continued to move higher, and as a result of which they could not arrange for the delivery on the settlement date, and as a result of which the stock was moved into the auction window. Now, what exactly is this NSE auction window? It generally takes place between 2:30 and 3 p.m. every day, and it is for us to address situations ones where the sellers are failing to furnish the delivery of the shares that they have shorted. Of course, only those shares that are in the demat account can be sold, and the circuit window limit here is also 20% when it comes to price. And for auctions that fail, the exchange can close those positions at a higher price and compensate the original buyer of the stock with cash instead of giving them the shares, and thereby close that position. Now, analysts also, Money Control also spoke to some analysts, and they mentioned that this is a technical process and the fundamentals of the stock are not impacted because of this. And also the fact that the shares procured through the auction window have almost similar costs. So there is no cost differential here as well. So as of now, Grow down 5% for the first time after surging almost 95% from its issue price.
Okay, all right, Harma's got it. Thank you very much. So this is one of those rare days for Grow so far. 6th day of its listing. It actually listed exactly a week ago on Wednesday. It was only up and away. Today, it's finding its place with a little bit of gravity setting in. Anyhow, let's move on. Talk about two more stocks. One is KEC International, which is down about 5% because of this issue the company is facing with Power Grid, and the other is Azad Engineering. Vinny's here. Vinny, let's start with KEC. What's troubling the stock?
Hi, so absolutely, like you mentioned, right, the issue that's come up with Power Grid, where Power Grid has actually barred the company from receiving any of their tenders or orders for a period of 9 months. This is going to be starting from November of 18th. The main reason for this was alleged transgression that took place of Power Grid's contractual provisions, and there were some arrests made as well. This happened in March 2025. So concerns around this, and that is why Power Grid has barred KEC from getting any orders or tenders. Now, the company in their release has said that they don't see any impact on the work that is already under the execution of with Power Grid in terms of their projects. But let's look at the details now that are coming in. One, when you look at the tender pipeline in Q2 FY26, that was at around 1.8 lakh crores. Of this, the T&D, that is transmission and distribution pipeline, is at 65,000 crores. In that, domestic comes in at around 25,000 crores in T&D. And do not forget that Power Grid is one of those major companies for KEC International in terms of clients. So, that is a major impact that would come in this number which we're seeing of domestic order pipeline. Because what the company has said in terms of guidance, 30,000 crore inflow by FY26. Now, will it affect this guidance of theirs for order inflow if, they're barred from KEC, Power Grid's order intake that will come in as well. Overall, order inflows also are at 39,300 crores. Around 15% seems like is the order inflow that is coming from Power Grid. So that is important to watch out for. And those will be the key questions that we look to ask the management, what it means in terms of outlook, as well as how they see this moving going forward in terms of impact as well. So KEC, that is why we're seeing that fall. Now, other than that, Azad Engineering, positive news flow coming in here. They've signed a contract with Pratt & Whitney for development of and manufacturing of aircraft engine components. Time period is a long-term agreement. Exact time period is not mentioned or the contract value, but a big order win there, and that is why the stock is in focus.
Okay, all right. Thanks a lot for that, Vinny. From Vinny, let's go across to Vinity Organics. That's the next management on the show. The company reported actually a mixed set of numbers. Lower input costs led to strong margin expansion. To discuss the past quarter and more importantly, the way ahead, we have with us Vinity Saraf Mutreja, the Managing Director at Vinity Organics. Hi, Vinity. Always good to have you on the show. Thanks a lot for joining in today. Well, let's focus on the way ahead. And you have mentioned in the past, over the next 3 years or so, you're looking at a 20% CAGR growth in terms of revenue with margins in the vicinity of 26-27% or thereabouts. But let's talk about this year first. How confident are you of that 15% revenue growth that you were talking about for FY26? The first half of the year has been a mild growth out there. So that's why I want to understand for the year, what kind of revenue can you do? And also margins, first half of the year, you've done well out there. It's closer to around 30%, but still you're talking about 27%. So guidance on both these two parameters.
Sure. Good morning. See, when I say revenue growth, I think I should correct myself and call it volume growth. Because revenue is a function of volume and price. And so while year on year and quarter on quarter, we are seeing volume growth of our products, especially coming from the new products, the additives business, as well as from our subsidiary, as well as ATBS. Now we have started the new line, which just got commissioned a few weeks back. So given all of that, we've seen volume growth. Of course, the prices of raw materials have fallen, freight prices have fallen, which has also led to a reduction in prices of my end products, and hence you see a margin expansion as well. So it's actually been a very good set of first half or good Q2, and looking forward to Q3 and Q4 as well.
Okay, so, so just to revise that, then for this year, if you could talk about volume growth, revenue growth, and margin, just to clear the air, what should the range be now?
So exactly. So volume growth remains 15%. Like I said, volume coming from our expansion, additional volume coming from the new ATBS line as well as the new products. Revenue growth could be a little less, maybe 10%, 12%, because there is a price correction given the, and margins, I would still maintain 27%, simply, just to be conservative, and since we will be entering new markets as well.
Okay, all right. Talking about expansion then, if I'm not mistaken, I think your phase one of the ATPS capacity has been commercialized this month itself. You could correct me on that. What is the initial volume? So there, I think the total capacity was around 10,000 tons. And the second capacity will come on stream in April. Are volumes fully booked?
That's absolutely, fully booked, at least for phase one, is looking good. It has started, yes, in this month. And we are ramping up production since we do have an order backlog. And phase two is set to get commissioned around April, May 2026. That's right.
Okay, all right. So, so you're saying the demand is strong enough, right? With
and it is a 10,000 ton expansion. You're absolutely right. That does increase our capacity by 25%.
By 25%. What will be the new capacity then?
40,000. Again, depends on which quality, but 40,000 tons, yes, per annum.
All right, let's talk about a couple of other products, the MEHQ as well as Guaiacol. They have not contributed meaningfully to the revenues. I think they were to do, I think 350, 400 crores or thereabouts. What did they do in the past quarter, if you could help us out with that? And what is leading to this delay, in terms of ramp up?
Sure. So, when I say 350, 400 crores, that was the overall revenue projection from VOPL, our subsidiary, which includes at least 5 or 6 products, MEHQ and Guaiacol being one of them. The other products which are yet to be commissioned is PTAP, there is Formap, Anazole we have just, is also yet to be commissioned. So it was a combination of these products. Yes, there has been a delay in MEHQ Guaiacol because we did go in with a new process and a new technology, and that is taking some time to stabilize. Having said that, we have got the quality right. Our products, our samples are approved. In fact, our trial orders on a commercial basis also we have supplied and they've approved. So next year is looking positive for these products.
Okay, and on the antioxidants part, y'all are now producing the largest amount of antioxidants in India?
Absolutely, and we are running at 60% volume capacity utilization. We've also reached profitability in that business. Okay. So antioxidant is looking good, and we are able to compete with imports, and given our backward integration into butyl phenols and IB, we do have an advantage, and the demand in India for these products is growing compared to other countries.
All right, in the past we've discussed about this Chinese threat with regard to antioxidants. And you said that maybe there could be some kind of protection as well, was something that you all were lobbying for. How are things looking as of now? Are imports still a threat? Because that Chinese, the more they produce, you always get a little bit sketchy on that front. So what are the trends you're observing on antioxidants?
Well, the DGTR has recommended an anti-dumping duty on Chinese products as well as products from Singapore, but the Ministry of Finance is yet to revert. So we are waiting on that.
All right.
So if that comes, then that will be a very big positive development, yes.
All right. And as a percentage right now, are Chinese imports still coming in?
Yeah, they're absolutely coming in. We are servicing probably about 40% of the domestic demand, and imports are coming in from China, Singapore, Korea.
Okay, all right. So if it comes in, then definitely it'll be a positive, because I think antioxidants as a percentage of your overall revenue is low teens. It's around 11-12%. Could you tell us, how do you expect this to scale up? What is the percentage contribution from antioxidants to the total revenues? And
well, you're absolutely right. I'm surprised you're getting the numbers so correct.
No, Vinati, I normally get it right, yeah. but correct me on those numbers, with regard to how do you see things panning out?
No, you're right. AO is right now 11 to 12% of our revenue. And if things go as planned in the future, that could go up to 15-16%. Again, because the other products ATBS will also contribute to our revenue growth.
Okay, all right. Got that, Vinati. Good conversation. And I think you've told us in the past that US tariffs is not really hurting you all, right, as of now?
That is correct, because my major export to the US is ATBS and related products, which is under exemption.
Okay, Vinati, you've given us a fair idea about business. How do you see things pan out? And as you've mentioned numerous times, 20% revenue growth is what you're looking at, for the next 3 years on an annualized basis, with margins closer to around that 26-27%. Wishing you a good day ahead, and we look forward to having a chat with you, Vinati, rather soon. Thanks for joining in.
Thank you. Bye.
Well, time to slip into a short break. On the other side, Vishal Kampani of JM Financial will be joining in from the conference, JM Financial India Exchange 2025. Prashant will be in conversation with Vishal.
Welcome back. Well, I'm sitting down with someone who's right at the top of the deals table. Vishal Kampani of JM Financial is with me here right now. We'll talk everything macros, markets, deals, not just the India-US deal, but of course also all the deals which we're seeing in the capital markets. And of course, we'll sort of wind down with a view on JM Financial as a stock, as a company, which of course has done very well as well. Vishal, thank you very much.
Thank you.
This is day one of the conference.
Absolutely, and we're very excited.
Yeah. What do you expect to sort of, you think will be the dominant theme here this time?
So I think there are lots of themes. One is India very clearly is one of the dominant growth engines in the world. And investors are very interested to hear what's happening in India. And, you know, if you have a longer term horizon, which matters, 3 to 5 years, there is no question you won't spend time on India and understand the growth prospects here. And also this time, in the last 5 years, we've seen almost every sector having outperformance. It's not about making a bet on IT services or banking. we've seen growth across sectors. So it makes it a very interesting and exciting market.
You know, last 1 year has kind of been strange because there's a bull market in so many pockets of the market, so many stocks, but no bull market as far as the index is concerned. Is that the right way to characterize it? It doesn't feel like the market is going bonkers with gains at an index level, but stocks.
Yeah, I think, see, the disappointment has been in earnings growth. I think the expectations last year were around maybe a 15-16% kind of earnings growth, and the number is closer to 8 or 9%. Right, so there has been a bit of a disappointment, and that is a primary reason I think why you've seen FPI selling. Right, so it's more of earnings-driven selling. At the same time, you've had massive buying from mutual funds, all led by retail inflows through SIPs into funds, which has been able to sort of sustain the index where it is. So in fact, without that, I mean, markets could have been lower this year. But again, as I said, the word is horizon, right? What's your horizon? If you're really a long-term investor, which, retail in India is proving to be a smart investor using SIPs, taking a long-term view on equities, your returns will be very good as long as the economy is growing at 6-7%.
You think we should, that statement, which is retail has been the smart money, we should preface that statement with the question, only time will tell, or no?
Of course, no.
Need.
I mean, time will tell, but, when you see, do you see any big macro risk in India, right? No, it's hard to tell. I mean, look at corporate balance sheets, right? Completely delevered, right? You look at India government, right? I mean, you don't see any macro risk. There's stability. Foreign exchange reserves are almost 700 billion, right? Consumer, there are parts of, the sector in consumer which is slowing down, but it's also slowing down because of competitive intensity, right? So I think, leverage in the retail or the individual segment is not that high. So there is no real macro risk that we worry about, right? Our banks are strong, our NBFCs are strong. So the financing, the credit side is strong. So where is the downside going to come from, right? And full credit to the government. We did not do any kind of, overspending during COVID. No kind of distribution of money at the center level, right? So I think full credit, and that's why you're seeing the strong macro balance sheet.
But earnings growth has to pick up, right? I think this will be the third year where nominal growth is under 10%. So that's got to pick up. And hopefully that will, with all what has happened.
Yeah, I think, so somewhere you've also seen a bit of a reset post-COVID. You've seen many sectors fly during COVID and do very well. And you're seeing a bit of that reset in terms of earnings. Maybe seasonality is coming back, right? So many of these factors are coming together, and therefore you've seen that over the last 6 quarters or so, you've seen a bit of a decline in earnings. But I think as a house, we are quite positive. I think next year, which is 26-27, you should be seeing close to 14 to 16% growth in earnings, which I think will able to give you better returns from the Nifty as well as some of the smaller indexes over the next 18 months.
Vishal, you guys have been part of some of the largest issuances, IPOs, secondaries, blocks, I mean, everything basically, right? The level of activity is unprecedented. Now, the argument sometimes which is made, and I think it's right, that it's still the question, what came first, demand or supply? All the supply would not come if there was not enough demand to absorb it. But at some level, you've got to ask the question whether this is almost an en masse transfer of ownership to retail in that sense, right? And all this selling. How do you think about it?
Yeah, I would think that today India is in a place where we have a lot of different pools of capital operating at the same time, right? So where is this surge of IPO activity coming from? It's largely coming from the investments of private equity. You see, last 6-7 years, we've got almost $350-400 billion of private equity inflow into the country. Assuming these smart investors want to grow their money at 15%, right? Over the next 5 to 7 years, that's almost $800 billion to $1 trillion of exit value if these companies have been able to grow at 15%, right? So, and a significant portion of that, maybe 25 to 30%, right, will find exits through the capital markets. Some part of that will be a private equity to private equity transfer. You've been seeing that, right? You've seen some home finance companies which have changed hands within the PE universe itself, right? And another 1/3 could be strategic M&A. So there are lots of pools of capital.
Although strategic M&A has been kind of, it's not that large, right?
No, it won't, because multiples are very high right now, right? So people would prefer to invest in their own capacity than buying. Having said that, there's almost $50 billion worth of deals that have happened year to date. So deals are happening.
So if you divide these three, look at these three categories of, I mean, the way to monetize private equity, early investors, etc. The top one, the biggest one is IPOs.
Of course. Right now is IPOs, but you know, I'll tell you what happens is when you return capital back to these investors, they will come back with more.
Absolutely.
So they will invest again in younger enterprises, newer companies, and that will fuel another growth, right, for the IPOs and the secondary markets over the next 5 to 7 years.
But you just said that strategic M&A is not happening as a way to exit because multiples are too high. That multiple, I mean, all this stuff is being bought by retail at those multiples at the end of the day.
No, I think what's happened is a couple of things. Indian corporates have become careful in terms of doing M&A. You see, the returns from M&A generally in the last 15 years have not been great. So Indian corporates who are buying also have high multiples. So that kind of defeats the argument. I mean, if I want to buy a company at a higher multiple, if I'm trading at a higher multiple, I have the currency to pay for it, right? But people are saying on the absolute side, if I'm paying 25 times earnings for something, am I really going to make those returns? So which is a very conservative and smart way of looking at it. Having said that, there are lots of sectors where you can find value, right? I mean, you've seen banking. I mean, I was amazed to see that, you know, RBL raised more equity, right, than their net worth, and from a, you know, UAE player. So, which is a very interesting transaction, and I think it redefines the way we look at our banking sector in India. This is actually control transfer of a bank to a foreign bank, which has not happened.
60%?
Yes,
no, 60%.
And an open offer.
Yeah, an open offer. So you sit down next, opposite lots of promoters and private equity, etc., who want exits. Just give us a sense of how those conversations are going right now. I mean, is there willingness? I mean, who's pushing? First of all, our valuations, on average, I know it's very difficult to make generalizations. Some are high, some actually leave a lot on the table.
Yes.
But are you generally okay, all right? And how do those conversations go?
I would think it's more sector specific. I would think in the new age space, maybe people have to be a bit careful. What I fundamentally don't understand sometimes is that stocks trade up a lot higher post IPO. And they weren't necessarily priced very well during the IPO. So secondary market investors have to be careful, you know, buying stocks which have done extremely well post IPO when the IPO itself wasn't considered cheap. That's number one. But generally, if you see, again, domestic mutual funds, I mean, I tell you, they've been very smart about making investments. I mean, they're not paying up for anything. They're being careful. They're looking at very conservative ratios like PE multiples as well. Not just getting carried away with, you know, EV to EBITDA multiples and adjusted EBITDA multiples. And so generally, I think the entry price, again, from a 2 to 3 year horizon is not expensive.
Do you think that this phenomenon of companies doing very well immediately post-listing is also because a lot of the anchor, etc., is locked in? I mean, all that supply is out of the market,
absolutely.
right?
Good point. Yeah, absolutely. So there's no supply.
There is no supply.
Yeah, so you'll really see how some of these gains which you see post-IPO, how they play out post a 30-day, 90-day, and a 6-month lockup.
Yeah,
see, one thing I'll tell you, one has to understand that in a promoter-led company, you're not going to see the promoter sell his stake within 5 years. So, as I said, 350, 400 billion private equity invested. That's almost 800 billion to $1 trillion of exits. These exits have to happen. If they're listed companies, strategic sales are complicated. They're easier in privately held businesses. So the float that will come to the market in some of these companies is going to be very large.
Sure.
Right? And that can dampen stock price movement for a very long time. Right? You can see 2 years or 3 years of prices being almost flat. Even though results are great and earnings are great, just because you have 70% of a company that's up for sale.
I know you can't sort of write down this as a rule for everything out there, but generally speaking, would you say, and I'm asking this and you're a banker and a deal maker, for viewers who are watching retail, etc., it's a good idea to not generalization overall, but as a mental makeup. Give it time. I mean, new listings. Give it time. I mean, once these lock-ins, etc.
Absolutely. Please give it time. Don't rush in day one to buy new listings. Just hold off. And, retail investors in India are way better off investing with some of the marquee mutual funds in the country. And they will give way better long-term risk-adjusted returns than trying to do it yourself.
That's a very safe statement, Vishal.
No, but that's true. I mean, end of the day, India has growth. Yeah, but India can have potential risk. You're not seeing it today.
Yeah.
Right? And if you have smart managers who are managing your money, why not just allocate it to them?
Yeah. And the pipeline itself, Vishal, I just want to ask, is it as huge, as large, as strong?
This is our strongest and biggest pipeline in the history of the firm. It's unbelievable.
So how many deals are you doing a month?
120,000 crores worth of filed IPOs.
Yeah.
So which is a big number.
And how many is JM doing every month? I mean,
our market share is between 20 and 25% of the market. So if we have close to, say, 120,000 crores of filing, the market potentially has between 3 to 4 lakh crores worth of transactions. So to give you some figures, year to date, 1,52,000 crores has been raised. IPOs. And last year was 1,54,000 crores, 1,55,000 crores. So we will beat last year. There is a chance that next year we could double this number.
Wow.
Yeah, because there are some very large IPOs which could come next year.
I mean, the big one, of course, is potentially NSE. Which
absolutely. I mean, that would be a very large and a very exciting IPO.
Yeah.
I think it'll be the most exciting IPO.
Yeah. Vishal, we're going to continue this conversation here, but for our viewers who are watching, I'd just like to toss it back to the studio. Nigel, Surabhi, back to you guys while I continue this chat here.
Okay, absolutely, Prashant. I know it's a very interesting conversation that you've been in the midst of. So very, very interesting. Vishal Kampani saying that retail investors need to be careful. Let these new listings settle in the secondary market, because the truth many a times is revealed only after those anchor lock-ins end, when those big investors, their lock-in periods are over. So we'll see some words of caution coming in over there from Vishal Kampani.
The new listing as well did come up, Tenneco. Good listing, 25-30% uptake in comparison to its IPO price, and the IPO wasn't priced cheap. We'll speak to the management in the next 30 minutes or so, but a solid listing is what we are seeing. And, Surabhi, by the way, yesterday, when we started Closing Bell, I was talking about Bhav Bhagwan Share, right? With regard to Grow.
Yeah.
Because, the price was up. Today, Bhav Bhagwan Share again.
10% down on Grow.
Wow.
Yeah, and this is what we were discussing in Closing Bell, that when something moves at this pace, 100 becoming 180, and absolutely the street has been very positive on the fundamentals of Grow. Most experts have been. But sometimes the price can create certain optical illusions as well. Anyway, that's Tenneco. We should pull up Grow, because Grow is the one that has been the headline of the market in the last 5 trading sessions. Can we get the Grow stock price up? Okay, I think we'll get it up in a bit. Right now, Grow is down 10%. Yeah, so there it is. So let's see how it settles. The story that Money Control put out is also an important one, that there have been a lot of short sellers who then simply couldn't fulfill their short selling obligation, and therefore Grow shares moved in the auction window. So there are a lot of technical factors at play as well. Let's see finally when some of these technicals settle and the real discovered secondary market price of Grow will be upon us. It ties in with what Vishal was saying. Sometimes you just need to be patient to come to the real price which the market is ascribing to a new listing. All right, on that note, let's quickly hop across to our technical expert, Siddharth Rai. Siddharth, what are your trades?
Hi, Surabhi. Good morning, and thanks for having me on the show. See, Surabhi, can I give me my perspective on the index first of all? Surabhi?
Yes, Siddharth. Please go on. The index view and then the trading calls.
See, if we talk about Nifty, Surabhi, despite all this pressure coming in from the global markets in this week, we have seen Nifty very nicely respecting 25,900 as a support. So interestingly, 25,900 was a resistance till last week for the index. So now I do think since the supports have come upwards, it's a very good idea to stay bullish in Nifty, though we are consistently facing resistance around 26,000. But we have to stay bullish in Nifty because eventually I do think that Nifty will be going past about 26,000 probably in the next couple of sessions. And once we do, we'll see a very quick up move towards 26,150 and 26,200 levels. So Nifty's structure is very bullish right now. And if somebody has an existing long positions, they must continue to hold it in the index.
Okay, and individual stock calls?
Yeah, sure, Nigel. Hi. See, two stocks, both of these we have to buy. The first one on my radar is Coforge. See, we have seen a very good breakout in today's session. Probably it was not the move was not very interesting in the last couple of sessions, but today the stock has come back about 1800, so it looks good to buy. Coforge can be bought right now. The spot is trading around 1819. Our stop loss will be at 1805, and the targets being the first target 1860, the second target 1875. The second stock is Scient. See, it's a classic turnaround story. Today's move is a very good turnaround, candle, and it can be bought right now. So right now, Scient spot is trading around 1149ish. We can buy it here. The stop loss will be 1130, and our target being the first target 1185, second target 1199.
Okay. All right, Siddharth, we'll leave it on that note. Thank you for the trading advice. We need to take a quick break. Come back on the other side with all the key commodity cues this morning. Welcome back. Well, let's put the spotlight on the commodity universe as always. It's over to Manisha for the latest. Manisha. Thank you for that. I'm looking at metals as a sector because October was great. November started on a positive note for many of these base metal prices, but doesn't seem to be ending that way because on the higher side, we're looking at profit taking coming in for many of these non-ferrous and ferrous metals. Well, to begin with, it is firm US dollar index. There's waning chance of a December rate cut. A 42% probability now is almost like a nil, and that's where the markets have seen some decline come in for the metals. Apart from that, it also has to do with other macro because the Chinese annual industrial production has eased to a one-year low of 4.9% for the month of October. It has been a sharp decline from what we saw in the month of September and down also from what the markets were anticipating. And this is exactly what the metals have reacted to. Aluminum trading at a one-month lows. You have zinc trading at a one-month lows as well. It's a one-week low for copper and 31-week lows is where the nickel prices are trading. We've seen lead, steel, iron ore, all of those commodities also see a decline in the last 1 week or so. Well, the metals, though, are expected to take support going forward is what the street believes because the China has reaffirmed focus on curbing overcapacity on many of metal production. Steel was first and then came aluminum, and now there are conversations on copper as well. Apart from that, it also is about the electrification initiatives and data center expansions that we're looking at. So many of these green metals like copper, aluminum, zinc will find uses within this also. Supply concerns in various producing countries, mining, smelter issues, civil unrest, the power concerns, as we've seen come in for Indonesia, are some of the factors. And then apart from that, there are no new mines that we're looking at coming on board in 26. The existing mines also have given lower guidance. The ore quality seems to be deteriorating. All of those factors clearly are going to be supportive going forward for metals. But for the time being, this is what we've done for non-ferrous metals in 2025. The best of the gains, as you can see, have come in from tin, and then copper continues to be on the stronger side. Aluminum gained 10%, and then you have zinc just about closing this year in the positive. We also have a negative in case of nickel, down by 4% there. Take a look at ferrous metals there. And when you look at the steel prices, we've seen a 7% decline on that. But HRC steel in the US has seen a gain of 27% there. The markets also have seen gains, though, come in for the minor metals there. I mean, these clearly seem to have outperformed across sectors. Take a look at cobalt, 99% of gains on that. Rhodium is up 72%, palladium up 59% as well. So stronger gains when you look at for many of these minor metals. That list perhaps could just about go on. What the markets will watch out for, though, is the US non-farm payroll data that comes in on Thursday, and an important level ahead of the US Fed meeting on December 10 and 11. Okay, all right, Manisha, thank you very much for that. Well, with that, let's take a quick break. On the other side, our special segment, It's the Economy. Lata today discusses with the several guests, Neeraj Gambhir of Axis Bank and Anubhuti Sahai of Standard Chartered on the impact of the October trade deficit data on the rupee.
India's goods trade deficit for October rose to an all-time high of $41 billion due to an all-time high gold import bill of $14.7 billion. Also another problem, goods exports were down year-on-year by 11.8% and exports to the US were down 8.6% because of the tariffs. Meanwhile, although brokerages like Goldman Sachs tell us that they are turning positive on Indian equities, dollar outflows by foreign funds have continued right up to November. So, where does all this leave the Indian current account deficit, the macro number, and where does it leave the rupee? I have with me Neeraj Gambhir, the executive and head treasury markets and wholesale banking products at Axis Bank, and Anubhuti Sahai, the economist from Standard Chartered Bank. Neeraj, Anubhuti, thank you very much indeed for your time. Anubhuti, first you parse the numbers for us. Given this kind of a trade deficit of 41 billion, even if we include the services surplus, it's still an all-time high monthly deficit. Have you changed your current account deficit for the full year?
Lata, we have not changed our full year forecast. We are still at minus 1% of GDP for current account. And, there are a few factors which probably keeps us a little bit more. I mean, we kept initially also we started with a wider than the market forecast on current account deficit. Just few things which I would like to highlight is that this number is clearly worrisome when it comes to this whole $41 billion. And there are few interesting nuances when you start looking at the details. First is we are all focused on gold for the right reasons because it came at 14 billion of an import value for just one particular month. But the bigger point there is that it's not that volumes have not taken a hit. Volumes have contracted, but of course, it's a pure price effect. What has not worked well for Indian current account deficit is that we all assumed that with almost a 10% correction since the start of the year, with lower oil prices, our oil deficit will change. Our oil deficit has remained absolutely the same as last year when oil prices actually averaged at 78. And that is because the volumes are much higher. Now, if the volumes correct, what we also notice that Indian consumption has not increased. Our exports are falling, but our oil deficit continues to remain absolutely the same. Is there a front loading? Or do we see a continuation of this large amount of oil imports going forward? I think that's one big question mark. We should also see some positive seasonality playing out, especially for non-oil, non-gold in the Q4. And that should also help. But net-net, our view still remains pretty intact that for this financial year, we will see current account deficit staying closer to minus 1% of GDP.
Okay. Just a quick word on oil before I get to Neeraj. This oil deficit, the fact that we are continuing to import larger quantities despite the fall in price, could also mean that the domestic economy is sticking well, isn't it? It's consuming more fuel.
Yeah, that was our hypothesis. But when you start looking at Petroleum Ministry's data, consumption is not picking up. It's a very minimal increase of 1%. But if you look at the Commerce Ministry data on volume, and mine, please, I would like to flag that the Commerce Ministry data is only for the first half of FY26. The growth is 10%.
Okay.
And exports are actually also falling. So that's one big piece which we need to get a far more clearer answer because a similar trend of lower prices, higher volumes have happened in 2015, 2016, but those also happened with increased domestic consumption.
Okay, I get it. So basically, it could be just stocking because the prices are lower. It may not reflect higher consumption. Okay, Neeraj, I want to get to the currency. You know, when you get this, first, thank you for joining us. When you get such a big number, an all-time high trade deficit, and exports getting this whammy from tariff, do you think that it's going to have a worse sentimental impact on the currency? It's now not just capital flows, but also the current account.
Yeah, so I think certainly from a sentiment standpoint, it does have a negative impact because this is a pretty large number and nobody anticipated this number. But if you peel the onion, you will realize that a large part of that is gold. and that's the household purchases of the gold during festival season, despite the high prices. So it's not necessarily a consumption-driven, in that sense, expansion of the current account. Although, overall, it seems like the economy is doing very well as compared to expectations. In fact, our economics team has upgraded their forecast for this year's GDP to 7.2% as against 6.7%. So clearly, the underlying momentum in the economy seems to be much better than what was estimated earlier. So yeah, net, I think we will see probably 1.1 to 1.2% of current account deficit this year, which is higher than what we saw last year of 0.6%. So clearly, there is a widening of the current account deficit, and capital flows have not really picked up. So clearly, the overall BOP is likely to be in some kind of a negative. Our estimate is about $25 to $27 billion negative. And that's the amount of intervention that we will see Reserve Bank doing to support the currency.
Okay. Well, this is perhaps one of the, I believe this is the first time that for 2 continuous years, the balance of payments is a negative. Until now, the BOP used to be positive. There was one odd negative year. Do you think that will mean that there are going to be, more pressure on the currency? Do you see us crossing 89 this year?
I think that's highly likely. The pressure on the currency is quite visible in terms of underlying flows and the underlying balance of payment trends. There is no respite as far as the FPI flows are concerned. I think equity continues to be significantly negative, although fixed income has turned around. And we're seeing some positive flows on the fixed income side. But net, the FPI flows are continuing to be negative. FDI flows are weak. So I think that weak equation of the capital account is showing up in terms of the, the sentiment and the momentum around the currency. We are continuing to see Reserve Bank actively intervene in the market and make sure that the rupee does not appreciate too much. But the weakening bias is there.
Okay. What's the estimate in stand chart, Anubhuti? You have a worse than expected current account deficit. 1% is not by itself bad, but most people are moving the needle from probably 0.7, 0.8 towards 1. Those who are at 1 have moved to 1.1 or 1.2% current account deficit. The delta is negative for the rupee, and the FPI remain in outflow mode. So what's the in-house assessment of the currency?
Our in-house view is that rupee is likely to trade in the range of 87 to 90. I mean, going towards 87 in our view is probably is likely to be driven more by any news flow around a trade deal. But even if we see some strengthening in rupee, our view is that it should be faded because RBI would start accumulating FX reserves and those levels won't be sustainable. At the same time, our view is that 90 won't be broken because RBI has enough FX reserves and they're likely to defend the currency depending, based on what we have seen in the last couple of months. And going forward, especially in the March quarter, we are also likely to see some improvement in inflows. So, this is the broad range in which we are looking, the broad range for rupee.
But Anubhuti, 90, we haven't yet crossed 89. Of course, the cheer in the market is that if the trade deal is announced, I mean, it looked like it'll be November. Now, the hope is getting pushed to December or Jan. But the market is not hopeless or, is not in despair about the trade deal. If that happens, you don't see 89 itself not getting broken.
Completely agree, Lata. So 90, because that's what I said. We are talking about the two extremes. 87 if the trade deal gets done, 90 if the trade deal news doesn't fructify.
Okay.
So that's the two extreme scenario. If we focus on a margin forecast, we are at 88.
Okay, 88. Neeraj, what's your sense in terms of the trade deal and what it might do to the currency? And how does all this impact the Reserve Bank on December 5th when they meet for the policy?
So as far as the trade deal is concerned, timing is quite uncertain. Depending upon when it gets announced, I think there can be an implication on the rupee. Obviously, it will be positive for the rupee from a sentiment standpoint, although there will be this question mark as to, when, it's a very volatile in that sense when things can potentially change. I would also overlay what happens to dollar in the intervening period, given the fact that the market is now reassessing the extent of Fed cuts that are likely to happen and the change at Fed that is likely to happen by December. So all of these factors will actually determine, in some senses, the broader currency market movements, particularly some strengthening in dollar is also possible. So while you may have a trade deal on the one hand, you may have a countervailing balance in the sense of dollar kind of strengthening. So I think that's kind of.
So what would your range be, Neeraj?
Very similar to what Anubhuti has said. I think it's like a little wide at the moment. 90 if things don't go on the trade deal side positively, and 87 potentially we could see. But I would also expect pretty much like what Anubhuti said, the Reserve Bank to be in the market to cover their shorts and make sure that the reserves are fulfilled if there is too much positivity in that sense. I would keep an eye on what happens to Chinese yuan. I mean, our trade deficit with China is actually now bloated all the way up to about $135 billion for the year, right?
Yes.
So we do need to make sure that if yuan was to sort of weaken, then rupee needs to weaken a little bit more. Yuan was strengthening actually; it has started weakening a little bit now.
Yeah, okay. We will show you the comparative currencies, how much RMB and how much the RMB has actually appreciated about 0.25% versus the dollar. The rupee has depreciated 3.3%. So at least we are moving in the right direction. Very quickly, RBI, do you think this worries them at all? We get a cut because of inflation, Neeraj?
It is a bit of a worry, but I think the inflation trends are far more important at the moment. We have seen a pretty significant positive surprise on the inflation side. I mean, if you strip away the gold price movements, the CPI overall would be in the negative territory right now.
Okay.
So that does open up a space, and I think the probability of a rate cut in December is pretty high.
Okay. You get only a monosyllabic time, Anubhuti. Rate cut or no?
No.
No rate cut. Okay, that's
Not
a divided house. Divided house here. But the range of the rupee can be as bad as 90 if the trade deal news doesn't come in. One hopes, of course, it will come in. Thank you very much, Neeraj and Anubhuti, for joining us and parsing the impact of the trade deficit data of October. That's it on this edition of Bazaar. Stay tuned. Chartbuster is coming up.
KC International slumps nearly 6% as Power Grid bars the company from its projects for 9 months, citing contractual transgressions.
Well, the Income Tax Department visits offices and units of Bari Energies. The stock slumps close to around 4%, even as the company says that they're extending full cooperation to the authorities.
JP Morgan raises its target price on Hero Moto to 68.50 rupees a share with an overweight rating. The brokerage expects market share stabilization, GST cuts and improving EV market share to boost the stock.
Azad Engineering signs an agreement with Pratt & Whitney Canada to develop and manufacture aircraft engine components. The stock rallies close to 2%.
Automotive component supplier Tenneco Clean Air makes a stellar debut, listing with gains of over 25%. The management will join us shortly to discuss the company's post-listing strategy.
Well, hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, with me is Mangalam. And 10:30 a.m. today, markets turned into the green. The global market's in a bit of a dizzy, but our markets are standing out. In just a bit from here, my director is going to be pulling up the rates for you. And as you can see, the market's at the high point of the day. Can India outperform from here on after underperforming for majority of 2025? Well, I'm optimistic. Let's see how that goes. But the Nifty Bank, the batsman that's been in top form, top of your screen, that's yet to find its footing today. Maybe trying to see the ball get into a groove and then play a bigger innings.
A couple of points, Nigel, something that really stands out. The first part is that when India's underperformance happened, it was largely because of our lack of any options in investing in artificial intelligence. So the AI bubble, as people called it, kept moving higher, and India did not participate in that. And now if that's unraveling, then India obviously does not lose from that as well. So we didn't party as much, and we are not participating in the hangover as much as well. The interesting part is the IT index. If the AI thing unravels overnight or in the global markets, etc., then we see Indian IT stocks benefit because they were underperforming because of the impact of artificial intelligence as well. And that's reflecting in our markets today. The IT index up around 2.5%. But let's get you some ideas for profit coming in from our colleagues at Money Control Pro. Anubhav Sahu joins in with a stock. Anubhav.
Well, we remain constructive for the CRDMO industry as the drug discovery and development requires huge cost and time. It is pertinent to have cost-effective CRDMO partners. In addition, the US Biosecure Act remains key monitorable as it would facilitate the US biotech industry to significantly reduce their reliance on China. Now, as the India's market share in the global CRDMO industry is just about 3.5% in value, there is great headroom for growth in our view. To capitalize that, prominent players are investing behind capacities and capabilities. So our top pick in the sector is SciLife, which is extending its expertise for peptides, antibody, drug conjugates, and oligonucleotides. Now it is interesting as these are also the fastest growing areas for the industry. In addition, we have upgraded our recommendation for Syngene as the stock has significantly underperformed. That said, our company's gross block is up by about 50% since fiscal 21. And some of these facilities should start contributing to the bottom line in near term. Lastly, we have downgraded our view for DV Slab, though it is a promising play on GLP-1 value chain. Our valuation is rich and there is likely to be an impact on its API supplies for heart failure drug Intrastor due to generic launches in time to come.
Right, as we speak, all the IT stocks doing extremely well. Eternal is the other one, which is among the top Nifty gainers today. But the stellar listing of today has been Tenneco Clean Air. Arvind Chandrasekharan, who's the whole-time director and CEO, joins us after what is a strong debut on D Street. Arvind, thanks a lot for joining in. You joined us here when the IPO opened in the studio. You said we're looking dapper. Well, who's looking dapper? Your shareholders right now, after a clean gain that they've made on the listing itself. But, what we asked you the last time is what we're going to press you on right now as well. Growth prospects going forward. Do you think this, 10 to 12% sort of revenue CAGR for you is sustainable from here on, given your capacity? And at the same time, if you could give us a sense on how much better can margins get from here?
Look, first of all, thank you so much for having me. We're extremely humbled by the amazing confidence and trust that investors have shown towards our company. Again, it's a testament to our employees, our customers, and from that standpoint, we're very, very grateful to our investor base. You saw from the pre-anchor and also the anchor and just the kind of institutions that have invested in us. It's almost like I couldn't ask for a better dream team, right? The who's who of the institutions have invested in us. So we're very, very grateful. As far as growth prospects are concerned, I think what I would say is that we have very strong tailwinds. So one is we are sitting on the India Inc. story, right? So already 4 to 6% of growth we're going to see simply because of India's growth and the market growth rate. But beyond that, we have 3 strong tailwinds. One is content per vehicle growth from legislation, emissions legislation, and premiumization of shock absorbers. So from a clean air powertrain business, the legislation will help us, whether it's BS6 going to BS7, CAFE norms coming in, TREM 4 going to TREM 5, or on the premiumization side, because SUVs are getting premiumized very rapidly, and so the move from static to dynamic suspension is also happening very rapidly. So we expect to get a nice boost from growth from just pure content per vehicle increase. Then exports. Look, right now, today, we're only 5% of exports in terms of product exports. We think that we can grow that very significantly, both from Tenneco India to the third-party OEMs, but also Tenneco India to Tenneco Global. There are tailwinds within the export area, which we're very excited about. The fact that technology is now equalized. Whatever we sell to local Indian OEMs is what we're also exporting. Plus, a lot of the Western OEMs are pushing for more localization or for India to be used as an export base. This is also driving our growth. And the third tailwind is all of this, what I would call cross-selling, bundling. This bundling and cross-selling is giving us access to white space that we did not have before. We had 5 entities that we merged together, and that's giving us additional tailwinds from a growth standpoint.
So 10 to 12% is sustainable, right? More than that?
Well, I won't specify a number, but yes, I think we're going to be in very good shape because of just the natural tailwinds that are helping our business. We are also excited because there's a lot of new technology that we have that is unique to us. And don't forget, I said that earlier when we met the last time. We're very asset light. We're very capitally efficient, if I can use that word. I mean, 57% ROCE. We have a very unique product and process design methodology that allows us to have standardized and modular parts, and therefore that is a very good example of how we can reuse a lot of assets and also use the same standard parts again and again in different configurations to satisfy all our different vehicle segments, for example.
All right. Hi, Arvind. Good morning. Good to see you, Ben, and congratulations. It's been great interacting with you. Prior to the IPO, when the IPO opened up. And best wishes to you, the team, and the family as well. I believe Dad watches our show quite often as well. So regards to them at home as well. And hopefully we interact a lot more. Couple of points then, in terms of what you said.
Thank you so much, Nigel. Yeah.
One is in terms of the realization. As you move from BS6 upwards, realizations could improve. When it moved from BS4 to BS6, what was the realization increase? If you could help us out here roughly on that parameter, point number 1. Point number 2, you want to quantify from 5% exports, what can it go to? Double digits?
Yeah, so very good question. So just look at BS4 to BS6, right? When it was BS4, we had dozens of competitors, right? In BS6, who do we have, right? We have just a handful, just 1 or 2 competitors. And that's because of our unique technology. The fact that we offer technology that's affordable, that is faster time to market, that has lower weight, because weight reduction is also very important for our OEMs. So that would give you an idea of, when technology or complexity or legislation is involved, we think that we have a unique value proposition. Our content increase, which was your question, has gone anywhere from 2x to even 4x from BS4 to BS6. Because remember, you went from actually nothing, just a pipe, to having a diesel oxycat, particulate filter, in some cases even an SCR system. So imagine adding 3 boxes to what was before just an empty pipe, right? So that journey will keep helping us as emissions legislations get more and more stringent. So that's really an advantage for us. Sorry, what was your second question?
Yeah, with regard to exports, from 5%, what will be the target contribution?
Yeah, so look, exports is going to grow way, way, way faster, simply because we're starting from a lower base. And because the tailwinds within exports are so favorable to us right now, we think that we're going to be, again, I cannot give you the exact numbers, but very, very fast growth in exports. But again, because we have long sales cycles, I would just like our investors to be a little bit patient with us, because we have, if I start the new technology now, by the time it gets into production, it takes 1.5 years, 2 years, and then it has to ramp up slowly. So we are a long-term player, and you'll notice that. I think with all our products, you have to kind of be with us, and you'll see the growth over.
Would it be fair to assume that exports grow at 2x the average growth rate of the company?
I couldn't give you the exact number, but yes, it will grow way, way faster.
Got that. Just a couple of questions.
Let's say organic domestic growth.
Got that. Just a couple of questions before we let you go. Just your thoughts on the premiumization of the shock absorber business right now. Because of the SUVization of the nation, so to say, how much would you sell a shock absorber for earlier? How has that grown? And what are the further tailwinds here on? And the second related question to that would be, how would then your margins look? Because your realizations are increasing because of the change in legislature for one part of the business. The other part of the business will see increased premiumization. Both of them ideally should be margin accretive, right? So how many basis points is the headroom for margin accretion here? And what's the kind of premiumization push that we can see in your shock absorbers business?
Great question. So look, the last 5 years, right, 20 to 25, saw the SUVization of the Indian market, if I can use that term. Indian consumers went from buying cars to buying SUVs, to the point where now, 55% and upwards is all SUVs, so every other vehicle is now an SUV. But what didn't happen in the past was the premiumization of the SUV itself didn't happen. So although we got a lot of shock absorber content per vehicle simply because we went from cars to larger vehicles, that automatically required, let's say a bigger form factor for shock absorbers. But now what is exciting is that we are noticing that the end consumers and OEMs now want ride quality to be one of their key differentiators, right? And you can see that across all the Indian OEMs. So 95+% of the Indian market is conventional shock absorbers. Now we see, in fact, I would say even higher than 95%. But now what's happening is the market's moving very aggressively towards like frequency-dependent damping, and I would say even more like, let's call it semi-active suspension to even active suspension. So I think that journey is helping our content to go from X to anywhere from 3X to 4X, and in some cases even 6X, depending on the kind of technologies being used. There's a lot of electronic controls coming our way. You need BLDC motors, you need accumulators, you need lots of sensors. So the paraphernalia around the shock absorber is sort of growing.
All right, very quickly, Arvind, before we let you go, Tenneco Clean, well, that's largely into post-combustion emissions control and some other engine parts as well. What would the company's role be to an OEM when the migration to EVs gains momentum?
So, look, so you understand that, right? So 50% of our business is shock absorbers. So shock absorbers, right technology, suspension. So it's totally agnostic to the kind of powertrain we use, right? That's 50%. The other 50% is clean air and powertrain. And even there, we've been lucky that we've avoided certain segments that will go electric faster. So we are totally not present in the two-wheeler business. We're not present in the three-wheeler rickshaw business. Even on the passenger vehicle side, we are mostly in the higher displacement engines that will be kind of slower to electrify. But we're not so worried because between commercial trucks, off-highway, industrial, and even stationary gensets, our content is so high, we find that our actual exposure to electrification multiplied by the penetration rate of electric vehicles in India is like 0.5% today. And even that is not going to change much in the next 5 years because we have enough content per vehicle, we have enough exports, and we have enough tailwinds that will take us there. And just one last point. On the shock absorber side, remember that when you go from an ICE vehicle to an electric vehicle, automatically that electric vehicle requires a more robust shock absorber simply because electric vehicles are denser, heavier, the center of gravity is different. So by default, the content per vehicle goes up significantly.
Well explained.
And margins go to what, 21, 22% in the next couple of years?
Or better. Give you numbers.
Okay.
But all I'll tell you, guys, is that, look, obviously, when you have new technology and there's fewer competitors, we're hoping that these will come with higher margins.
All right, Arvind, it's been a pleasure talking to you. Wish you all the best. Celebrate the day. I think your global's head as well was down, ringing the bell at the exchange. So have a blast. And this is one of the few IPOs that appeared relatively expensive, but still the street believes that, in fact, it still has way to go. So thanks a lot for joining in. Lovely visuals there up for you on the screen. Well, time to slip into a break. Chandan Taparia from Motilal Oswal Financial Services is waiting for us with a trading call. Welcome back. Well, the market's holding into the green. We have Chandan Taparia who joins us to help us out with his call. Chandan, what do you think? All-time highs in the offing? Would you be looking to buy on dips?
Yeah, good morning, Manglam and Nigel. Thanks for having me. So Nifty has been flirting near psychological 26,000 marks from last 5 to 6 weeks. The concern is that follow-up is missing at higher levels, but the good part is the index is absorbing all the supply near 26,000 levels. We believe that major trend is positive and buy on decline could continue until Nifty holds above 25,750. We are expecting index to hit the all-time high towards 26,277. So buy on decline could continue here. And when we talk about the bank Nifty, that has been outperforming the broader market. However, in last 2 trading sessions, it witnessed some consolidative move, but major trend is intact and selective stocks are doing well, whether we talk about the PSU name or the private bank. So till bank Nifty holds above immediate support near 58,000, we are expecting next leg of rally, which can even take it towards 59,250 to 59,500 in the banking index.
All right. What about the IT index and individual stocks, Chandan? What do you have for us on the list today?
Yeah, so quite positive on the Nifty IT index. In fact, index has given a consolidation breakout on daily and the weekly chart. And if I look at the study of the relative rotation graph, this sector is entering from improving to leading quadrant, which clearly indicates that strength and momentum both are visible in the entire sector. And that's why we have preferred sector and stock in IT segment, which is buy on persistent system. One of the strongest name which has given a consolidation breakout of last 5 trading session. In fact, it has been making high tops, high bottom on the weekly chart, and the entire sector and most of the IT counters are doing well. In fact, the buildup of long position in last couple of days clearly indicate momentum could continue. So we are recommending to buy with support of 6120 for an upside target towards 6600 in the counter. Second trading idea, that is buy on Bharat Forge. We have seen a major price pattern in the counter. In fact, it formed a bullish pole and flag pattern on the daily chart, which has positive implication. In fact, higher tops, higher bottom on the weekly chart indicate bullish stance. In fact, the longs are adding with some call unwinding, indicate bullish stance from current zone as well. So recommending to buy with support of 1390, and this counter has potential to rally towards 1485 to 1500. Last trading idea, that is buy on MCX. However, momentum is slow, but strength is intact. And in fact, we have positive view on the capital market theme. So MCX anytime can see the next leg of rally by rallying towards 4 to 5%. I think 5-digit mark is likely to be soon. So one can buy with support of 9600. And this counter from capital market theme could head towards 10,000 to 10,200 levels.
All right, take that point, Chandan. Thank you so much for joining in. With that, we take another short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us. Welcome back. You're watching us here on Chartbusters. The Nifty Bank mildly under pressure. No real worries out there because it hit a fresh record high yesterday, day before, and has been continuously doing well. But no problem for the Nifty. Closing in on that 26,000 mark once again. It's been powered by the IT pack, the mid-caps as well, mildly in the green. With that, we'll leave you on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.
Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormiz Fatakia. Hey Hormiz, good morning. Seventh straight day where we are seeing some impact on the markets as we speak. The Nifty at 25,952. It's a 60-point cut as we speak. The mid-caps too down 0.6%. That's where majority of that impact is coming by. I think I have to refresh my rates.
Your rates need to
I need to refresh my rates because the Nifty is seeing gains 42 points. So basically the number is right, but just the up and down needs to be managed. But the mid-cap index, of course, that is flat with some negative bias right now. Nifty Bank too is down by 0.1% as we speak. A lot of moving parts. We do have a lot in terms of specific stock moves as well. So that should be something that should be on our radar. Other than that, if we talk about the mid caps, yesterday there was some impact. Today we have gainers in form of Avanti Feeds, which is up 9.5%, Latent Few Technologies 5.5% higher. In terms of the Nifty pack, of course, it's the IT pack which is doing really well, 3.5% higher there. We have that for HCL Tech. Infosys too doing well. TCS is the other one which is pushing the Nifty higher. So let's see whether we we are in the green today and end that way in trade today as well. But recovery is something that is under our radar. But let's go across to Hormuz. He's here with us to put spotlight on the top movers in the market. Hormuz.
Well, there are stock-specific actions aplenty, even though the index continues to face that 26,100 jinx as of now. We'll start off with some broader market names like Lakshmi India Finance. It's a recent listing. It's the second straight day of gains for the stock now, 8% higher in today's session, although the stock is still recovering from its previous three-day fall, the three-day losing streak before this, the stock fall around 15%. But the last 4 sessions has seen a very sharp surge in volumes. Close to 10 lakh odd shares traded every single day. Even today's session, we have had close to 10 lakh shares traded. The 20-day average here is only a lakh. And despite this move, the stock remains below its IPO price, which is 158. A news flow driven reaction, KEC International, although is continuing to remain around 6% lower, among the top losers on the Nifty 500 today. The biggest single day fall in the last 8 months for the stock, and it has been an underperformer in the last 3 weeks. As the last 19 trading sessions, the stock has declined in 16 of them. That shows you the underperformance that KEC has had. Today's session, 21 lakh shares have traded so far. The 20-day average is just over 3 lakh shares, so 7x its 20-day average, and the stock now is below all of its key moving averages and down around 40% year to date, making it possibly the first negative year that it might have after 2018. KRN Heat Exchangers is the other one. It's another recent listing, 6.5% higher today, snapped a 2-day losing streak. Volumes are the highest in the last 2 months. We had 15 lakh shares traded today. The 20-day average is just over a lakh, and the stock has moved above its 100-day moving average of 833. Still down around 15% from its 52-week high, but when you compare it from its issue price, which is around 220 rupees a share, the stock is up 4x. And lastly, Avanti Feeds. Well, all of these potential beneficiaries of the US-India trade deal are moving one day or the other. Today is the day of the shrimp names. Avanti Feeds is up for the 5th day, running 10% higher on the stock now. The volumes are the highest in nearly 3 months. We had over 30 lakh shares that have already been traded today. The 20-day average is only 2 lakh shares. The stock is above all of its key moving averages, and after a 60% surge last year, the stock has recovered all of those losses this year, and it's now up almost 22% on a year-to-date basis.
Okay, all right. Thank you so much, Hormuz, for joining us with all those names. But that's not it. There are other stocks which are on our radar. LG Electronics is in focus. There's a note which has come in from Morgan Stanley. Upasna is here with more details on that one. Upasna.
Well, Morgan Stanley has initiated coverage with an overweight rating and a target price of 1864 per share. It believes that the company stands out in many categories in a competitive consumer durable market. The revenue and margin is likely to be driven by company's new capacity addition and exports, and even its rising B2B contribution. Now, on the back of this, it has estimated earnings to fall by 9% on year-on-year basis in FY26, with a 16% earnings CAGR from FY26 to FY28 is what they are forecasted. Now, JP Morgan has also initiated coverage with an overweight rating and a target price of 1920 per share. It believes that the company is an attractive play on rising consumer discretionary spend in India, and it offers best-in-class with a superior execution as compared to its peers. It sees a gradual improvement in growth trajectory of the company, which will be mainly enabled by the improving macro tailwinds is what they believe. It further forecast a revenue CAGR of 12% and an EPS CAGR of 21% over FY26 to FY28. So all in all, both the notes are positive for the company, and we can certainly see the stock surging in trade today.
3% higher on LG, so positive. 12 analysts now cover LG, by the way, and all 12 of them have a buy recommendation on the stock. And Sudarshan is now joining him with yet another positive note that has come in this time around on 361 WAM. Sudarshan.
So Citi is open positive catalyst on this stock and target here is 1650, and that implies an upside of almost 50% from current levels. And the reason that Citi has given is recurring flows will benefit from the current momentum that we are seeing, especially in the primary market. Also in the last 2 to 3 quarters, core gross flows into wealth and AMCs have remained strong. That also is one of the positive things for 361. And net flows, though, were marred by attrition-led outflows and planned redemption in private equity that company had undertaken. And Q2 witnessed green shoots in the net flows, but Citi believes that company will surprise on positive side, mainly in Q3 and H2 of FY26. And also carry income and transactional revenue will likely remain robust. And on the valuation front, 28 times FY27 EPS as per Citi, that is encouraging as well.
Okay, all right. So that's 361 WAM. The stock is high at 2% in trade as we speak. But we'll do one thing. We'll slip into a short break. When we come back, we'll focus on the crypto market with Manisha Gupta on the other side.
Welcome back. The sell-off in cryptocurrencies continued, and Manisha is now here to summarize the latest from the crypto markets. Manisha.
Well, thank you for that. Absolutely. If you look at the month of November, all we've seen is decline almost on every single day when it comes to crypto as an asset class. When you look at Bitcoin then, well, we did see prices continue to decline. It actually has been trading below 100,000, traded below 90,000 at some point in time as well, holding around 92,000 as you can see, with 2.5% of a decline therein. Well, the crypto market cap overall has seen around $1.2 trillion of a decline in the last 6 weeks itself. We have seen Bitcoin come off nearly 30% from its all-time highs of 126,000. We've seen a low of 87,000 as well. And it has been a sharp decline, not just for Bitcoin, but various other cryptocurrencies as well. But when you look forward, and the kind of decline that we have seen, it's pretty cyclical is what the market says. It happens every 4 or 5 years that you have this kind of a crash coming in. And these perhaps are buying opportunities is what is being said by more than few people there. President Nayib Bukele of El Salvador says that the country has been buying Bitcoins and have bought Bitcoin worth $100 million in just one day. That has been a 17% increase in their holdings on a day-to-day basis, as you would say. So if you look at the overall holding that El Salvador has, the crypto reserve now stands at around $688 million worth. And overall holding by El Salvador of Bitcoin stands at around 7,474 Bitcoins therein. El Salvador, remember, also has been one of the initial countries which adopted Bitcoin as a medium of payment and in sense of crypto reserve within their forex reserves as well. So strong going on to that one. And as the president says, they are buying on these dips as well. Not just them, Michael Saylor of Strategies as well says that he's looking at Bitcoin prices continue to gain up, has been adding Bitcoin to the corporate treasury for a very long time now, and says that 200,000 is what you could see by 2026 end, and it's likely to hit $1 million in the next 4 to 8 years is also a statement coming in from him. Take a look at what Standard Chartered has to say about Bitcoin forecast going forward, and they anticipate a 300,000 of a target by 2026 end. Bernstein says 200,000 is possible for Bitcoin in the early part of 2026 itself. JP Morgan has put out a statement suggesting that 170,000 is what they're watching for in 2026, and a very bullish statement coming in from Fundstrat at 500,000 of a possibility in next 5 years as well. So as I said, there is a crash, yes, and a big buying opportunity according to many.
Okay, all right. Thank you so much for joining us with all those details, Manisha. That's the update coming in from the crypto world. But we'll slip into a short break. When we return, we'll discuss the India-US LPG import deal and a lot more in the oil and gas space with Dayanand Mittal from JM Financial Institutional Securities. Stay tuned for that. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Let's get in Dayanand Mittal, who is oil and gas and telecom research analyst at JM Financial Institutional Securities, to understand the landscape when it comes to oil and gas space and some questions on telecom sector as well. Dayanand, good morning. Thank you so much for joining in. Well, a lot is happening when it comes to the oil and gas space. The recent one being the India-US LPG import deal. Can you give us a sense of what it would mean for the country, especially OMCs? What was the sourcing so far, and how does it change things for them?
Yeah, good morning. Yes, lots happening in the space. This LPG import for the first time in the history. So instead of importing from Middle East, for most of our import requirement, they're diversifying to US, partly also to get India-US relationship back on track, given US wants India to import a lot of their energy, LPG, starting with LPG and crude for the moment. So from OMC's perspective, obviously, though we don't know at what price this LPG would come to India, hopefully it might be at some discount to the Middle East LPG prices. And this should help OMCs to reduce some of these LPG losses which they've been incurring over last couple of years. Already the losses have come down significantly because of the sharp fall in crude price and hence Saudi's LPG prices. Maybe this 10% import from US further helps to reduce those losses. So some marginal relief. I would not read much into this because we don't have much details about the pricing. But yeah, incrementally should look relatively small, kind of a slight benefit for OMCs, I guess.
But will that, Dayanand, help reduce the losses that the OMCs are facing currently?
So just to give you the context, so FY25 LPG OMCs were losing almost like 200 rupees per cylinder on LPG. That led to about 400 billion INR under recovery for the year. In 1H, that loss has already come down sharply to less than 100 rupees per cylinder. In 3Q or currently, the losses have already come down even below that. It's now only 30-40 rupees per cylinder, so it's not very sizable. So yeah, but even that can go down further, maybe with crude being soft, that we might be closer to the break-even level for OMCs. The import from US is only for 10% of our LPG imports, so obviously that way 90% still dependent on Saudi.
That's right. So, Dayanand, are we seeing any impact of reduced Russian crude imports in margins so far? Or do you think, considering that discounts had reduced, it wouldn't have much of a problem for these oil marketing companies?
So, my sense is if India and maybe China reduce Russian crude imports, then chances are discount might widen and not go down. And that's what we are also hearing a bit. The discounts have widened slightly from $3 to maybe slightly higher. But the quantum of crude that we used to import from Russia, about 30 to 40% for various refiners in India, my sense is it will go down maybe half of what they were used to import, given US will be US sanction on the two large Russian companies, Rosneft and Lukoil, which kind of largely produces and sells over 50% of Russian oil. So at least, and that comes into effect from 21st of November. So my sense is to stay away from those sanctions risk, few companies might decide to completely switch it off, and few might reduce it by 50-60%. So OMC's refining margin, or for that matter, all Indian refiners GRM were boosted by about $1 to $1.50 per barrel because of the Russian crude discount. So maybe that benefit get reduced to half. Maybe something like $0.50 would be the new normal in terms of the incremental GRM because of Russian crude. But good part is diesel cracks are very strong, so that largely offsets these concerns.
Fair, but Dayanand, you mentioned that the losses that these companies are facing with regards to LPGs, that might narrow down further. But from a consumer perspective, does this import from the US mean costlier LPG for the consumers? Because the transportation costs would be a lot higher from the US compared to, say, from the Saudi.
Yeah, so my sense is consumer prices may not move up. As you'll recall, last 3 years, there were 200 rupee per cylinder loss that OMCs were incurring, still they did not change the prices much because LPG continues to be a regulated product. So government decides the price and not the oil marketing companies. So even if because of this transportation cost, in case the LPG prices from US were to be higher than what they get it from Saudi, I don't think the end product price will change much. So because of transportation costs, maybe if OMC's LPG losses might go up or down a bit depending on the net delivered cost that US LPG costs us.
Quickly, Dayanand, if you can tell us what are the top picks, what do you make of city gas distribution companies? This time they did see some margin pressure. Do you think things could reverse for this particular space?
So overall on CGD space, we have a negative view, particularly on the CNG dominated companies, because this APM gradual decline is a key structural challenge which will keep margin and volume under pressure. So we have a negative view on the CNG dominated company, which is IGL. But given the stocks have corrected, so yeah, I don't see much downside on IGL from these levels. And plus they've got recent few reliefs in terms of reduction in the transportation cost, plus some rejig in the VAT on Gujarat, VAT on gas that is sourced from Gujarat. So maybe they have some margin cushion in the near term. MGL, we have an ad rating, but that's more because of valuation ground, given the stock has corrected quite sharply over the last 3-4 months. Our preference in CGD is more towards Gujarat gas, but that's more of a commodity call that we believe spot LNG price, which is key for Gujarat gas, that should moderate by end CY26, given almost 30 to 40% capacity addition is likely on the LNG export front, led by US and Qatar. So that should help Gujarat gas regain some of its lost competitiveness versus propane.
Dayanand, thank you so much for sparing time and joining us today with your views on the latest trends in the oil and gas space and, of course, the city gas distributors as well. But the latest in the Jayaprakash Associates resolution, creditors have unanimously favoured Adani Enterprises' bid. Let's go across to Ritu for more details on this. Ritu, tell us what you're picking up.
Well, yes, Hormaz, it is a big development in the resolution, the long-drawn, I should say, resolution of Jayaprakash Associates. And it looks like we finally have a winner because sources are telling us about 90% of the committee of creditors, which is led by NARCL, has voted in favor of Adani Group's bid to take over the company. And here's the key factor. NARCL alone controls about 86% of the total voting share in the COC. So its decision has virtually sealed the outcome of this, of this voting round. Now, some of the lenders, including SBI, ICICI Bank, for instance, that have sold most of their loans to NARCL, but they still held on to a very small exposure, together less than 3% of the total vote. They chose to abstain, but that didn't really impact the final direction of the vote. Now, as to why Adani won the lenders over, despite Vedanta offering more money overall, sources indicate it was the higher upfront payment in the Adani proposal, which was the clincher. Now, as we've been reporting, Adani Group had offered a total of 13,500 crore rupees, and that included about 6,005 crores as upfront payment to the lenders and another 6,700 odd crores after 2 years. So in net present value terms, Adani's offer was evaluated at around 12,000 crore rupees for the lenders. Now, Vedanta, on the other hand, had put forward a larger overall offer during the Swiss challenge process, which was roughly around 16,000 crores, but only 3,770 crores upfront and the rest over 5 years. Now, we do understand Vedanta tried to attempt to restructure the payment schedule such that it increases the upfront portion, but sources indicate that lenders and the resolution professional did not accept that change because the Swiss challenge window had already closed. So with the vote now complete, lenders are preparing to issue a letter of intent to the Adani Group. And next, of course, the resolution professional is going to file the application with the NCLT seeking formal approval to close the process. Now, keep in mind, JP Associates has claims of more than 57,000 crores. So, irrespective of which of the offers they've picked, and now it's Adani's, there is a steep haircut for them.
Okay, all right. That's an important update. Thank you so much, Ritu, for joining us with all those important details. So that's the JP Associate story. But with that, we'll move on and get in Jay Thakkar from ICICI Securities for a quick technical check on the markets. Jay, good morning. Thank you so much for joining in. Well, what are the next important levels to watch out for on the Nifty?
Good morning to you, Sonal and Humaz. 26,000, 26,100 range, that is very clear now, Sonal, on Nifty, because that's the range which Nifty has tested in the recent time for almost more than 5 to 6 times now, and it's not able to surpass those levels. In fact, in yesterday's weekly expiry too, if you see, Nifty did attempt to touch or take off those levels of 26,000 levels, but then it was not successful in doing so, and then we saw Nifty again slipping towards the levels of 25,900. So I think this range of 25,700 to 26,100 is what within which we expect Nifty to consolidate. Post which we would see a breakout on the upside. That is quite likely, and the likeliness is because of the two major reasons I would point out. One is the banking index, that is the Bank Nifty, which is very well trading above 58,000 to 58,500 mark. Until those levels are held, I mean, the overall trend for the Bank Nifty will be positive, right? And we expect that, if the private sector banks from here on bounce back sooner, then that will help the index to move on. The second factor would be the Nifty IT, which has so far been a laggard and was weighing pressure on the Nifty and was struggling to move higher. Now that has made a very strong comeback in today's trading session, by more than 2.5%, and most of the heavyweights within the IT names are now clearly forming a good base and forming higher tops, higher bottom. Along with that, we are seeing some short covering because that is where we have highest shorts. So if banking and IT, that is a 50% of the index almost, if that is looking positive in the near term, then the probability of this consolidating range, so not getting broken on the upside, is quite high.
What about specific stocks there?
Sure. So since I've named, Homers, I've named IT. So as a disclaimer, we would say that we are bullish on IT, and we might have recommended few stocks out of this to our clients as well. But then I think that TCS could be the stock of the series for December, and the kind of reversal which we have seen there. So on the upside, we are looking at around the targets of 3,400 to 3,500 in the near term, at least for the December series, and we believe that 3,060 now, 3,060 will act as a very critical support. So with that as a stop loss, this could be a good buy. The risk reward is favorable out here. And second buy recommendation would be, from the auto pack. Now, auto is one sector, which is continuously moving higher. And overall, I think that M&M, Mahindra & Mahindra, is one stock which we are bullish on. It's been consolidating in the range of say 3,700 to 3,750. I think on the upside, it can reach towards the levels of 3,900. One can place a stop loss below 3,640. So M&M from the auto and TCS from IT, I think these two are looking clearly bullish.
All right. Okay. Thank you so much, Jay, for joining us with those technical bets. With that, we'll do one thing. We'll sip into a short break. When we do that, here's some good news for our viewers. India's business news leader is now just a click away, introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
Welcome back. Still around 40 points higher on the index, continuing to remain around that 25,950 mark. Not much of a difference since from when we began the show. Take the conversation on the markets forward with Shahzad Madan, the MD and CEO at TCG Asset Management, who is joining in. Shahzad, good morning. Thank you for joining in. I was reading your transformative growth portfolio. You've mentioned that you're 87% invested around across 16 names as of last month. If you could first briefly take us through your portfolio construct, and then we go into your individual holdings.
So, Hormaz, thank you so much for good morning to you, and thank you so much for having me on the show. So we describe the TCG transformative growth portfolio as a high growth, high conviction portfolio. So what this is a private equity like investment approach. So what we're doing is, of course, we're investing in public stocks, all listed stocks. But the type of stocks which we do is what we seeking to buy those stocks which we believe can outperform the market and give meaningful outperformance over a period of time. If you look at these stocks, typically there's a lot of diligence which goes into it. It is very focused. Stocks, we take big bets in stocks based on a lot of the work we do, a great amount of diligence. We're ready to come in early and wait very patiently. In terms of the approach which we take, in terms of our buying our stocks, it's all bottom up. We are very selective in the way we create our portfolio. So the way we've created our portfolio is over a period of time on those stocks and at those prices which we believe there is a potential for return. So when you look at the way we've created it, it's not we buy stocks at prices which we are very particular on. I just add the following, that our stocks have showed, which comprise part of the portfolio, have showed well over 20% growth in the past. And it's our estimate that these stocks will grow at about 25-ish%. That's our internal estimates in the future. Stocks are trading at around 17p 2027 earnings, which we believe is given the earnings growth is reasonable. High ROE, that's something which we're very focused on, and very low debt equity. So if you look at it, in fact, most of our companies have negligible debt on their books. It's typically it's typically companies which are growing from their own capital. Another thing which is very distinct, it's very distinctive. There's not very much common with the index. So it's absolute bottom-up stock picking, which we believe can deliver growth over the longer term.
Okay, so when you're talking about bottom-up approach, so I would not ask you what you're making of the sector in which that particular stock is, but asking about your top holdings. You have Intellect Design, 8.7% weightage to that particular stock, DB Corp 7.5%. Let's start with Intellect Design. What do you like so much? You indicated that all these stocks will see 26% CAGR going forward, but why Intellect Design and not any other stock from the IT space?
Hi, Sonal. The way we see it, like we mentioned, bottom up, we see this is a company which is in the product space. It's been working on the banking and the financial services business for very many years, created a niche. And as they grow and as they get more into the sector, you can see that you're having increasingly far more of revenue which comes through from the, let's call it from the fee which comes on a steady basis. Consequently, what you're looking at is very steady earnings growth. We believe that when you look at this company over a longer term, given the valuations, very reasonable. You look at the and a very, very long runway of growth in this space. So this is not your conventional IT company. This is an IT product company, which we believe has a very long runway of growth, and consequently, it is our top holding.
Shahzad, I was very intrigued with Sonal mentioned DB Corp. Of course, the DB Group, of course, one of the largest circulations of newspapers in the northern part of the country. But with the advent of social media and with the advent of more digitalization of news, the print media space as a whole has taken a bit of a back seat. Even don't talk about these stocks a lot in general, be it DB Corp or be it HT Media for that matter either. So what is driving this conviction of yours on DB Corp?
Sure, lovely. Thank you for the question. So look at DB Corp. You're buying a stock which is a leader in its space. So in the Hindi heartland, by far the leader, right? Generates a lot of cash, high ROE, no debt on its balance sheet. Uh, uh, Normal growth over a longer period of time for the print industry would be around 7 to 8% earnings growth. They've delivered more than that in the past, but let's just say at least 7 to 8% earnings growth, a 6-ish% dividend yield. So you're already very comfortable in, from an earnings growth perspective. But what's very important, and this is really what the story is when we call it transformative growth, it's what's happening there. Look at the investment which they've been making over a period of time in the digital side. They've created extremely good digital assets over a long period of time. They've been investing, they've been expensing it through their P&L, everything out there, expense through the P&L. Subscription revenue is very small yet, but we believe it will come in. So over and above that, so this is something which is there. So this is the normal thing which you might get in terms of organic growth. But very importantly, there are two regulatory changes which we believe, have the potential to add a lot of value to the stock. One of it is the following, that today the bulk of the ad revenues go to the let's call it to the search engines, etc. Increasingly globally, there is legislation, and in many countries, not just developing countries too, there is legislation which is coming in place which says that they need to share the revenue with the actual content provider. That you've already seen that happen. You've already seen companies, search engines sharing revenues with the content creators. That's already happening. We believe that trend will only accelerate, and that will be very meaningful as it is overseas. Over and above that, also when you look at the AI, what's happening on the AI side, it's the same theme. Early days yet on that one, but this is what we mean that buying. This is the non-consensus view, coming in early, waiting patiently. We believe there is very little downside and potentially a lot of upside in this stock.
Take that point, Shehzad. Thank you so much for joining in. We wanted to ask about all the stocks, but I think that will be for some other time. But that's an interesting thesis, and we would like to know a lot more as well. But with that, let's move on and take a look at the markets. It's a 52-point uptick on the Nifty as we speak. Mid-caps have also seen some recovery from the lows. We'll see whether that continues or not. For now, closer to the day's high, that's where the Nifty is. The new listing, Tenneco Clean Air, that one is up around 24%. We have Avanti Feeds. We spoke about that stock, up 9% right now. Other names from the broader markets, you have South Indian Bank, which is up 3.8%. Ather Energy is up 2.5%. Bellrise Industries, that stock is up around 2%. So a lot of moving parts in the markets as we speak. Other than that, if we talk about some other buzzing names, Latent View Technologies is up around 6% Linde India is the other stock on our radar, up 4%. So be it earnings or not, there are some big movers in the markets that we should be putting our spotlight on. But let's get in Mangalam now. He's bringing us the latest trends from the F&O space this morning. Mangalam.
Well, it's, like a relay where the baton shifts from one sector to the other on the frontline index, and the Nifty continues to hold on to the green mark. And today, it is the IT pack. So if you look at it, the Nifty Bank has been doing the running for the last couple of trading sessions. The interesting thing about IT is that, India did not participate in the global rally that took place in AI because we didn't have any participation. But on the other hand, we saw a decline in the IT stocks because there was belief that maybe there could be an impact on the listed IT companies in India. Now that the global IT trade or AI trade is unraveling, India looks like it is an outperformer, and at the same time it's the IT stocks which are doing well. And typically when the large cap IT does well, the broader IT names do a lot better, which is why we are seeing a big move on L&T Tech Services, Intellect Design Arena, the names like Persistent, Coforge, First Source. Among the top 10 F&O gainers, 6 or 7 belong to the IT pack, the mid-cap IT pack in particular. Nifty Bank has had a strong run. So around that 59,000 mark, there is some sort of cool off, some supply after hitting a profitable, fresh all-time high over the last couple of trading sessions. The question is, after this pause for breath, does the Nifty Bank continue to move higher as well? And if the Nifty Bank and the IT index continue to move higher in tandem, then the Nifty would sustain above that 26,000 mark. If not, then the cool off that we're seeing from 26,000 to 26,030 thereabouts over the last few trading sessions will continue as well. So that's something we will have to monitor. The 25,900 put writers are fairly active, telling you 25,750, 25,800. All the options that expire next Tuesday are seeing some support here. But on the way up, 26,000 call writers are equally active. The only difference between 26,000 call writers of yesterday and today is that the ones who are writing that call today are hoping for some resistance around 26,150. Whereas the ones who were writing it yesterday, because it was expiry yesterday, they were hoping resistance around the 26,000 to 26,030 mark itself. Fresh long seen on HCL Tech. We've been talking about the IT pack, but other stocks are doing well too. So Sona, BLW, Max Health, all of them fairly well bid in trade today.
Mangalam, thank you for that update there from the FNO desk. Take a short break. Our big story on the other side. Stay tuned. Welcome back. And the big story, of course, is Grow. We've been talking about it ever since it listed, the 6th day of its trading, and surprise, surprise, or may not be surprise, but it's a 10% lower circuit now on the stock. The price band was revised today from 20% to 10%. And of course, as of yesterday's close, the stock was up 90% from its issue price. So now seeing a bit of a cool off from those elevated levels. And as of right now, at this price, there are almost 1.6 crore shares worth of pending sell orders that are still at the NSE as per the latest data as of now. What happened yesterday, of course, was a money control report that said that more than 30 lakh shares of Grow were pushed into the NSE auction window, which according to analysts that money control spoke to say that it is an unusually large quantity. Now, why did this happen? Now, this happened actually because there were traders who were projecting the stock, this post-listing rally to cool off a little faster than anticipated, and hence they ended up shorting the stock. But contrary to their expectations, the stock ended up rallying even further, and as a result of which they could not arrange for the delivery of those shares during the settlement day, and therefore the stocks were pushed into the auction window. Now, there are certain concerns with regards to Grow. Of course, the stock price surge aside, the fact that there is very little float in the market, most of it is still at the promoter level and is still locked up, so there is little free float. There has been this sharp run up, and historically we have seen that every time a stock has run up very sharply on within the first few days of listing, it cools off equally fast. The Urban Company being a case in point, the stock went up to 200, now it's at 130, 140 odd. Lenskart too made a post-listing high of 438, it's down around in today's session. Still both of them trading above their IPO price. It's just examples that I'm highlighting. These are some concerns, of course, not specifically applicable to Grow as well. The other important triggers that lie ahead, of course, first one being on Friday, the results that come out, and of course on the 10th of December when the 1-month shareholder lock-in period ends. So that will see more than 140 million shares free up for trade. So as of now, Grow, 10% lower circuit, more pending sell orders. It'll be interesting to see where the stock goes from here.
Oh yes, it has been the talking point since the time it got listed, right? Things are just, there's some or the other update every other day, let's put it that way. So Grow on our radar, 10% lower as we speak. But what we'll do now is look at the markets, and there is some further recovery that we are seeing right now. The Nifty is up around 66 points. We do have the mid caps, which are higher in trade as we speak. But we'll do one thing, we'll slip into a short break. When we come back, we'll discuss specific stocks and the market moves as well. Stay tuned for that. Welcome back. 60-point uptick on the Nifty. The Sensex is higher by 230 points. Mid-caps are also recovering a tad bit. But yes, Bank Nifty, that is the one which is under some pressure. But recovery is something that continues to remain the big story. We'll keep tracking that for you. But for now, it's a wrap on this edition of Trading Hour. Stay tuned. All the market action up ahead on Halftime Report.
Stocks stage a recovery after a weak start with IT leading the charge. Auto and consumer durables also eke out gains while realty and energy drag.
The surge in share price of Groww is the result of short sellers getting squeezed due to low float available for delivery, positions being auctioned on NSE, reports Money Control. The stock slumps as the frenzy fades.
KEC International stock slides after Power Grid bars it from fresh contracts for 9 months over contractual transgressions, and while a probe by the IT officials across Waaree Energy's facilities spooked the street.
Adani has pipped Vedanta and others in the race to take over JP Associates, with 90% of lenders voting in its favour. An LOI is expected to be issued to Adani Group soon for the resolution.
You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. Manglam Malu. With me is Ekta Batra as well as Vinny Motiwala as always. It's a nice shift of the baton which is taking place under sectors and which keeps the Nifty higher today, closer to that 26,000 mark once again. And the shift of the baton has been between the Nifty Bank as well as the IT index. So if you look at the Nifty Bank over the last couple of trading sessions, after hitting record highs, has paused for breath, whereas the IT index is doing a lot better. What can explain the IT rally? One, underperformance. Secondly, globally, the AI trade is unraveling. Remember when the AI trade was doing extremely well, we saw the IT index see a negative impact of that. So now with the AI trade unraveling, does focus shift back in favor of Indian IT or not is the big question. Mid-cap IT doing a shade better as well. So the IT index holding the Nifty higher. If the Nifty Bank comes back as well from the lows, then maybe the Nifty does go past this 26,000 to 26,050 congestion that we've been seeing over the last few trading sessions. Good morning. Good afternoon, rather.
Hi, good afternoon, Mangalam. Good afternoon, Ekta. So you covered up nicely in terms of the move that is coming from the banking side to the IT side. That's what we'll be keeping an eye out on. But apart from that, broader end of the market today is not doing that well, not as well as the Nifty, right? That's seen a good recovery. But mid-cap recovered from the day's lowest point, 0.16% gain there. Small cap, that's still in the red. So that's what we'll keep an eye out on. And because of that, when you look at it, the advance decline ratio is still a bit more in the favor of declines versus advances. So that is what we'll be keeping an eye out on as well.
Hi guys, yes, absolutely. We have the Bank Nifty, which could definitely do a little more work in today's trading session. So just about trading flat with a little bit of a negative bias. We do have a couple of the other US focused stocks which are doing well as well. So the pharmaceutical space, for example, Sun Pharma, which is higher in trade today, giving company to the likes of TCS, Infosys, HCL Tech. But nonetheless, we do have a whole host of stocks which are buzzing around within the broader markets. And this is our buzzing stock segment, which we're going to kick off the show with. Vivek is by the wall to tell us what he's tracking in today's trading session. Vivek, over to you.
Well, thank you so much for that. You know, have a look at the Nifty IT pack. Like you mentioned at the start of the show, all of the indices, all of the constituents doing very, very well. Infosys higher by over 3.5%, also aided by the news of the timing of the buyback. Persistent, HCL Tech, LTI, all of them doing very well in the session. The other stock on the radar, in the broader end of the market is Latent View. Again, seen as a play as far as the entire AI space is concerned. This particular name too higher by over 5%, one of the top gainers on the NSE 500 space. Policy Bazaar, this particular stock was under significant pressure, but in the last 2 weeks has recovered quite sharply. One of the top gainers as far as the F&O space is concerned, and the entire auto ancillary pack, hopes of a likely trade deal is something that is keeping these stocks buoyant in trade. Bharat Forge as well as Sona BLW doing quite well. On the other hand, Groww, is one particular stock that's seen quite a bit of a sell-off. We've been talking about how the rally was quite incessant, but today, this particular stock at the lower circuit. KEC International, the negative news flow regarding the barring of further bidding as far as Power Grid projects are concerned, keeping this stock lower in the session. Waaree Energies, you alluded to it, but the income tax searches is something that the street doesn't like. And keep an eye out on Cohance. This particular stock, especially post-results, has seen significant selling pressure. The downward move today continues. Also, the withdrawal of the guidance and trimming of the guidance is something that the street hasn't liked. That particular stock among the top laggards in the session today.
Right, Vivek, thanks a lot for that. So those are a couple of movers as we speak. All Cargo has some business update that is coming in for the month of October. CSF volumes is actually CFS, container freight station volumes. They're up 21% year on year, and month on month there is an increase of about 1% as well. But let's welcome our first management on the show today. Electronic Marts is the first management. Remember, the results were a mixed set, impacted by the GST transition, and the net profit also got impacted by an exceptional loss by fire. But more importantly, post the GST transition in the third quarter, the fourth quarter, how's business looking? Prem Chand Devarakonda, the CFO of the company, joins us. Thanks a lot, Mr. Devarakonda, for joining in. And that really is the first question. Has the transition post GST happened? Have you seen any impact on your product mix because of that? Are you out of all the earlier stock that you were looking to clear? And what does this do to the next couple of quarters when it comes to your revenue and margin guidance?
Good afternoon. Thank you very much for having me on your show. Post GST rate revision, there has been significant improvement, demand for the large screen televisions as well as washing machines. And we have to see the impact of this GST rate cut on the air conditioners in the next summer only, because this is the unseason for air conditioners. Then we have to wait and see the impact of this GST rate cut till February.
Okay, so till February, maybe you'll watch out for the GST rate cuts. But are you seeing any sort of an improvement there in terms of demand trends in Q3, at least what you're seeing right now?
There is significant improvement, especially for the last, especially for the last 4 quarters. There was a significant slowdown in demand for large appliances and televisions, and that has been seen an upward trend in the last 1.5 months. So that is quite encouraging to the industry. But air conditioner is another category which has the advantage of this GST rate cut. But during unseason anyway, this is a discretionary purchase. Even consumers will also wait till February.
We could see. What is the growth that we could see in Q3?
Growth, there is growth definitely, double-digit growth in air conditioner category as well. But volumes are not significant to have the benefit of that growth.
Okay. So volumes are not significant enough at this point in time. So, you have indicated that the northern part of the country has been a great market for you all previously. How did it do in this particular quarter? And what is your guidance going forward in terms of the north? Because you were looking to expand in terms of store openings as well.
Yeah. We are targeting about 30 to 40% growth coming in the north cluster. So that is the targeted, and we are on the track. By end of this financial year, we are quite confident of achieving close to 35 to 40% growth in north cluster.
Overall for the company, what are you expecting? Because when you started the year, you were targeting double-digit revenue growth, around 10 to 12%, with a 6 to 7% sort of same-store sales growth. First half of this year, if I look at your reported revenues, it's actually, just about 2% in terms of growth. So what's your full year target? What is it revised down to now?
Yeah. In the first quarter, we had a bad summer. As a result, there was degrowth, in double-digit degrowth in the first quarter. And in the second quarter, we just recouped a lot of things, what are the opportunities we lost in the first quarter. And by end of the first half year, we have marginal growth in the top line. And we are still targeting to achieve the double-digit top line growth by end of this financial year, which is subject to the early summer that we are expecting it to be sometime in the last week of February. If that happens, we are...
Right. Subject to early summer. Could you give us a sense of sales in the third quarter? Because, monsoons have extended now as well. At the same time, there is a second wind of sales that happens for ACs and cooling products. That doesn't seem to have happened right now. So you're stuck with stock from the summer, and now there is no second round of buying in the festive season as well. What makes you optimistic of growth?
It happened only with air conditioner category, whereas the other categories did exceedingly well. So for air conditioner, we have a little bit of overstocking than normal stock levels, and we are quite confident of liquidating the excess inventories by end of this December. So it is slowly moving, but there's movement in that category.
Okay. Well, sir, for FY25, you managed to record a revenue growth of around 11% odd. Your margins were at around 6.5% odd. Just give us a sense in terms of what the exit would look like for FY26 for you, and what might you actually build on in FY27?
FY26, there will be low double-digit growth. That is, we are quite confident of achieving that. For FY27, we are still targeting 15% year-on-year growth.
Okay. All right, so we're going to leave it on that note. Run out of time, but not out of questions. I'm sure we'll revisit a lot of the questions and get a check in terms of demand as the quarter goes by as well. Thank you very much for joining in and speaking with us. So that's Electronics Mart. That stock up around 0.2%. Low double-digit growth is what they are targeting for FY26, and they're building it up for 15% growth in FY27. We'll take a short break, but up next, we'll speak to Amey Chalke of JM Financial. He's the pharmaceutical analyst there from the JM Financial India Exchange 2025. Stay tuned. Welcome back. You're still tuned into a halftime report on CNBC-TV18. Well, it's turning out to be a session where we're just about, you have to say, a little higher for the markets, maybe a little better than consolidating with a positive bias at this point in time. So 26,000 for the Nifty, up around 90 odd points. Let's see whether we manage to build on gains. As of now, the advanced decline ratio still on the declining side. But let's focus on the pharmaceutical sector. We have Amey Chalke, who's the pharma analyst at GM Financial, joining in. He's joining in from the GM Financial India Exchange Conference 2025. Amey, thank you very much for taking the time out. If you could just start by giving us a brief in terms of what you thought Q2 was for the pharmaceutical as well as the healthcare space.
Sure. Thank you so much for inviting me on your show. So 2Q was largely as per expectation, and the hospital companies continue to perform well. So this is typically a strong quarter for hospital companies. In a pharma space, the companies have also reported largely in line numbers, including the large caps as well as the mid caps. CDMO companies, typically for 2Q is generally not a strong quarter for CDMO companies, but a couple of names have reported good numbers even in 2Q. And the momentum in the CDMO space remains quite strong, like the hospital sector. So overall, our pecking order in the space is hospital, CDMO, and then pharma generics.
Oh, so you're putting pharma generics at the end of the list. Can you tell us what is giving you that little bit of deterrence when it comes to pharma generics? Is it because of the Revlimid competition which is coming through, semaglutide which might actually see a lot more competition?
So you pointed out rightly that the Revlimid is big overhang for all these stocks. And even if for certain companies, the Revlimid might not be there, but there are other products which are large enough, which might go off in FY27. So almost 5 of the 6 top large cap companies in pharma generic space are likely to see a muted earning growth for next 2 years. And the valuations are not attractive enough for us to put a bet on pharma generic at present. Versus hospitals and CDMO space, you would see at least 20% EBITDA growth for next 3 to 4 years.
Okay, so you expect growth coming in from the hospitals and CDMO space. But, you did say that CDMO, some of the names have not managed to do well in Q2, right? Is there any sort of a worry that maybe one has to watch out for, given that now most of the pharma players talk about CDMO and how that's growing? Then not everyone is going to get those big wins, right? So then in that, how do you play the story? Is it just going to be the top CDMO players, big players, or maybe even the mid-scale level that you would watch out for?
Right. So CDMO, if you take example from China, typically the top 5 players are accounting for more than 50-60% market share. So it's basically the bigger players typically become bigger as the market gets developed in the CDMO space. So there are few names you have to pick and choose. We have come out with a CDMO report recently. You will get to know there that some of our top picks. And typically we are banging on the bigger players and bit of mid-sized players as well. Smaller players, you could get higher returns, but the risk would also be higher because CDMO is typical volatile sector. It is led by a lot of orders which goes up and down from quarter to quarter. So to manage that risk is a bit difficult for some of the investors. So yeah, so the bigger companies are better in my view.
How big is the semaglutide opportunity in India, and who do you think would be the bigger beneficiaries here?
So semaglutide opportunity, our rough estimate, even if you assume, let's say, 1 crore population start prescribing, using this product, maybe around 15,000 rupees, let's say, annual cost, if it comes down over a period of time. So this opportunity can as big as 15,000 crore in few years down the line. So at present, when generic competition will start next year, the prices would be on the higher side, but over a period of time, it will come down. But the overall market size would be upwards of 15,000 crore.
15,000 crores.
And who benefits the most from an investable standpoint, according to you, from here?
So there would be many players who would benefit. the leading top 5 to 6 players who are big enough in the diabetes space, they would generate a big size brands in this space. But there would be a lot of small scale player as well who would also be having multi-hundred crore brands in my view. Okay. There would be many players who would benefit from this industry.
How bullish are you on the hospital space in terms of incremental earnings, Ameya, now? Because on one end, you have the CGHS opportunity, which will come through. That'll probably start reflecting this quarter onwards in terms of revenue for companies where they do have larger exposure. But on the other end, they do have this niggling issue, which is, which continues with the insurance companies.
Sure. So we believe that the hospital space is still underdeveloped. There is a structural tailwind in terms of from unorganized to organized side. And these companies will continue to see at least 15 to 20% growth for next 3 to 4 years. And even at present time, people do believe that the valuations are on the higher side. But by the time we cross December, people will move to the FY28 numbers. And FY28 numbers, some of these hospitals are trading at around 20 times, and they are looking attractive in our view.
Okay, Amay, thank you so much for joining us this afternoon, giving us your view on the hospital space, diagnostic space, pharma space as well. Thanks so much for joining in. But on that note, viewers, we're going to actually slip into a very short break. And on the other side, we'll get you all the action that's happening in the world of F&O. Stay tuned in. Welcome back to Halftime Report on CNBC-TV18. Nifty as of now about the 26,000 mark. Around 100-point uptick is what we're seeing for the Nifty 50. Nifty Bank, that's moved to the green as well. So let's watch out for that one. Recovered from the day's lowest point. But let's go across to Mangalam, who's waiting at the FNO desk now to tell us what we should be keeping an eye out on here. Mangalam, 26,000 right now, but what are we watching out for?
26,000 indeed. The question is whether it sustains here or not. We've been talking about how the baton has shifted from Nifty Bank to Nifty IT, but turns out that the Nifty Bank, after pausing for that breath, has continued to move higher as well. And the last 20-30 points on the Nifty have been courtesy the Nifty Bank's recovery from the lows, which is now sitting with a gain of almost 50-odd points. We'll have to, keep monitoring the mid-cap index though, however, because despite the frontline indices doing extremely well, the broader market health is still in favor of declines than advances. So if you look at the advance decline ratio, the red line is still above the green line. So the green line towards the end of trade, if it's above the red line, we would call it a good session for the bulls. The mid-cap IT stocks, they've been surging as well. Typically, when the IT index surges, we have the mid-caps that do a lot better. So L&T Tech Services up 8%, Intellect up 6%. We have Birlasoft as well, which is up 4% as well. The only thing we have to monitor is if Nifty crosses this recent congestion zone that we've seen of 26,000 to 26,030. For that, the Nifty Bank has to gain a little more and the IT index has to hold on to its gains. And if that were to happen, then a lot of these call writers will have to run for cover. Bulls are betting on that. In fact, the 25,900 put, which has been fairly well bid, continues to be written a fair amount. So that's telling you that the support has moved higher. As we speak, the 26,000 put writers are also equally active. So we have about 1.6 crore shares on the 26,000 put, telling you that around 25,900 there is strong support. The 26,100 call writers are active. Now, earlier it was the 26,000 call writers which were active. Now, those guys have reduced their activity as the Nifty's crossed past that 26,000 mark. And the 26,100 call writers have come back into action, telling you that the resistance has moved higher from 26,100 to 26,220. So the market band is moving higher from what it was over the last few trading sessions. The only fly in the ointment from here on would be the put-call ratio. Because of this heavy put writing that we've seen and covering in some of the calls, the put-call ratio has moved towards the higher end of the range at 1.28 versus 1.02. So important for the Nifty to hold on to this range, moderate a little bit, and from there on move higher, giving a lot more room for improvement than where we are currently. In terms of stocks, it is IT all the way. So TechM is the one which is seeing some fresh long build up after not having seen a big move.
Okay, all right, Mangalam, thanks very much for that. So those are a lot of the stocks which are in focus on the FNO space. We'll take a short break, but on the other side, Manisha Gupta will join in. She's going to take us through what she's watching in the commodity space. She has Kunal Shah, who she'll be chatting with in just a short bit. Stay tuned.
Welcome back. Joining us on the show now is Kunal Shah. He's VP Head of Commodities at Nirmal Bang. Kunal, thank you so much for joining in. And I want to talk about metals right now because we started October stronger, November started on a stronger note as well. But the kind of profit taking that we've seen in the last week or so has been quite intense. How are you looking at overall markets, one? How are you looking at the macros to begin with? Because this whole idea about that the US data will start coming in, the US dollar strengthening, the rate cut in December perhaps may not happen. How are you looking at all of these news events?
Okay, so yes, in a shorter term, you've seen some negative flows coming from China. The China data was disappointing. That was number one negative. So second thing which came negative for some of the big mine like Grasberg mine of Indonesia, they are restarting their production. So that was sentimentally negative. And the third most important point is that we have seen lately the Japan's 30-year bond yield shooting up, 10-year bond shooting up. And that has raised concerns about the prospects of whether the easy monetary policy will continue or not. But I believe there is no way out because the Federal Reserve has just ended its quantitative tightening program. So going forward, irrespective of the fact that in a shorter term, whatever challenges continue to remain, the fact is the liquidity conditions are going to get relaxed. The US M1, M2, M3 are near their all-time high, and they are talking about starting to print more money going forward. So in a shorter term, the credit market were tight in the US, and we've seen Federal Reserve infusing cash in the system, infusing liquidity into the system. Going forward, we believe some of the other sort of stimulus is underway, like we've seen $2,000 stimulus, which Mr. Trump said. So I believe that we are going to continue, as far as macro is concerned, the liquidity is going to remain abundant, and there's going to be a relax. I have no doubt in my mind that they will not cut the interest rate. They have no choice but to cut the interest rate. Inflation, even if it is at 3%, they have to cut because they cannot service their debt at a higher interest rate cost. So the interest rate has to come down quite sharply going forward in the US and in other part of the Western central banks. So that all sums up to a fact that the macro is supportive for metals. Now coming to the micro, in micro, even though the production is starting for a lot of these metals, like in copper, Grasberg mine is starting. But the fact remains, China is likely to stick with the involution policy. And that means that the excess capacity in the metal sector on the smelting side is going to be weed off. So this remains the key reasons for us to remain bullish. And we continue to remain bullish because of these reasons. On the macro side, the environment will be supportive, and micro side, I think the excess capacity in China will be taken off. So I think the overall view, this dips, whatever you are witnessing right now, is an excellent opportunity
to keep buying.
And maybe perhaps 1.5, 2 months down the line, you will see prices.
All right. Kunal, you've said this before as well, that 2026 perhaps could be a year of metals. When you say that and when you recounted all of these fundamentals, which perhaps would be supportive going forward, what metal would you be most bullish on and why?
I'll be most bullish on copper for the very simple reason that the demand side, like the way we've seen in silver, the demand side of copper is getting brighter with the use of copper in the data centers, AI, everywhere. I mean, we are talking about big data centers coming up, so it's going to require a lot of power. And I think US, the way that data centers are growing, it will be very bullish for copper from the demand side. So US demand will grow by at least 5 to 6%. India's demand is expected to grow by 8 to 9% conservatively. So copper looks the most attractive. $10,000 copper, if you buy, I think by the end of next year, you will see copper at $12,500, $13,000 quite conservatively.
How about zinc? Because we've seen LME inventories decline quite sharply onto this one. Would you say that is the second one on your charts?
Yeah, so zinc too looks bullish because in zinc, the similar thing is happening. No new production of zinc is coming in last 3 to 4 years. A lot of smelters have cut down their capacity. So even though the China steel production is going down or likely to go down, but the supply side of zinc is shrinking, and hence we believe that we've already seen 15% run up in zinc prices in last 1.5 to 2 months. But going forward, this rally can continue another 15 to 20% upside. I will not be surprised.
Okay. All right, Manisha, thanks very much for that. So that's on the entire commodity space. Well, we need to take a short break, but we're going to be talking to the management of Sequence Scientific, Viyash Life Sciences on the other side on the NCLT clearing the merger of the two companies. Stay tuned. Welcome back. Well, let's talk about one specific company. Sequence Scientific is in focus as the NCLT has cleared Sequence Scientific and Viyash Life Sciences merger. So do note that Sequence Scientific operates in the animal health industry while Viyash Life Sciences is a pharmaceutical company. To discuss more on the business opportunities, we have with us Hari Babu, who's the Group CEO at Sequence Scientific Viyash Life Sciences. Mr. Babu, thank you very much for taking the time out. If you could just start by giving our viewers a brief introduction to what Sequent and Viyash are going to look like as a merged entity. We do have your numbers for the first half, etc. But because you are from the pharmaceutical space, Sequent is traditionally from the animal health space, just give us a breakup in terms of revenue. How much will come from animal health? How much will come from human health now? How much from formulations and API?
Sir, good afternoon. Thank you so much for giving this opportunity. So if you look at Q2 numbers, both companies, we are doing more or less same top line, 425 crores PH, and also 425 crores Sequent Scientific, which is animal health. When it comes to Viyash, the mix of formulation and API is 65% is API and 35% is the formulation. Same as Sequent is more or less 65-70% is formulation and 35-40% is API. So together, actually, API and formulation, it's a 50-50. So all Sequent as well as Viyash, API is 50% of the total revenue, around 425, and the formulation revenue is around 425.
Okay.
So coming to the business, sorry.
Go ahead.
Coming to the business, Sequent operate business. They sell APIs, they do formulation, they sell formulation in few markets, and also they distribute a couple of innovative products into few markets. And Viyash operates mainly selling APIs, and also we have formulation business in the US. We manufacture at the US, and we started doing a couple of CDMO business also. So that's a breakup of these two businesses.
So 5 years down the line, what will the company be known as? One, you are looking to change your name, but separately, are you going to be an animal healthcare business, or are you going to be a human healthcare business, or are you going to be both? And plus, are you primarily going to be a formulation supplier or an API supplier?
So we will grow both while growing human health. But next 5 years, we want to become one of the animal health company, leading company. So that's the top priority. We'll become actually a leading animal health company. So while growing human health. So of course, next 2-3 years, revenues are going to be 50-50, both API and formulation. Maybe 5 years onwards, where we are going to focus more on front-end formulation. So you can see the formulation growth from 4 to 5 years onwards. It will become full-fledged pharmaceutical company, both human health as animal health, but more focused on animal health. I see a lot of opportunity in animal health today. You see the pet care business growing, that's the highest growing business. Since we have multiple things, API, formulation manufacturing, and front-end distribution, that's the one area where we can differentiate and become one of the leading animal health players.
Pet care is something that, a lot of players are looking to enter as well. We recently had Nestle announce the incorporation of Purina in their own business. Godrej has a pet care foray, and as recent as yesterday, Reliance consumer business also announced its foray into the pet care business. So we take your point on the animal health, the opportunity out here. If you could give us some more numbers from here on as well, right? At what rate is your revenue likely to compound over the next 3 to 4 years? And between animal and human, what will grow faster? And between the two, which has better margins? So what will your margin profile, revenue profile, and growth profile look like over the next 3 to 5 years?
So we indicated to the market FY27, okay, we'll do close to 4,000 crores with 20 plus EBITDA. But next 3 to 5 years, the ratio between API and formulation may be more or less same, but 3 years onwards, actually going to grow formulation. Margins perspective today, if you see our human health margins are much better than Sequent. Sequent margins are growing continuously last 4 quarters. You can see margins are growing pretty well. Especially formulations are doing pretty good margins actually, both top line as well as bottom line. They're doing mid-teens to high teens. API business was a little bit stagnated. That's where we are going to focus. Next 2 years, Sequent API business also is going to grow. From 28 onwards, I can say, so we can expect minimum 20% CAGR top line growth year on year.
Okay. And, sir, margins that would be at 19%, is that sustainable? And also, what about the debt on the books? Where will that be?
So margin is pretty sustainable. If you can see last 4 quarters, both companies are continuously growing the margins. And especially we build mostly research-driven and more focused on the gross margin. That's showing our results. This 19% is pretty sustainable going forward.
Okay. And debt, what did you say about the debt?
Debt is today, BH is almost debt-free company.
Okay.
And with combined company now, we are at EBITDA to net debt is 0.7. But next few quarters, actually, we are going to substantially reduce debt also. Because our cash flows, actually, it's pretty good, both companies now. So next few quarters, debt is going to come down substantially.
All right. Thank you so much for joining us and giving us an outlook into the business. We'll be a 4,000 crore company by 27, but you are expecting more shift towards formulations at the same time. Will be very soon debt-free as well. We wish you good luck as a merged entity now. With that, we take a short break. And as we do that, some good news for you viewers. It'll be up for you here, which is India's business news leader, which is now just a click away. We introduced CNBC-TV18's all-new app, which gives you instant access to breaking news, in-depth articles, all the financial world updates at your fingertips. You can download the app from either the Apple Store or the Google Play Store, or just scan the QR code, which is up for you on the screen.
Welcome back to Halftime Report on CNBC-TV18. As of now, looking at the Nifty, comfortably 26,000. About that level is what the Nifty is. 110 points uptick for the Nifty 50 days highest point, almost 0.5% green. So very good recovery from the day's lowest point. Nifty Bank, that's moved to the green as well. So let's watch out for that one. Nifty Bank is holding on to 0.2% of gain right now. So look at the move that's come in, especially in the last 1 hour of trade. Broader end of the market too has seen a good recovery. So we have seen that recovery coming in, especially in the last 1 hour for the markets. That is what we'll be keeping an eye out on. And in terms of movers, especially in the last 1 hour, Schneider, that's the one that's seen a good uptick in the last 1 hour for almost 2%. We have Linde India, that has also seen very good gains in the last 1 hour. So we'll be keeping an eye out on that. But a recovery in the market, whether this sustains, is what we'll watch out for. But with that, we'll wind down this edition of Halftime Report. Thank you so much for tuning in. Up next, Business Lunch.
Stocks stage a recovery after a weak start with IT leading the charge. Auto and consumer durables also eke out gains while realty and energy stocks drag. The surge in the share price of Groww is the result of short sellers getting squeezed due to low float available for delivery and positions being auctioned on the NSE, reports Money Control. The stock slumps as the frenzy fades. KC International slides after Power Grid bars the company from fresh contracts for 9 months over contractual transgressions, while a probe by income tax officials across Waaree Energy's facilities spooks the street. Adani has pipped Vedanta and others in the race to take over JP Associates, with 90% of lenders voting in its favor. An LOI is expected to be issued to the Adani Group soon for the resolution. Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. The Nifty today is in familiar territory. It's the midweek session between the NSE expiry yesterday and the BSE expiry tomorrow. But for now, the index holding on to gains of 110 points at the highest point of the day. Monday's intraday high was 26,024. Yesterday's intraday high was 26,023, and currently we are perched at 26,019. So that's where the index currently stands, and today's intraday high was 26,031. So in familiar territory is what I meant by the index. The real challenge begins now as to whether this 26,000 level can sustain on a closing basis, more importantly, and then build on to those levels to first cross the recent swing high, which is 26,104, and then move towards the record high levels of September 2024, that is 26,277. What's leading the charge today is IT by a distance, and after all the sell-off, the AI-related sell-off on Wall Street, the Nifty IT index behaving as an outlier. Of course, a lot of the consensus view coming in that India could act as an anti-AI bet, and the Nifty IT index up 1,000 points, Infosys up 3%. The buyback opens tomorrow. That's the big trigger for the stock. TCS up 3, HCL Tech up 4. So all of the constituents of the Nifty IT index doing fairly well for themselves in today's trading session. But barring IT, there are a number of other stocks that are also in the news, and Upasna is here to tell us about all of those names. Upasna.
Well, good afternoon. First up, let me start with Azad Engineering. The company is in focus as the company has signed an agreement with Pratt & Whitney Canada Corporation for development and manufacturing of aircraft engine components. Next up is LG Electronics, 2 positive ICs. On the back of this, we can see the positive momentum seen in the stock. Now, Morgan Stanley has initiated a coverage with an overweight rating and a target price of 1864 per share. JP Morgan has also initiated coverage with an overweight rating and a target price of 1920 per share. Next up is 361 WAM. Citi opens a 90-day positive catalyst for the stock, and the target price for this one is 1615 per share. Next up is KEC International. On the flip side, the company has been barred from participating in Power Grid Corporation of India, and the exclusion period is about 9 months starting from 18th of November 2025. And lastly, Waaree Engineering also in focus as IT tax officials have visited multiple locations for an investigation. So we can see the stock trading negatively on the back of this. So all in all, these are the stocks on our radar.
Some important and interesting names. Upasna, thank you for that. The other major talking point, as has been the case over the last 6 sessions since its listing, has been Groww. And the stock as of yesterday's close was up 90% from its issue price. But today, after a weak start, has now slumped to a 10% lower circuit for Groww. That's the first fall that the stock has had since its listing. Of course, after the frenzied move over the first 5 days, the price band of Groww was revised down from 20% earlier to 10% currently. And as of right now, as latest speak, close to 2 crore shares worth of sell orders are still pending on the NSE as we speak for Grow. No buy orders correspondingly, but at these prices, there are at least 2 crore pending sell orders. Now, Money Control reported yesterday that almost 30 lakh shares of Grow were pushed into the auction window on NSE yesterday, and analysts that Money Control spoke to say that this quantity is unusually large. Now, why did this happen? This happened because the traders were hoping that this post-listing rally would fizzle out and the stock would move lower, and hence they ended up shorting the stock. But contrary to their expectations, the stock continued to move higher. And as they could not arrange for the delivery of the shares that were shorted, the 30 lakh shares were pushed into the auction window. And that is why this auction window was, the shares were moved into the auction window. Now, there are some concerns as well. Now, there is very little float in the market. That also explains these frenzied lopsided moves that you are seeing in Grow. Most of it with the promoters also locked up as well. There has been a very sharp run up in the first 5 trading sessions, and historically, stocks that move up so quickly, they do see a bit of a cool off. Urban Company is a case in point. The stock went up to as much as 200, now is trading at around 140, 150 levels. The Urban Company too went up to levels of 438 yesterday, trading with losses currently, but still above its IPO price. So these are some of the concerns. Of course, elevated valuations aside, that is of course been a concern ever since the stock began to move higher. But the next major trigger for Grow is on Friday. That is when it declares its results. It will be the first quarterly results that Grow will be declaring after listing. And then comes the 10th of December, where its 1-month shareholder lock-in will end. And that is when over 140 million shares will become eligible to trade. That is according to Nuvama Alternatives note. So these are the 2 important sessions to watch out for Grow, which is Friday is one and the 10th of December is the other. For now, a 10% lower circuit for Grow. More shareholders at these levels. Interesting to see where the stock goes from here. But primary market activity continues to remain abuzz, and the latest listing today was the automotive component supplier Tenco Clean Air. It was a strong debut, holding on to gains, listed at a premium, still holding on to gains of around 27%. Earlier today, we spoke to the management of the company and discussed about their growth outlook. Here's what they had to say.
We have very strong tailwinds. So one is we are sitting on the India Inc. story, right? So already 4 to 6% of growth we're going to see simply because of India's growth and the market growth rate. But beyond that, we have 3 strong tailwinds. One is content per vehicle growth from legislation, emissions legislation, and premiumization of shock absorbers. So from a clean air powertrain business, the legislation will help us, whether it's BS6 going to BS7, CAFE norms coming in, TREM 4 going to TREM 5, or on the premiumization side, because SUVs are getting premiumized very rapidly, and so the move from static to dynamic suspension is also happening very rapidly. So we expect to get a nice boost from growth from just pure content per vehicle increase. Exports is going to grow way faster, simply because we're starting from a lower base, and because the tailwinds within exports are so favorable to us right now. We think that we're going to be, again, I cannot give you the exact numbers, but very fast growth in exports. We are noticing that the end consumers and OEMs now want ride quality to be one of their key differentiators, right? And you can see that across all the Indian OEMs. So 95+% of the Indian market is conventional shock absorbers. Now we see, in fact, I would say even higher than 95%. But now what's happening is the market's moving very aggressively towards like frequency dependent damping, and I would say even more like, let's call it semi-active suspension to even active suspension. So I think that journey is helping our content to go from X to anywhere from 3X to 4X, and in some cases even 6X, depending on the kind of technologies being used.
That's the latest listing, Tenco Clean Air. It's a clean debut as well. It's a 27% gain from its issue price. Now, the latest on the Jayaprakash Associates resolution. The creditors have favored Adani Enterprises bid. Let's go across to Ritu for more details on this. Ritu.
Well, Hormaz, it is a big development, as far as the long-run resolution of Jayaprakash Associates is concerned. And there is a clear winner, with sources indicating that almost 90% of the committee of creditors, which is led by the National Asset Reconstruction Company, or NARCL, voted in favor of Adani Group's bid to take over Jayaprakash Associates. But keep in mind that NARCL alone controls about 86% of the voting share. So their decision alone seal the outcome, so to speak. Even though, a few lenders like SBI and ICICI Bank, for instance, we understand, which have less than 3% of the overall voting share, chose to abstain, but that didn't really impact the final outcome of the vote. Now, why did Adani win the lenders over despite Vedanta offering more money upfront, overall rather? For that, the sources indicate that, it is a higher upfront payment in the case of Adani, which was the deal sealer. As we've been reporting, Adani has offered about 13,500 crore rupees, which includes about 6,000 crores as upfront payment to the lenders and another 6,700 crores after 2 years, which means in net present value terms, lenders evaluate its offer at around 12,000 crore rupees. And Vedanta, on the other hand, had a larger overall offer, about 16,000 crore rupees, but only 3,700 crores as upfront payment. Now, we do understand Vedanta attempted to restructure its payment schedule such that it increases the upfront payment portion, but sources tell us lenders and the resolution professional did not accept the change because the Swiss challenge window had already closed. Now, the vote has been completed and lenders are going to issue a letter of intent to Adani Group. And next, of course, the resolution professional will place this approved plan before the NCLT for the formal approval. Now, remember, JP Associates is facing claims of more than 57,000 crores under the IBC. So even with this 13,000 crore rupee offer, lenders are staring at a steep 77% kind of a haircut.
Ritu, thank you for that important update there on the JP Associates resolution. Now, earlier today, my colleague Prashant spoke to Vishal Kampani, the Vice Chairman and Managing Director at JM Financial, from the sidelines of the JM Financial India Exchange 2025 on the Indian market outlook going ahead. Listen to what he had to say.
As I said, the word is horizon, right? What's your horizon? If you're really a long-term investor, which, retail in India is proving to be a smart investor using SIPs, taking a long-term view on equities, your returns will be very good as long as the economy is growing at 6-7%. We don't see any macro risk. There's stability. Foreign exchange reserves are almost 700 billion, right? Consumer, there are parts of the sector in consumer which is slowing down, but it's also slowing down because of competitive intensity, right? Yeah. So I think leverage in the retail or the individual segment is not that high. Next year, which is 26, 27, you should be seeing close to 14 to 16% growth in earnings. Today, India is in a place where we have a lot of different pools of capital operating at the same time, right? So where is this surge of IPO activity coming from? It's largely coming from the investments of private equity. You see, last 6-7 years, we've got almost $350-400 billion of private equity inflow into the country. Assuming these smart investors want to grow their money at 15%, right? Over the next 5 to 7 years, that's almost $800 billion to $1 trillion of exit value if these companies have been able to grow at 15%. Indian corporates have become careful in terms of doing M&A. You see, the returns from M&A generally in the last 15 years have not been great.
And we take a short break here on Business Lunch, but just as we do that, here's some good news for our viewers. India's business news leader is now at your fingertips, introducing the CNBC-TV18 all-new mobile app, which gets you breaking news, in-depth articles and financial world updates at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that comes up on your screen. Take a short break, but more on the other side. Welcome back. Now, US President Donald Trump said that he was speaking with various people about the Federal Reserve Chairman's job and had some unexpected candidates on the list of those who might replace Jerome Powell when his term comes to an end. Listen in.
Have you started the interviews for the Fed chair?
Yes.
Who have you interviewed?
I think I already know my choice.
Who is it?
Well, I liked him, but he's not going to take the job. He refused. You like Treasury better, right?
Much better, sir.
So we are talking to various people. And, I mean, frankly, I'd love to get the guy currently in there out right now.
Moving on to some other developments in the US, Saudi Crown Prince Mohammed bin Salman received a warm welcome at the White House. President Trump greeted him with a ceremony that featured marching bands, flags carrying horsemen, and a military flyover. The visit emphasizes deepening ties between Riyadh and Washington. This is the Saudi prince's first visit to the US since the 2018 murder of journalist Jamal Khashoggi. Addressing the media, Donald Trump has said that Saudi Arabia has agreed to invest $600 billion in the US and that Saudi was being designated as a major non-NATO ally.
I want to thank you because you've agreed to invest $600 billion into the United States. And because he's my friend, he might make it $1 trillion, but I'm going to have to work on him. But it's 600. We can count on 600 billion, but that number could go up a little bit higher. Yes, sir. I don't know. We'll see. But we appreciate it very much. So Saudi is going to be investing at least $600 billion, and that means investments in plants, in companies, money on Wall Street, and what it really means for everybody that really counts is jobs, a lot of jobs. Tonight, I'm pleased to announce that we're taking our military cooperation to even greater heights by formally designating Saudi Arabia as a major non-NATO ally, which is something that is very important to them. And I'm just telling you now for the first time because I wanted to keep a little secret for tonight. I just heard him say, oh, that's nice. That's another point you won today. And signing a historic strategic defense agreement, which we just signed a little while ago. So congratulations. It's out here.
Meanwhile, the Saudi Crown Prince said that the murder of the US-based journalist Jamal Khashoggi in 2018 was very painful and called the incident a huge mistake. Listen.
About the journalist, it's really painful to hear, anyone that been losing his life for, no real purpose or nothing illegal way, and it's been painful for us in Saudi Arabia. We've did all the right steps of investigation, etc., in Saudi Arabia, and we've improved our system to be sure that nothing happened like that, and it's painful and it's a huge mistake, and we are doing our best that this doesn't happen again.
We'll take a short break. More news and updates follow on the other side. Stay tuned. Welcome back. Now, Microsoft has announced a strategic partnership with NVIDIA and OpenAI rival Anthropic. CNBC's Steve Kovac gets us all the details.
Microsoft's getting into the mega AI deal game, the software giant announcing Tuesday at its annual Ignite conference. It has a new deal with Anthropic, where Anthropic will spend $30 billion on compute with Microsoft and NVIDIA. In turn, Microsoft will invest up to $5 billion and NVIDIA $10 billion in Anthropic. A source tells CNBC that new round of funding brings Anthropic's valuation to $350 billion. The deal extends what Microsoft's been working on for the last few years. Even though Microsoft's a major investor in OpenAI, its Azure cloud runs AI models from just about everyone. That means xAI to DeepSeek to Meta's Llama and now Anthropic. It's also another sign of the slow split between Microsoft and OpenAI after the two companies renewed their agreement earlier this month. Microsoft will start using more Anthropic technology in its own products. It's even using Google's Gemini AI in some cases now. The other major announcement out of Ignite, an AI tool called Agent 365. You can think of that as a dashboard that controls all the AI agents deployed across your company. But while Microsoft is seeing growth in its cloud business thanks to artificial intelligence, it still needs to sell more consumer-facing products like Agent 365, Copilot, and all the rest to justify its massive CapEx spending on artificial intelligence.
Now, in a defining moment in the world of art, a headlining artwork by Gustav Klimt, portrait of Elizabeth Lederer, became the second most expensive painting sold at an auction for a whopping $236.5 million, which is way past its estimate of $150. Even paintings are beating estimates these days. So that has been the trend in the second quarter results as well. Most of them at least did so. We take a leave on this edition of Business Lunch. We leave you with the Nifty still above 26,000. Don't go anywhere. Mid-cap radar on the other side to begin the final 2 hours of midweek trade.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. A green-looking screen, and we've seen that recovery that has come by from the lows of the day as well. Nifty, as we speak, is up around 100-odd points. We do have the mid-caps, which has staged a massive recovery. Bank Nifty is the one which is leading to the gains from the lows.
That's right. Good afternoon, Sonal. A significant recovery. We were concerned a little bit after the 6-day rally was tapped, but today we are back to winning ways. We have a lot lined up on the show, some important conversations as well that we will be having. So let's start off the top headlines. Market nears the day's high with IT leading the charge. Auto and metals also eke out gains, while realty along with oil and gas track. Mid-caps in line.
The KC International stock is under pressure after Power Grid bars it from fresh contracts for 9 months over contractual transgressions. Stock has slid nearly 6% in trade.
The Income Tax Department visits offices and units of Waaree Energies. The stock slumps 4%, even as the company says it is extending full cooperation to the authorities.
Azad Engineering signs an agreement with Pratt & Whitney Canada to develop and manufacture aircraft engine components. The stock is up 2%.
Automotive component supplier Tenneco Clean Air makes a stellar debut, listing with gains of over 25%. The management tells CNBC-TV18 they have strong tailwinds and premiumization will aid growth.
All right, those are the top headlines. We'll discuss some of these stocks in greater detail as well. For the Nifty, it's a 100-point uptick. We are above the 26,000 mark. We are higher than these levels as well. So there's a wee bit of downtick from those levels. But yes, from the lows of the day, that is a massive recovery that we are looking at. Mid-caps up 130 points. The Bank Nifty, which was in the red for a larger part of the day, that has also recovered and has led to the recovery that we are seeing in the Nifty as well. A lot of broader market movers, but Nifty IT is betting for the bulls. We have consumption names which are doing well. But yes, some downtick in energy and CPSE names. So we'll be tracking that very closely. But mid-caps, what a move there, Vivek.
Absolutely right. Some of the names you mentioned, have a look at some of the mid-cap IT names like Mphasis, Coforge, all of them doing very well, and LTI-Mindtree too surging towards the day's highest point. On the other hand, Tata Motors passenger vehicle, TMPV, that particular stock in the last half hour has slumped to the day's lowest point. But these names, along with a whole host of other names, is what Sudarshan has on his radar. He's standing by the wall to take us through the mid-caps that are moving around in this session.
What a move market has seen. All the frontline indices have seen a huge recovery from day's low, and it's similar for mid-cap index. Now just take a look on some of the stocks. So I'll start with the names which are under pressure. First on the list is KEC International after Power Grid has barred the company from its bidding process for next 9 months. On the back of that news, stock is down more than 7%. Another company is Waaree Energies because Income Tax Department officials of Income Tax Department made a visit for the survey, and because of that, stock is under pressure. LG Electronics and 360 ONE are reacting positively to positive brokerage notes. LG Electronics had two brokerages writing on the initiating coverage. 360 ONE had positive note from Citi. On the back of that, both these stocks are up somewhere in the range of 3 to 4%. LTI-Mindtree has expanded its collaboration with Microsoft, and stock is reacting positively, up more than 4%. Apart from LTI-Mindtree, all the other mid-cap IT names are also reacting very positively in today's trade. Take a look at LTTS, up more than 8%, Persistent, Coforge, Mphasis, Birlasoft. All these stocks are up somewhere in the range of 3 to 4% as well. And apart from mid-cap IT names, auto ancillary names are also trading with gains today. So Samvardhana Motherson up 3%, Sona BLW, Gabriel India, Bellrise Industries, all these stocks are up somewhere in the range of 3 to 9%. Only question is, are these names are higher in the trade on the hope of trade deal? We don't know the answer as of now. We'll have to wait for that. Also, some of the stocks that are reacting negatively on top of the list is Grow. After seeing a big move over the last 5 days, today's stock is under pressure, is at lower circuit, down 10%. And Anand Rathi is seeing rub of impact. It has recovered from day's low, but still down almost 1%. Physics Wala had a big up move after the listing, but today that stock is under pressure as well, down almost 7%. HBL Engineering and Rajratan Wire, these two stocks are also under pressure with big volumes.
Okay, some interesting names there. Thank you so much for joining us with all those details, Sudarshan. With that, let's move on. And it's a good time to welcome Sudeep Shah from SBI Securities for a technical check on the markets. Sudeep, do you think we'll remain at these levels throughout the session? What are the charts suggesting now?
Good afternoon, Sonal. Good afternoon, Vivek. Sonal, what I feel is that today's move, which is backed by IT, is a very, very welcome sign. Last few days, we have been seeing some reversal of AI flows from Nasdaq, and these IT stocks here were ripe for a rebound. So this from lower levels that has supported Nifty. So what we feel is that post that 6-7 day rally in Nifty, markets were taking support at that 25,800, 25,850 mark, and now that would act as a very important level going forward. So till the time 25,800, 25,850 is guarded, we feel that newer highs, swing highs closer to 26,200, 26,300 could be in the offing. And even for the bank Nifty, which has scaled up to newer highs, there also we feel that 58,400, 58,500 now becomes a very important support. Until 58,400 holds, we could see bank Nifty scaling up all the way up to 59,700, 60,000 levels in the coming few weeks.
Okay, Sudeep, good to see you. Sudeep, individual stocks that you're looking at in today's trading session?
Vivek, couple of them. The first one that is there on our radar is Axis Bank. Here we have seen some better relative strength in the last few sessions, while ICICI Bank, HDFC Bank is still on some kind of a sideways consolidation mode. Axis Bank has given a breakout on the weekly charts, and we feel that this can be bought with a stop loss at 1240 on the downside and upside targets of 1320. The second stock that is on our radar is Coforge. Here, the stock has given a symmetrical triangle breakout on the upside, and we feel that this could be bought with a stop loss at 1800 and a target of 1920, 1950 in the coming few sessions.
Okay, all right. Take that point, Sudeep. So some of these mid-cap IT stocks, they continue to be on our radar. And from a technical standpoint, as Sudeep states, are also looking good. But we'll do one thing. We'll slip into a short break. When we come back, we'll focus on KC International. Also talk about LG Electronics. These two stocks are on our radar today. Stay tuned for that.
Welcome back to Mid-Cap Radar. Well, KC International has tanked in trade today as the company has been barred by Power Grid from its tenders. Winnie joins in with more details.
Hi, yes. So KC is the one that's under pressure today, down almost 8% in trade. And like you mentioned, it's been barred from Power Grid for participating in any new tenders from them for a period of 9 months. And this is starting 18th of November. Obviously, why was this step taken? Because allegedly there was a transgression of Power Grid contractual provisions that were there, some bribery cases that were there. This happened in March 2025, and because of this, this bar is coming for the company. Now, obviously, in terms of details, why is this important and why is the stock falling? When you look at it in terms of tender pipeline, 1.8 lakh crore rupees is the tender pipeline. Out of that, in Q2 FY26, TD pipeline, that's TND pipeline, that's transmission distribution pipeline, is around 65,000 crores. Overall order book pipeline stands at 25,000 crores is the domestic one. So domestic is a big part, and in domestic, Power Grid obviously is one of the big clients for the company. So obviously the impact will come in terms of the future growth outlook of the company as well. The order book at 39,300 crores, of which the company said in Q2 FY26 around 15% was from Power Grid. Because of all these reasons, we are seeing that Power Grid isn't falling in trade. And obviously, key question remains that, current order book, what will that be impacted? Where orders have not already started being executed, then what is the concern on that front from Power Grid point of view? And future outlook, obviously, is a concern.
Okay, all right. That's about KC. By the way, there is again a sudden fall that we're seeing in the markets as we speak. So just watch out for that. When we started the show, the Nifty was up around 100 points. Now it's up just 77. So yes, there is some selling that is taking place from the highs of the day as well. Similar is the case with mid caps. It's up around 70 points, yes, but off the highs of the day. And this fall is also led by a lot with what's happening with the Bank Nifty. That's up around 50 points. But again, it is off from the highs of the day. In the Nifty pack, it's Ultratech Cement, Bajaj Auto, Maruti Suzuki, some of these names which are leading to the fall from the highs as we speak. So watch out for these names. For now, let's move on. LG Electronics is the other stock on our radar. It is in focus on the back of some positive brokerage notes. Upasna is here with more details on these. Upasna?
Well, there are two positive ICs on this stock. Now, first up, Morgan Stanley has initiated coverage with an overweight rating and a target price of 1864 per share. It believes that the company stands out in many categories in a competitive consumer durable market. On the back of this, it believes that the revenue and margin is likely to be driven by new capacity addition and even the export outlook of the company, and even heightened B2B contribution that the company is aiming at. It has estimated earnings to fall by 9% on a YoY basis in FY26 with 16% CAGR over FY26 to FY28. Moving on to JP Morgan, even this brokerage has initiated coverage on the stock with an overweight rating and a target price of 1920 per share. It believes that the company is an attractive play on rising consumer discretionary spend in India, and it offers best-in-class superior execution. It sees gradual improvement in growth trajectory of the company, which will be mainly enabled by the macro tailwinds going ahead. On the back of this, it has forecasted a revenue CAGR of 12% and an EPS CAGR of 21% over FY26 to FY28. So both the notes are quite positive, and we can clearly see the stock in a green territory today.
Well, thank you so much, Upasna, for joining in and taking us through what brokerages have to say as far as LG Electronics is concerned. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. Well, a very topsy-turvy ride for the Nifty because we saw that sudden fall from the highs, and now it's back again above that 26,000 mark. So we'll have to watch out whether this trend continues in the last 1 hour of trade, especially Nifty. It is significantly off the lows of the day, but at those levels, it's seeing some up and down. But let's talk about a lot of action that we've been seeing in the primary market. We have a new kid on the block. Automotive component supplier Tenneco Clean Air makes a stellar debut. Sudarshan is here with more details on the listing price, valuation, and what the company's financials look like. Sudarshan.
So Tenneco Clean Air has got listed on stock exchanges today, made a healthy listing at a premium of 27%. Listing price was around rupees 505 per share versus issue price of around rupees 397 per share. The company is a part of US headquartered company Tenneco Group and mainly has two verticals, clean air and powertrain solutions. That forms nearly 58% of revenue, and the second vertical is advanced ride technologies, which forms nearly 42% of total revenue. If you talk about the IPO details, it was 3,600 crore issue size. It was entirely OFS issue and was subscribed almost 59 times, and company had offered around 6.7 crore shares and had got bid for almost 400 crore shares. In FY25, revenue was down 11%, while EBITDA had increased by 33%, with passenger vehicles forming largest chunk of revenue with 63% share. Now, what's going forward? So, company is expecting export contribution to increase from the current level of 5%. Also, premiumization is going to aid the growth. And now, with change in the emission norms, company expects content per vehicle to increase. Let's listen in what management had to say.
We have very strong tailwinds. So one is we are sitting on the India Inc. story, right? So already 4 to 6% of growth we're going to see simply because of India's growth and the market growth rate. But beyond that, we have three strong tailwinds. One is content per vehicle growth from legislation, emissions legislation, and premiumization of shock absorbers. So from a clean air powertrain business, the legislation will help us, whether it's BS6 going to BS7, CAFE norms coming in, TREM 4 going to TREM 5, or on the premiumization side, because SUVs are getting premiumized very rapidly, and so the move from static to dynamic suspension is also happening very rapidly. So we expect to get a nice boost from growth from just pure content per vehicle increase. Exports is going to grow way faster, simply because we're starting from a lower base, and because the tailwinds within exports are so favorable to us right now. We think that we're going to be, again, I cannot give you the exact numbers, but very fast growth in exports. We are noticing that the end consumers and OEMs now want ride quality to be one of their key differentiators, right? And you can see that across all the Indian OEMs. So 95+% of the Indian market is conventional shock absorbers. Now we see, in fact, I would say even higher than 95%. But now what's happening is the market's moving very aggressively towards like frequency dependent damping, and I would say even more like, let's call it semi-active suspension to even active suspension. So I think that journey is helping our content to go from X to anywhere from 3X to 4X, and in some cases even 6X, depending on the kind of technologies being used.
Well, that was the management of Tenneco Clean Air. That particular listing doing very well, up over 27% in the session today. But again, an interesting story. The rally that the shares of growth saw today has halted, and in fact today is at the lower circuit. Hormuz joins in to tell us more and decode the fall that we're seeing today.
Well, after 5 days of frenzy, the rally in Grow has taken a bit of a pause in today's session. It's a lower circuit now for the stock. And of course, the price band after that 5-day move was revised lower from 20% earlier now to 10%, as a result of which this is a 10% lower circuit. And as of right now, at least 2 crore shares worth of pending sell orders are currently in place on the NSE for Grow at these levels as well, at 169. So more pending sell orders are in store for Grow. Now, what happened yesterday was a money control report where it said that at least 30 lakh shares of Grow were pushed into the NSE auctions yesterday afternoon, and that happened because a lot of the traders that had taken short positions on the stock, expecting that this post-listing rally will fizzle out very soon. Contrary to their expectations, the stock continued to move higher, and as a result of which, when they could not arrange for the deliveries of those shorted shares at the settlement date, the shares got pushed into the auction into the auction. Now, there are some concerns as well that lie ahead of Groww. Valuations aside, of course, that has been a point of talking ever since the stock listed, and it continued to move higher. So that is one. Of course, there is very little float in the market. That explains the frenzied moves on either side for Groww, and a lot of it is locked up. A lot of it lies with the promoters as well. And there has been a very sharp run up in the first few days of listing. Now, historically, stocks that have seen a very sharp run up in the first few days of listing tend to cool off going forward. Urban Company is a case in point. Of course, you're not trying to say that the same will happen to Groww as well, but Urban Company from shares from levels of 200 plus has now gone down to 140, 150, and that is another one. And the two major triggers that lie ahead for Groww, one of which comes on Friday when the company declares its results. That will be the first after its listing, and on the 10th of December when its 1 month shareholder lock-in comes to an end, where over 140 million shares will become eligible for trading, and that will see if there is some more supply that comes into the market, and it will be interesting to see what happens then. But for now, the first major trigger lies on Friday, a 10% lower circuit for Groww. It will be interesting to see where the stock goes from here on.
Okay, all right. That's an interesting story, and Groww has been in focus the day since it listed, and now for other reasons as well. With that, we'll do one thing. We'll take your leave on this edition of Midcap Radar, but do stay tuned. Your stocks when we return.
Hello, good afternoon. Welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. A look at the markets right now. The Nifty is managing to hold on to 26,600, and just around that level, it's what it's managing to trade at. So 100-point uptick for the Nifty 50 as of now. Good recovery from the day's lowest point. In the opening, it opened in the red, and then look at the recovery, right? So 26,000, no complaining there. Nifty Bank, that also has recovered from the day's lowest point. It was trading in the red and now managing to hold on to gains of almost 0.2%. That also is almost in the day's highest point. So actually, it's come off a bit the day's highest point, whether you look at the Nifty and Nifty Bank, but a very good recovery is what we're seeing from the day's lowest point. IT continues to be the top sectoral gainer today, up almost 3% in the trading session. So that is what we'll be keeping an eye out on. And the broader end of the market is also doing well in the trading session in terms of a recovery. So yes, that is what we're seeing, good recovery for the market. As of now, Nifty mid-cap, 0.2% of gain is what is there for the Nifty mid-cap. Small-cap is seeing a bit of a decline. So yes, that versus the mid-cap, small-cap is not doing that well. It had recovered, but now again back at the today's lowest point, 0.4% of decline. On that note, let's pull up that advanced decline ratio, right? Because as of 12/31, when I'd last checked, the declines were still more than the advances. As of now, again, declines are still more than the advances, and that gap again seems to be increasing between that green line and the red line. So that's what we'll be keeping an eye out on. But this is a show where we solve all your stock related queries, and we're going to be doing just that today with our experts, Saumil Mehta, head of alternate research capital market strategy at Mirae Asset Sharekhan, as well as Astha Jain, research analyst at Hem Securities, to answer all those doubts that you all have sent us. Saumil as well as Astha, good afternoon and thank you so much for joining us. Saumil, I do want to ask one question on the market before we get started with those queries, because 26,000, every time we touch it or just around that level, and then we see again a bit of a correction, right? When can one see that steady performance, and how important is this 26,000 level now for us to move forward in terms of an up move?
Good afternoon to everyone. Absolutely, I have the same question actually. But yes, I think the markets are still consolidating in that range, taking resistance at 26,000 levels. But I think the trend still remains positive and the sectors are doing really well. Bank Nifty is definitely doing really well. I'll be expecting a breakout anytime in the next couple of days, and I'll be expecting a target of around 26,300, 26,200 levels, which is the all-time highs. In the medium term, even above 26,900, 26,800 levels. So these are the levels I'm looking out for. But yes, I'll be looking for immediate breakout within the next couple of days. And the support is around 25,800 and 25,700. So yes, buy on decline shift the strategy, and Bank Nifty is anyways outperforming.
Absolutely. Okay, surely we'll be keeping an eye out on that. Though today Bank Nifty is not outperforming, Nifty 50 is outperforming, but otherwise Bank Nifty has been doing well. But yes, keep an eye out on those levels over there that Saumil did mention. But let's get started with those queries, right? We have Aswini who's writing to us from Chennai. She's holding 500 shares of Biocon. Price is 422 rupees per share. Wants to know the short-term target for Biocon. Astha, good afternoon. Biocon, what is your view coming in here? Biocon biologic side of the business has been doing well. We had seen some reports that came in as well in terms of Biocon and Biocon biologics. So what are you keeping an eye out on in terms of the short-term view for Biocon?
So, hi, good afternoon to everyone. Short-term view is not positive because there are reasons behind it. First of all, what we have seen in the growth of the company's result was mainly due to some product launches. But what needs to be seen is that despite such product launches, company was not able to show a strong boost in their margins. So now the question arises whether these launches are really helping company enough to boost their profitability as well as margins. So that is a question. Another thing is that, in fact, the company tries to pay its debt also from the QIP proceeds. So overall, I think we really need to see how these new product launches help the company in posting a good set of numbers going ahead. So short term, I might feel that there may be some more downside which can be seen in the stock. But in the long term, I think the stock can move upwards, provided if the upcoming results, that is Q3 FY26 will be on the higher side. So idea here is to wait for at least these results to come in. So I am recommending a hold on this counter with a price target of 440, although I'm giving a little more higher price targets from the current level. But I still believe that in the long term, definitely that will yield results. So just stay invested in this counter for the long term. Immediate target can be set at around 440 to 450 odd levels.
Okay, keep an eye out on those levels over there. Long term for Biocon is a better strategy than short term. That's Asta's view. Somil, what's your view for Biocon, right? Last 1 month, the stock has gone up 12%. YTD performance in terms of a move, 11% uptick. What are we keeping an eye out on in terms of short term as well as long term levels?
In the very short term, I agree. It's not looking good at this point of time. So the buy on decline should be the strategy in the medium to long term outlook. Now, the levels to watch out here on the downside would be around 405 in the very short term. But in the medium term outlook, to 380, 385 would be the levels I'll look out for. And over there, I'll be revisiting the stock. I think that will be the right time to go ahead and buy the stock. And my targets are above 465, 470 levels. So yes, buy in medium term outlook and in the long term outlook.
Okay, medium, long term, positive, but otherwise short term, not too exciting. Okay, let's move on to the next query. We have Sandeep, who's writing to us from Hyderabad. He's holding 1,000 shares of NSDL. This is at a price of 1,050. Currently, the stock is at 1,139 rupees. They're making a profit on this one. Wants to know if he can accumulate the stock at the current levels for the next 1 to 2 years. Asta, your view?
Yeah, view is positive. Definitely accumulation can be done in this counter at the lower levels. Although I'm keeping my price target at the initial level at around 1,200 to 1,250. Now talking about the fundamentals of this counter, fundamental seems to be okay because what we have seen is that definitely these revenue growth is helping the company in showing good profitability. And in fact, what we have seen that the management is also expecting some strong numbers going ahead. So their guidance is positive on the back of more retail participation in the capital markets. In fact, the digital adoption is what the management is doing in order to, raise the business prospects. And I think all these efforts which are taken by the management definitely will help the company in posting great set of numbers because ultimately these are the numbers who can drive the stock prices up and down. So idea here is to stay invested in this counter with a price target of 1,200 to 1,250 at the initial levels.
Okay, keeping an eye out on those levels over there for NSDL. And Somil, your view, can they look to accumulate more? And is this a correct level or maybe you expect some bit of a correction before it runs up?
I think the chart looks positive. I don't have much data, but the chart looks positive, and I'm definitely positive on the capital market theme, especially in the exchange-related stocks. NSDL, very specifically, I think the next level to watch out in the medium-term outlook would be around 1325, which is the previous swing high, and I'll be expecting a target of that probably in the 6 months to 1 year time frame, medium to long term. On the downside, there'll be very crucial support around 1,000, 1,050 levels. So accumulate would be my strategy.
Accumulate would be the strategy. So yes, there's no doubt about that. And the viewer can also look to accumulate. Let's move on to the next query then. We have Parag, who's writing to us from Navi Mumbai. He's holding 100 shares of ICICI Lombard General Insurance. Price is 661 rupees, making a good amount of profit on this one. Should they continue to hold or maybe time to book out some bit of a profit? Asta, your view?
View is positive, definitely. An idea here is to stay invested if he can wait for a medium to long term perspective with a price target of somewhere at around 2,250 to 2,300. Now, talking about the fundamentals of this counter, what we have seen a strong set of a number. In fact, if you see the trajectory of last 5 years, their earning growth has been very solid. I think it is more than 20% if I take up the last 5 years. So strong earning growth is what we are seeing. And I believe that this earning trajectory will continue to grow in the manner of around 10 to 12% in the coming years. Not 20%, but yes, 10 to 12% CAGR is what we are expecting for this company. So definitely we are liking the company's prospects and hence recommending a hold with a price target of 2,280 to 2,300.
Okay. That's the view there on the fundamentals, on the technicals. Samuel, what should the viewer do right now, right? Because they're making good amount of profit. Then are you being too greedy or should you continue to hold for higher levels?
I think I would continue to hold the stock. It is forming a small triangle pattern, and I'll be expecting this pattern to break on the upside. My view is positive, absolutely positive. On the upside, my targets would be around 2150, and then I think on the upside 2290 would be the next target. But I would hold on. If the trader is a positional trader only, if it is a short-term trade, I think this is the right time to book profits. But in the medium-term outlook, great targets on the upside.
Okay. So continue to hold ICICI Lombard. That's the view coming in there. But on that note, we're going to slip into a very short break. But here's some good news coming in for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screens. Welcome back to Your Stocks on CNBC TV18. Now let's keep it going with those stock-related queries for the day. We have KS Rao, who's writing to us from Andhra Pradesh. He says that he wants to invest in Eternal and Nestle, and he's asking how should he look at that? Should he invest at this level for both these stocks? Asta, firstly, your view, Eternal as well as Nestle India.
Yes, Eternal is looking good to us. So we recommend a buy on this counter with a price target of 330 at the initial level. Now, talking about the fundamentals of this counter is what we are seeing that their food delivery segment is showing very strong recovery. In fact, their quick commerce business is giving very good results on the basis of the strong execution capabilities. In fact, what we are seeing that they're increasing efficiency with the restaurant supply system also with which this company is doing. So overall, all these segments are performing very strong, and we believe that this counter is well poised to move till the level of 330 in the medium term. However, in the long term, price target can be set at around 350 odd levels. So yes, one can make a buy for this counter. Now talking about Nestle, Nestle is also looking good to us. First of all, would like to give the price target, which is at around 1400 to 1450 odd levels. Talking about the fundamentals, yes, FMCG counter is looking good to us. And what we are seeing that now this commodity-led inflation will definitely going to show some sort of recovery or a fall in FY second half of the FY26. So definitely that will help the company in posting good set of numbers. And in fact, the revenue growth in the domestic market is also very looking very strong. So Nestle is also looking good to us. So both these counters, one can make a fresh entry also. Price target for Nestle is 1400 to 1450 at the initial levels.
Okay, keeping an eye out on those levels over there. But what's your view on both these stocks, Somil? Eternal as well as Nestle?
Absolutely positive on both the stocks. My favorite pick would be Nestle at this point of time. Eternal, a short-term correction we've seen, but I think this is a buying opportunity. On the downside, 280, 285 is a very good level, a very crucial support. We've seen a gap as well in that area, and a weekly gap, which is a very good sign. And 285 would be a very good level to buy the stock. I would not suggest in the short term, but in the medium to long term, my target should be way above 360, 370 levels in the medium term outlook. So buy in the in a positional trade, not in a short term trade.
Okay. Keeping an eye out on that for Eternal as well as Nestle. Let's move on to the next query for today. We have Lav Kumar, who's writing to us from Nagpur. He's holding 200 shares of ABB India. Price is 6,300 rupees per share. He wants to know if he should continue to hold, sell or average at these levels. Asta, your view.
I'm just recommending hold at this point of a time rather than going for average, because I believe maybe we can see some more downside from here. So chances or the opportunity for doing average will be definitely, will he can avail those opportunity at the lower level. Now talking about the fundamentals of this counter, what we are seeing is that poor set of a number, and that is mainly due to the low or a less order inflow. I think the order inflow, if I'm wrong, if I'm right with my memory, it was lower than 3%. So the order inflow was lower, and that is why we have seen the company was not able to perform. In fact, the raw material cost was also high. But going ahead, now they are doing certain sort of capex. So I think those capex will definitely yield results in the long term. But yes, in the short term, we are not very much positive on this counter. So recommending a hold as well as buying at the lower level for the price target of 5,300 to 5,500.
Okay, and your view, Somil, coming in for ABB India, hold, sell, average, I know is not something you normally say, but hold or sell, what is it?
I'm negative on the stock. I would definitely a little negative. It's been below 200 daily moving average since December 2024, and it's been struggling to go above 20 and 40 daily moving average in the very short term. My targets on the downside would be around 4,600, 4,500 levels. So that would be a time to revisit the stock to buy again. But at this point of time, exit would be my strategy or avoid.
Okay. Avoid is also a word coming in there from Somil over there. But let's move on to the next query. Now, obviously, Ritesh Jain from Mohali is writing to us and he's asking about Grow. Now, this stock has done wonderfully since it's listed just last week. He's got 70 shares of Grow. Price is 148 rupees per share. The stock is trading at 169. Today is that one day when we're seeing that fall coming in after so many days of gain, right? So, Asta, your view for Grow.
Yes, we have a coverage on this IPO. We had a coverage on this IPO. We recommended subscribe also. But the kind of return it has given, in fact, we are also very much surprised. So now what I believe, when the IPO came at a price band of 95 to 100, it was at a price to earning multiple of 41. From there, we have seen a sharp rise in the prices. So now this price to earning multiple is going beyond 60, 65, which I think was the ideal one. So right now, what my belief is, yes, this company is, they have got a very strong hold. They are one of the top brokerages in the India and have got a very strong client base. But the kind of valuations now it is quoting, it seems to be on the higher side. My idea here is, although because right now on the fundamental basis, it is very difficult to judge exact number. But what I believe that this stock should not fall more than 150 to 148 odd levels. These are my calculations on the basis of fundamental. So right now, what I believe is that either he can book certain profit, or he can remain invested for the longer term. But yes, we believe that this stock has a potential to fall more from here, because what we feel is that 150 to 147 are the levels where where the stock can fall from the current level. So if horizon is long term, then remain invested. If the horizon is short term, then book some profit and remain invested in the partial quantity.
Okay, that's a view there. Somil, I know there's nothing to in terms of charts, but would you like to give your opinion, or would you like to hold your opinion right now for growth?
I think my opinion is positive, whatever I've heard. But the short-term support would be around 165, and the next support would be around 152. So these are the two support levels, and I think buy on decline should be my strategy.
Okay. Let's move on to the next query then. We have Uma Kapoor, who's writing to us from Mumbai, holding 150 shares of REC. Price is 491 rupees per share. Is it worth holding this stock now and stay invested in this one? Your view on this one, Asta?
Yes, one can remain invested in this counter, although what we have seen that the loan growth was not very encouraging. There were reasons behind it due to some prepayments or the repayments this company has done. So there was a muted loan growth which we have seen in this counter. But going ahead, we believe that definitely this counter will post very stronger numbers. There were certain reasons due to the numbers, due to which the numbers were not as good in the quarter gone by. Going ahead, we believe definitely they will be able to maintain their margin. So our hold is recommended from our side with a price target of 385 to 390.
Okay, surely keeping an eye on that. And what should the viewer do? Somil, your view, REC? Should they stay invested?
I think should stay invested. Already there's a correction, and there are multiple supports around 350 levels. So I think 350 level is very crucial for this stock, and I'll be expecting this stock to continue consolidating around this level. But I'm not seeing much, sharp corrections downside. In fact, on the upside, in the very short term, I'll be expecting a target of 400, which is a very good sign. And 200 daily moving average is around 400 levels. So that would be my target in the short term. And in the medium to long term outlook, I think the next target would be around 520, 540 levels. But that will take time. In the very short term, yes, positive right now.
Okay, thanks so much for that view there on REC, and thanks so much Asta as well as Somil for joining us on the show today as always and helping our viewers answer all those stock related queries. But with that, viewers, we're absolutely out of time on this edition of Your Stocks. Thank you so much for tuning in. Remember, you can always send us your queries on that email address that is flashing at the top of the screen for you all. So keep sending them us and we'll solve them on every Monday, Wednesday and Friday. Last set of trade is still left. Nifty is around the 26,000 mark. Is it going to be sustaining? We'll watch out for that, and for that you have closing bell up next.
headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Asian markets today have opened up a bit mixed in the trading session.
Supports here, 20-day both for the Nifty and the Nifty Bank, as we've highlighted. Those numbers have moved a bit.
Could see a good rebound in today's trading session itself.
25,900 on the Nifty. Nifty Bank is down 0.1.
The old business model that they've had for the longest time has to change.
Retail in India is proving to be a smart investor using SIPs, taking a long-term view on equities.
Good listing,
25-30% uptake in comparison to its IPO price.
The Nifty at 25,952. It's a 60-point cut as we speak.
Surprise, surprise, or may not be surprise, but it's a 10% lower circuit now on the stock.
We've seen that recovery that has come back from the lows of the day as well. Nifty, as we speak, is up around 100 odd points.
Good afternoon, hello and welcome. You're with us on Closing Bell, and it's turned out to be yet another good day for the market. Good because once again India is outperforming when the world is feeling very jittery about those Nvidia results, which will be the single most important cue today, rather tonight. We've outperformed. We managed to see that morning dip get bought into, and things are looking up on the green side, Nigel.
Well, that's right. I think bang on with regard to our morning chat, right? We had suggested that India could possibly outperform, like it's been the case in the last 5-6 trading sessions. Or if that AI bubble has to burst, we never participated on the upside. So that could actually be a blessing in disguise. And the Nifty Bank continues to power along, right? It started off in the red, and now that's at the high point of the day. 59,000 has crossed, 59,200 the last time I checked. Just one problem is the breadth of the market is still in favor of the number of stocks declining, but I think par for the course. Gradually, the broader markets will pick up once the headline index finds its feet.
Oh, absolutely. Well, we've got plenty to cover on the show, and we'll talk about that. But before we go any further, really the stock of the hour right now is Saman Capital. We should put it up on the screen, and we'll tell you more about it. We'll get Ashmit on the line. There is a court hit that's come the stock's way. And this is the court saying that the CBI will have to file a fresh FIR, and it'll have to come out with its own affidavit. In fact, actually, we have Ashmit with us, so let's straight away get to the story. Ashmit, this is a big knock because I'll tell you what, the market, with the whole brand identity change and all the reorganization, the market thought that all the regulatory and legal issues are behind Saman Capital. Today, we've learned that's not the case. Tell us exactly what happened in court.
Well, there is a fair amount of regulatory heat that's coming their way, and that's all on account of a Supreme Court hearing that took place this afternoon. The Supreme Court hearing was essentially of a PIL which had sought regulatory action. That PIL had cited a report filed by SEBI saying that the SEBI report very clearly elucidated how there were plenty of areas which required further investigation, which required further scrutiny, and to that end was sufficient for filing of an FIR. Now, this led to a whole round of questioning of the various investigating agencies. For one, as far as the CBI is concerned, here, their attitude has been called as a cool attitude, as a friendly approach that the CBI is taking to this entire investigation, which caused the Supreme Court to frown upon it and then ask the CBI to go ahead and to file an FIR to conduct a serious investigation and also to file a response to give their official stand. That's as far as the CBI is concerned. The Supreme Court also not very happy with the SEBI, the market regulator. When there was a meeting that was convened, there was a meeting that was formulated by the Enforcement Directorate. SEBI was hesitant to participate in that meeting. That again inspired some words from the apex court. The Supreme Court questioned why SEBI has double standards. Why, when the Supreme Court is giving jurisdiction to SEBI to investigate, why SEBI appears to be hesitant. So again, SEBI being nudged into a meeting with the other investigators. That leads to the Enforcement Directorate. The ED as well was up for some scrutiny. The ED clarified that they've done their bit. They've filed complaints before the EOW of Delhi as well as the EOW of Mumbai Police, but those complaints haven't been taken cognizance of, and that is what requires further scrutiny going forward. So to that end, the ED saying that, look, we'll put our house in order. We'll get all the investigating agencies under one roof, the ED, the CBI, SEBI, as well as the SFIO, and then we'll come back to the apex court and give clarity on the status of the investigation. So clearly, regulatory heat coming Samman's way. Supreme Court nudging the investigating agencies in that direction. The next hearing in this case, we understand, will be on December 17th.
Okay, so this opens up, a whole new Pandora's box. Ashmit, just to clarify, this was a fresh PIL filed, or was this in connection with an outstanding earlier old legal matter?
Well, this is a PIL that has been filed that was argued today, which raised some of these concerns, the legacy issues that have been affecting the company. And those were the very same issues that, in fact, were cited today. This was cited in conjunction with the SEBI report, which essentially added more fuel to the fire, so to speak, which allowed for the Supreme Court to take a strong position in terms of the need for further scrutiny, for further investigation.
Okay, all right, Ashmit, thanks very much for putting that in perspective. So it's very, very clear because the court has taken up multiple investigative agencies, taken up the agencies for their own role and why they have not been perhaps scrutinizing the matter as deeply as the court feels it is needed. And therefore, the market reacting 7% down on the stock. Ashmit, thank you very much for that. We have Mitesh joining in. Of course, we have to take the trading calls for the hour. But Mitesh, before we get to the overall market setup and the other calls, just a word on Sammaan, because the stock actually did really well, the last 2-3 months. From levels of around 110 or so, 112 or so, it had rallied quite sharply throughout September, October. Just purely on technicals, what would your advice be now?
Yeah. So I think, this looks like a deeper pullback to the rally which happened. As you rightly mentioned, it started from around 110 odd levels and went up to as high as about 190. Now, the key supports are placed around this 160, 155 zone. I think it might correct to those levels, which is another 7-8% from here. And then you would see stability and bounce back coming. So maybe a normal pullback going on in a slightly longer term time frame.
Okay, all right. A quick word on the Nifty itself, Mitesh. It's done very, very well. Today, at any point of time, if you bought, you've got 40, 50 point dips actually on the Nifty as well. But that's got bought into, and actually, as we speak, it's at the high point of the day. A view on the Nifty, where is it headed?
So I think, Nigel, we have been saying that we'll possibly be between 26,100 to about 25,750, 800. I think we're heading towards the upper end. 26,100 now is a identified supply pivot because we had about two tops being made in the last few days over there. So I think once you cross 26,100, then I think we are looking to retest the all-time price, which is about 26,277. And then we are in new territory. So I think the overall bias is on the upside, but yeah, you will have these levels to be cleared before we have the free run on the upside.
And Mitesh, what about stock ideas? What are you going with today? And just throw in a word on KEC International as well. Again, news, but the stock has been hammered badly, 10% lower. So word on KEC and your other trades for the last hour.
Yeah. So KEC, I'll take that first. I think, the last time the stock had corrected from 1260, 70 odd levels, it had come down to as low as about 660. I think we are heading towards a retest of those lows. In case you break that, then there's a good chance of that happening. Then I think the stock might even test 600. So there is more downside left over here. Though I think, with this kind of fall, there might be a few percentage point of pullback. I think that's when people should look to exit. On the trading calls, I have a buy on Policy Bazaar with a stop at 1829 for targets of 1900. And Lalpath Lab, I think that's come on the radar after a long time. That's a buy with a stop of 3200 for targets of 3310.
Okay, all right. Thanks very much for that, Mitesh. We'll come back to you in a bit for some more trades. Now, before we talk more stocks, let's actually move on to an important piece of news. And this is the pre-budget season building up. And ahead of the big event, representatives from the BFSI space met the finance minister today. In fact, what we're talking about is FIDC, the Finance Industry Development Council, a framework body of NBFC. So they had their own deliberations with the finance minister. Let's bring in Ritu to understand exactly what they are seeking. And then I think we'll have the FIDC representative with us as well. Ritu?
Well, that's right, Surbhi. FIDC, which is the SRO for the NBFC body, along with a handful of NBFCs, held a pre-budget meeting with Finance Ministry officials today, really reiterating what has been a long-standing demand for the industry, which is largely around a dedicated refinance window. FIDC, in fact, has highlighted several issues, that they told us about after this meeting with the Finance Ministry, including, the need for diversified funding sources, improved recovery mechanisms, some of the persistent tax challenges that keep coming up. So specifically, there were four major asks. One is, of course, apart from this refinance window, the second is, reducing the threshold limit from 20 lakh to 1 lakh rupees for NBFCs to enforce security under SARFAESI, which is what is already available to banks. The third one is exemption from TDS on interest income under Section 194A, as is available to other financial institutions. And lastly, to notify NBFCs for deduction in taxable income under Section 80E on interest in education loans. Now, what exactly is the significance of some of these measures and how will they move the needle when it comes to the NBFC sector? To understand why these measures are critical, joining us now is Raman Agarwal, the CEO of FIDC. Mr. Raman Agarwal, thanks very much for being here with us. To begin with, just briefly summarize for our viewers, what have been the key asks, ahead of the budget, and what has the response from the ministry been like?
Thank you, Ritu, for having me. Yes, as I think you very aptly summarized it, yes, it's been a long-standing demand. See, what we need to understand is that the NBFC sector has been growing. If you remember in the NBFC symposium, which was held in 9 July, Honorable Finance Minister herself had quoted that NBFCs today stand at 25% of the bank credit, and she set a target of 50% of bank credit by 2047. And NBFCs, loans to MSMEs, funding to green assets like electric vehicles, solar rooftops is well known. We are, in fact, leading players in this segments. So all in all, there is a strong case for making funding available to NBFCs. Today, the sources of funding are very restricted. It's majorly depending on banks, and the larger NBFCs do raise funds from the capital markets or the overseas borrowings. The large segment of mid and small size NBFCs are either dependent on banks or they borrow from larger NBFCs, which increases their cost of borrowing and which further manifests in their increased cost of lending. So I think what we are requesting here is that to diversify this, if there could be a dedicated refinance window, and we have a classic case of National Housing Bank, which refinances HFCs, and incidentally, HFCs is also a class of NBFCs, but we do not have this benefit for other NBFC segment. And in fact, this recommendation was made by the Parliamentary Standing Committee way back in 2003, that there should be a dedicated refinance institution. So that's the key ask, number one. Number two, on the SARFAESI part, when you said, while you aptly put it today, if you are to, we do not have any direct recovery tool. So if to enforce security under SARFAESI, we are required to have a minimum loan threshold of 20 lakhs. Everybody knows that the loans which NBFCs provide to retail loans are generally less than 20 lakhs ticket size. So we are not able to use SARFAESI. As a result, we are falling back on indirect recovery methods like filing check bouncing cases which are clogging the courts. So there is a very strong case to reduce this 25 lakhs limit to 1 lakh. So that's the second ask. The third, on the tax part, again, a very, very long-standing demand. Today, interest income for NBFCs is not exempted from TDS. So any non-individual borrower who borrows is deducting TDS on every EMI. Now, it's causing a huge operational nightmare. We presented a small data point that we collected data from 10 upper layer NBFCs. And as per this data, as on March 31, 2025, 3.3 lakh borrowers were there who were deducting TDS just from 10 NBFCs. Now, it is creating a compliance burden for the small-time borrowers. MSMEs, they have to deduct TDS, they have to timely deposit TDS, ensure proper quoting, etc. So this is, and no additional revenue to the government. Finally, as you rightly said, is the issue of notifying NBFCs for deduction under Section 80E. Interest on education loans taken by borrowers are deductible income for banks, but for NBFCs, they need to be notified separately, and only one NBFC has been notified.
Okay, Mr. Agarwal, we got those. Yeah, we got those, Mr. Agarwal. The question, especially on this refinancing window, really was, what was the response? I mean, like you said, since 2003, since that long it's been brought up. Was there any favorable response to this request?
See, let me put it very candidly. In such meetings, there's a patient hearing given. There is no response. Obviously, we will get to know whenever there is a budget exercise, budget comes. So it's all I can say is there was a patient hearing given by the finance minister and the team. So we hope for the best.
Yeah, got it. Just quickly before we have to let you go, Mr. Agarwal, we've been reading reports that a credit guarantee scheme of 20,000 crore could be in the works for NBFC MFIs to ease their liquidity crunch. Are you aware of this and the timeline, if you could confirm for us?
No, let me also clarify, we at FIC do not represent NBFC MFIs because we already have Sadhan and MFIN as the two separate SROs for them. So I think it would not be correct on my part to comment on that.
Noted. Since you were part of the meeting today. Sure, since you were part of the meeting, we were wondering if this came up as well. But thanks very much. Yeah. Thank you, Mr. Agarwal, for covering some of those important points for us. Thank you.
Okay. All right. Thank you very much for that, Ritu. Interesting subject. And we will see how many of these demands get a favorable hearing finally when we see the budget next year. Thank you for that.
Just one word on that Sammaan Capital. There's a bit of a bounce from the lows of the day because there's some clarification that's come about that the audit is clarified that the court has not expressed any opinion on the merits of the allegations against Sammaan Capital. So, that's what they're saying out there. It's with regard to the erstwhile entity. So all that, probability of, the deal going into a bit of a flux, I think there is some clarification that's coming out there. That's where there's a bit of a bounce on
From what I read right now, some of this is coming from, the online sources as well. It says the order, because the Supreme Court gave out an order today, it says the order, the court clarifies that we have not expressed any opinion on the merits of the allegations against Sammaan Capital. So whether or not there was wrongdoing, the court is not taking a view on that. The court has told all the regulatory agencies that they need to get their act together. A fresh, FIR needs to be filed. And all the regulatory agencies, which is CBI, ED and the others, and SEBI, they need to come back to the court with a fresh update. So I think it's status quo. The market, I think, is still, I mean, we have to bear in mind that the IHC deal, IHC had decided to invest $1 billion in Sammaan Capital. That was in October, the 2nd of October to be precise. That also was to trigger an open offer. And all of this, that $1 billion infusion in Sammaan Capital was subject to regulatory clearances, specifically from two regulators, the Competition Commission of India and the Reserve Bank of India. So we're trying, of course, we're working the phones, trying to get to the company as well, Sammaan Capital, because they alone can provide clarity on whether whatever has transpired in the court today, whether it has any bearing on the IHC deal, on the open offer or not. So I think while the market obviously is fluctuating because there's a lot of news flow, I think we just need some more clarity from the company itself, and that will be great.
Okay, all right. Well, let's get in Sudeep Bandyopadhyay, who joins in. Hi, Sudeep. Good afternoon. First, your view on Sammaan Capital. That big deal was announced. The stock had pulled back a little bit. And now you have this order that's coming about, which the street is getting a little bit jittery on. What would your view be? We already know that it's trading at less than 1 times book. I think the book had come down from around 250 to around 212 or thereabouts the last time I checked. But now this regulatory overhang again comes into picture. What's your take?
Well, I think the deal was a very good for the company, and we were all positive post the deal because the past legacy was kind of getting wiped out, and a fresh beginning with the support of a reputed investor. I think the market lapped it up, liked it, and there were a lot of buying. Today's development is definitely unfortunate, and I suspect this will put a kind of at least they will delay the process of open offer and related investments and things like that. So definitely it's a setback and a negative development from a Sammaan Capital point of view. So I have to be careful, and I will advise caution to the investors at this stage. I think things are fluid, though the Supreme Court has clarified that there is no opinion has been expressed on the merits of the case. But I think the regulators will be extremely careful while dealing with the open offer approval. So it's definitely going to get delayed because of this.
Okay, so that is Sammaan Capital. Stock is still volatile. The other headline maker of the day, Sudeep, it has to be grow, right? What else? Growing and growing and growing. And today, down circuit 10%. But then that's the market. That's how these, high-flying movers always move. Very volatile. What would your advice be to investors now?
Well, I think last week itself, I said that, I think it's a fantastic company. It's got a great business, great growth potential from current levels because of new businesses getting added, which will be revenue accretive and margin improving. but it was little too high and it went up pretty fast. So some amount of correction, profit booking, whatever name we want to call, was warranted, and that's pretty much what is happening. So if it corrects further, I would suggest that people having a long-term view should start buying. Look, I think Grow is the largest broking business with maximum number of clients. But that's not the end. It doesn't end here. And they are getting into lending against shares, which is good, very, very revenue accretive. They are getting into other adjacent verticals like wealth management and things like that, which all will add to the the revenue as well as profitability. So I think we will see a different Grow in a couple of years' time. So patient investors should get in, and these kind of corrections will be an opportunity for acquiring.
Okay, got that. Anything else, Sudeep, that stands out for you in terms of something that is looking good, something that you're looking to buy? KEC, case in point, you have a clarification that's coming in there. They're saying that it doesn't have any big impact in terms of the current operational performance, but clearly getting barred by, from bidding for the next 9 months by Power Grid. That's what's pulled the stock down by close to 10%. Initially, it was down 4-5%, but as the day has progressed, it's actually down close to 10%. And now the management has put a clarification on the exchanges as well. View out here?
Absolutely, Nigel. In fact, I was going to mention this even before you mentioned. If I have to pick up one stock today, that will be KEC International. Definitely, today's announcement by Power Grid is sentiment negative, and it has rightly affected the market today. But having said that, I think this particular Power Grid order, which bars them from participating in fresh tender for next 9 months, will not have any material impact on their revenue and profitability, in the current year as well as the next fiscal. It will have some impact, but that is small, because if you look at their order book, I think the private sector order has been growing much more faster than Power Grid orders, and Power Grid order as a percentage of total order has been continuously coming down. Having said that, I will definitely say that today's development is not good for the company. They need to do whatever necessary action for ensuring that there is no repeat of that, but it will not have a material impact. And considering this fact, I think today's correction is definitely an opportunity for looking at buying and building a position. Even if somebody is not going to buy today, considering the volatility, they should watch this space and maybe take a call in the next couple of days.
Okay, all right. And one man's pain could be another man's gain. That's what PL is pointing out. Prabhudas Liladhar, a note that just came in there. They're saying that a potential beneficiary of this could be Kalpataru projects, because that's the one that bids for some of these, Power Grid projects as well. So could explain why Kalpataru actually is up a little bit. It's up close to around 1.3% or thereabouts. But Sudeep says that for KEC, this could actually be an entry opportunity. Thanks a lot, Sudeep, joining in, giving us review on a lot of stocks. Wishing you a good rest of the day. Catch up later this week. Well, we'll slip into a short break. When you come back, we'll have Nitin Bhasin of Ambit, who will be joining in to give us his view on the markets, what he likes, dislikes, and how does he see the structure of the market shape up. Welcome back. Markets continue to hold its ground. We're up 150 points. Wow. Just imagine that. Markets holding on to gains as we speak. And KEC, as I had mentioned, there's that clarification that comes out there. They are saying they don't foresee any material impact on its ongoing operations with regard to the financial position. And they're confident that they're going to go ahead and achieve the guidance that they have been talking about. For the time being, the stock is still down 10% because more than the numbers, this is a sentiment negative, right? Being barred for 9 months from bidding from one particular company, which is Power Grid. That's where the stock is down 10% or thereabouts. We are in touch with the management and hopefully we can get them to come and clarify on their stance and whether or not there is hope of actually getting this debarment, pushed behind. So let's see how that goes as well. For the time being, a bit of a recovery from the lows of the day. They're confident of achieving the annual inflow target. So that's positive. As promised, let's welcome Nitin Bhasin, Head of Institutional Equities at Ambit, who joins us on the show. Hi, Nitin. Good afternoon. Good to see you win. Earnings season has just ended. What is your view? Was it better than what you all were expecting? Actually, expectations were very, very low. So what's your take with regard to the past earnings season? And are you all optimistic that earnings starts recovering from here on?
Hi, Nigel. Thanks for having me here. Clearly, yes. How we began the quarter, perhaps where was our expectation. I think I would say that we're positively surprised, more so especially in the mid cap and the small cap earnings growth, in excess of closer to about high teens or mid teens for both of the categories of cohorts are much better, I would say, where we were landed up at the end of the quarter versus where we started the quarter.
Nitin, but having said that, from what I gathered out of one of your recent notes, it was the coffee can note that I was, reading and looking through the strategy ahead. You folks still seem cautious on the market. And if I got it correct, at least in the large cap space, you think maybe, there could be consolidation, mid caps. Again, if I read the latest note, that's the caveat. But are you expecting, potentially some correction in small and mid caps ahead?
So I think, bringing you back to what we were saying for the last 1 year, now closer to about 13 or 14 months, that we believe that market is in a stage where we see consolidation, or let's say we say rise in concentration, where we believe the top 100 stocks and within that the mega caps outperform the other indices. Not to say that every stock from the mid cap and the small cap has to underperform, to say cohorts, the next 150 after the top 100, the next 250 after the top 250, the mid cap or the small cap, what you call it, as indices, could actually not be that, underperformers in the times to come. That was our view 14 months back, and that is our view today also. We continue to prefer large caps or within that mega cap companies. And I think to some extent that has played out over the last 1 year. But yes, if the trend of this quarter, where we saw mid cap and the small cap earnings come back or surprise positively, if this continues, perhaps we will have to reconsider our view, because our view was also based on the point that relative earnings growth of the large caps, or the share of earnings in the overall earnings of the large caps is rising faster, and hence the market should large caps.
So Nitin, just to close this loop, at what level of earnings growth will you probably revisit this overall cautious call on the market, especially SMIDs? What are you penciling in right now? And at what level will you perhaps need to take a relook?
I think I would start looking at the revenue growth, because margins can come sometimes for the input. Margins can come sometimes for the base level growth, also how the last year's base was. We continue to see that in the case of SMIDs, the revenue growth is not still crossing 8 to 10%. And you got a very good quarter of 24%, or let's say 22% earnings growth in mid or small in certain cases, and 16%. If I see that revenue growth is also accelerating, perhaps we will start revisiting or actively reconsider our call.
Okay. Got that. Nitin, just stay on. So we've got your overall market sense. Now we want to understand how to play the market in this current environment. But before that, very quickly, let's see what's buzzing on Hormaz's stock list. Over to you, Hormaz.
Oh, well, a lot of interesting names in today's session, leading with the IT names, of course, leading the gains on the market today. And L&T Tech is among the top gainers on the IT stocks today, 9% higher on the stock, the biggest single-day gain since May. Today's volumes are the highest since January at the start of the year, and almost 81 lakh shares shares have been traded on the stock. The 20-day average here is only 57,000 shares. So very significantly high volumes on the stock. The next level on the upside is the 200 DMA of 4407, which it has very convincingly crossed as we speak. The stock still down around 7% this year, was down 9% last year as well. You spoke about KEC International, the top loser on the Nifty 500 today, the biggest single day fall since June of 24. The stock has declined in 16 out of the last 19 trading sessions. It's got the underperformance right from the last 3 weeks now. We had over 60 lakh shares that have been traded on the stock. The 20-day average is around 7.5 lakh shares. The stock below all key moving averages and is now poised for its first year of negative returns after 2018. Now, Linde India is the other one making a move on the upside today. It snapped a 4-day losing streak in the 6.5% up move. Then this too has been an underperformer in the last 3 weeks. At 12 out of the last 17 sessions, the stock has declined. Today's volume is the highest since June, with close to 2 lakh shares that have been traded on the stock. The 20-day average is only 23,000 shares. And despite this move, the stock remains below all key moving averages, but has turned positive for 2025, but is down 40% from its May 2024 record high of close to 10,000 rupees. And lastly, Gabriel India was under pressure in the last 6 days. The stock is now up 11.25% today, and it's declined 22% during that 6-day losing streak that the stock saw. The third straight day that the stock has seen 20 lakh or more shares traded in a single day. Even today, they had 23 lakh shares traded. The 20-day average is just around 3 lakh shares. And the stock, despite this 6-day losing streak that it had, is up 130% in 2025.
Okay, all right, got it. Thanks very much for that. Hormaz, lots of buzzing stocks there. By the way, the stock on your screen, that is now, I think, in a down freeze. Saman Capital, let's pull up the intraday chart. I think that is the 10% down circuit, a down freeze on Saman Capital. So that's what's playing out. Remember, why the market is getting very, very jittery is, and we're not speculating on this, it's just a question in investors' mind. Yes. What happens to the deal? The IHC deal, that is the biggest
Does it go in doubt? That's the only thing.
Yes, because I mean, the deal was announced on the 2nd of October. Now, here's the timeline. There was an open offer that was supposed to come in at 139, right?
Yes.
139 rupees a share. The deal was subject to regulatory approvals from RBI and CCI. Now, as an investor, the market, I mean, anyone would feel jittery that will they walk away from the deal? Can they? Was it a completely, closed, binding contract or not?
Correct.
Though, once again, to reiterate, today the court has said absolutely nothing in terms of whether this listed entity is in the grey or is in any amount of wrongdoing. Nothing of that sort has come from the court. But what the court has said is that it has galvanized all the regulatory agencies, including the ED, including SEBI, including CBI, to, basically get their act together and that fresh FIR that needs to be filed. So basically, it seems to be opening a Pandora's box, and therefore, I believe the nervousness.
Absolutely. The management, should actually join and clarify the stance and what they believe actually as well. But we'll have to keep an eye on that. For the time being, pending sell orders, stock at lower freeze. But let's get back to Nitin Bhasin. Nitin, I wanted to ask you about these FI flows. I think in our interactions earlier in 2025, there was some optimism. I recall you had gone to the United States, you had met a clutch of foreign investors. People like the story, but they don't want to come in. What's going on there? I mean, when will they show us the money?
I think India has been one of the great stories for most of the global investors investing in the emerging markets. In the last 1 or 2 years, the domestic money, perhaps the kind of flow we've seen, has made valuations a little bit of a concern for the foreign investors. You go to most of these investor conferences, and everybody's excited to be part of that, listening to stories, listening to opportunities. And especially what excites them is these new businesses of India getting listed, such as Grow, Physics Wala, Urban Company, the Swiggy, etc. So, but at the same point in time, many companies in India trading north of, let's say, 30-35 times 12 to 24 months forward. I think valuations are keeping them away. And that's why you can see FIs participating more in primaries and being net sellers on the secondaries in the market. So I think valuations is the only pushback that we see from the FIs right now. I think we'll have to wait for a while before the FIs become net positive in India.
Okay, so Nitin, then against the backdrop of your overall slightly cautious approach to the market, leave us with the broad portfolio construct now. I mean, you like large caps and mega caps in particular. But within that, what's the order of preference? Consumption, consumer, finance, what's the order?
I remember, last time also giving a little bit of a contrarian view that we believe for the last 3-4 months that IT is a beaten down sector. And one should be actually looking at IT services. One should be looking at pharma / healthcare. One should be looking at FMCG. And that's what we've noticed in the recent quarter gone by also, where discretionary consumption versus stable consumption, the trends look a little better on the FMCG / rural, whether it's GST, whether it is effect of monsoon. So we've seen that such periods of rising concentration and where market prefers large caps, they tend to gravitate towards IT services, pharma, FMCG. Those could be one. But we are seeing also certain signs of the globals moving their portfolios towards cyclicals, such as banks as well as oil and gas in certain cases. So whilst one should be looking at those three sectors, but FIs seem to be positioning themselves for cyclicals rather than defensives right now.
Okay, we'll keep that in mind. Nitin, thank you very much. Great conversation as always, and we look forward to connecting again soon. For the time being, the market continues to hold on to its momentum on the upside in an otherwise careful environment. India standing out, 140 points nearly up on the Nifty. But Nigel, what's happening in the F&O space?
Well, actually, it's a good-looking screen, right? If you just take a look at it, the way the Nifty has moved, it's been very, very heartening. And that 20 DMA has got defended yet again. So that's been an encouraging sign. Even if you look at the Nifty and the Nifty Bank in this month itself, you'll see the way the Nifty Bank actually has outperformed the Nifty just in this month. So one positive is the Nifty has held on to that 20 DMA. And the second positive is the Nifty Bank continues to lead the way, and that's outperforming even in today's trading session. Let's pull up a couple of strikes then that we're looking at. There is put writing that we're seeing at around the 25,900, 25,800 mark as well. Good amount of open risk built up, and the premium has crashed by close to around 40%. On the upside, but if you look at it, there is some out-of-the-money call buying now that we are seeing. After a while, I'm seeing something like this. The 26,500 call, the premium out there, it's at around 17, 18 rupees. So those call buyers, they're saying, let's take a punt. If there is going to be a trade deal, there's going to be some other piece of good news. And if you're going to see a melt up, then let's go ahead and buy this for around 15 rupees, was what it was at the start of today. Currently, it's around 18 to around 19 rupees. But the broad sense you're getting is the range in the near term. At the downside, around 25,700, that's important. Closer to around the 20 DMA. And on the upside, this 26,100 mark needs to be taken out. If that's taken out, then we're bracing for fresh all-time highs. And then maybe, in fact, we see a bit of a melt up as well. That's the hope that's playing out. Today, the sector that's really come back has been tech. That AI was missing in, the tech companies' armory. And now, in fact, with AI trade seeing a little bit of a flux or seeing some kind of profit taking globally, you're seeing tech actually that's seeing a good amount of fresh buying. So Tech Mahindra, big open risk built up out there. Wipro is another stock as well that was seeing signs of short covering as well as some fresh buying out there. So tech is standing out. And from the banking names, SBI, fresh buying is what we're seeing. Good up move in the stock on its way to around 1,000 rupees and open interest up as well. While on PNB, we are seeing some bit of a short covering bounce that's playing out there. One stock that's seeing a lot of shots actually that are into the system is Tata Motors passenger vehicle business. Yet again, stock down, open interest up. Net, 26,100. That's a bit of a resistance mark on the Nifty, but it appears just in the near term, buy on dips is working out. And in fact, India is outperforming after underperforming all of 2025. Back to you, Surbhi.
Absolutely, and it's a good feeling, right, to be back on top after having pretty much sulked the whole year. Well, let's take a quick break on that note. We'll come back on the other side. Nimesh will join in with all the dealing room chatter and then some final trades coming up with Mitesh.
Welcome back. Well, it appears on growth that was down close to around 10%. There's a large trade actually that's taken place. I think still the stock is down, but there appears there is a large trade that just took place in the last 5 minutes or so. So we'll be waiting by to see whether or not it's going to be reported. But large volume spike is what we saw in the last few minutes. That said, markets are looking up. Let's find out in D-Street Charter what is Nimesh picking up. Nimesh, tell us.
Hi, Nigel. It's a kind of a market where you were down one day, up one day. So not really much to read into, but clearly it's a good pullback from the intraday lows, essentially led by the large cap names. So portfolio investors may not be very excited or happy, but on the Nifty at the index level, looks like it's a good pullback, largely led by IT names. So the entire IT pack seems to be back in action. There is a bit of buying interest as well. The IT index is up 3%, and across the board, whether it's large cap or mid cap IT, that's doing good today. In terms of flows, again, a mixed job of trade. You might see some, block data as well, which might have an impact. But in general, I understand there is a bit of buying interest back in the private bank name. So that trend continues as far as the institutional flows are concerned. Technically, I guess 26,120 is a level to watch now. If that gets taken out, you will see a further very sharp short covering rally on the Nifty. So that's the overall feedback. But the supply of paper seems to be containing. So that may cap the upside in the very near term. But I guess technically 26,120 is the next level to watch for a potential short covering rally further.
Okay, all right, Nimesh. What about individual stocks? What are you picking up?
Well, so the first stock on my list is Zota Healthcare. Big move on that name. In fact, it's almost at a record highs now and big volumes as well. I understand the company is likely to raise funds by QIP very soon. So that's the trigger there in Zota Healthcare. The second stock is Paytm. Since the block day before, the stock is under pressure and there is renewed selling pressure from larger FIs in Paytm. That's the reason why that stock is under pressure today. The third name is Persistent. The entire IT is doing good today, but Persistent stands out in terms of aggressive bids from the domestic mutual funds. So looks like there are some large domestic mutual funds who are looking to add into Persistent at current levels. And the last is Delivery. Well, the stock has been consolidating post the earnings. My sense is at these levels now, some bit of institutional flows as well as the HNI flows are back. And one influential HNI investor seems to be an active buyer in Delivery at current levels.
Okay, all right. Thanks a lot, Nimesh, for that. And Nimesh, just one quick clarification. Loris Labs, that was the one, right? That you're expecting a large trade on that one.
Correct. So all right. Even that's been under pressure for the last couple of days.
Yeah, last couple of days. And there was a lot of, when yesterday you mentioned on D-Street Charter, a lot of queries came in as well that that deal is likely to happen. So we'll keep an eye out. Last few days, stock under pressure, and let's see when exactly that does take place. Thanks, Nimesh. Well, let's go across to Mitesh Thakkar. He's got a fresh couple of trading ideas for us. Mitesh?
I have some BTST, BTST calls. I think Persistent is something trading call earlier, but it's run away fast from its averages. But looking at the closing today, I think a BTST is going to be taken with a target of 63 or 63.10 and a target of 63.50. Possibly for tomorrow can be a good target. And the other one is PNB. I think, that's a stock which has done well near the day's high. So BTST here at the stop at 123.9 for targets of around 127.
Got it. Okay. All right, Mitesh. Thanks a lot for that. PNB is the one as well that's seeing a bit of a short covering bounce that's playing out, and that's one of Mitesh's picks. By the way, on Grow, if I got this correct, there are more than 60 lakh shares that have got traded in that large trade. So, it's broken up into various trades, but I think that's the number. 62 lakh shares to be precise is what we have seen. But let's focus on the big global stock that we'll be tracking later this evening. You have NVIDIA, stated to report its earnings today. CNBC's Steve Sedgwick is here with all the expectations.
The truth of the matter is we don't know what the whisper number that the algorithms are going to be looking at for NVIDIA today. We don't know what the positioning is on NVIDIA. We've seen a lot of 13F filings and a lot of whale activity. The truth of the matter is you can justify it being a good purchase or a good sale depending on what number you look at. And herein lies the problem as well. They will beat expectations because 75% of US companies always beat expectations because you call it down and beat. But if you look at a price earnings ratio going forward, it trades at a very modest level compared with some of these companies, 27 times forward. If you look at a price to book or a price to sales, it trades at a very immodest number as well. So it's those forward sales figures which I think is where the scare is going to be as well. But I will hasten to add, if you're looking for scary numbers in the AI sector, you won't find it in NVIDIA. You're going to find endorsement of the fact that this company still has its moat. And that's the other thing. Is the moat still going to be intact in 2026 and 2027 as well? If you want to find the scary numbers, you have to look to OpenAI, which is in the private sector, of course, as well. A company which is expected in 2025 to make 15 to 20 billion US dollars in sales, but trades on a valuation of what? And therein lies the problem. It's gone up from a 60-odd billion valuation a year or so ago to, I've seen a number being touted around, whisper it, of $1 trillion is what they want for their IPO when they get it as well. Those numbers, for me, terrify me.
OpenAI at $1 trillion. Well, terrifying is the word used by the host there in terms of valuations. But then that's how, this is the mother of all big tech trades, biggest that we've seen since obviously the turn of the millennium. Anyhow, on that note, let's come back home. NVIDIA is going to be setting the stage and it's the most important queue internationally tonight. But right here, some more stocks in focus. Biocon, we've just seen a Citi double downgrade on the stock. Let's go across to Vivek. I think we have Vivek with us.
Well,
yeah. Vivek, what is this all about, this double downgrade?
Well, that's right. Stock's been under pressure today. In fact, last couple of days, stocks cooled off from the recent rally that it witnessed. Interesting note by Citi, it's a double downgrade. Target price cut, has been quite steep. They've cut it to 360 rupees a share from the earlier 430 rupees a share target that they had. They're saying that while Biocon is one of the best globally in terms of biosimilar R&D as well as execution, they're saying that as far as the in-market products are concerned that are currently being sold in the USA, the prices continue to soften. Along with that, the pipeline molecules that Biocon has, they appear to be in a hyper-competitive environment, and they say that this high competition may result in the company's biosimilar sales falling short of Street's expectations. Along with that, they're saying that the recent US FDA guidelines may actually ease biosimilar entry barriers and lead to increased competition. So what they've done made 3 changes. Number one, they've cut the target multiple for the biosimilars business to 14 times EBITDA versus the earlier 20 times that they had. Along with that, they've lowered the multiple of the generics business to 14 times versus 16 times they had earlier. However, they've kept the multiple of the research services business, that is Syngene, at 25 times of EBITDA. No wonder then Biocon's under significant pressure in session today.
Okay, all right, Vivek, thanks very much for that. That's Biocon. By the way, that's a statement from Saman Capital coming in, saying that they're professionally run with LIC and BlackRock being significant shareholders, and they're reiterating that the erstwhile promoter, Samir Gehlot, had exited. He's not a shareholder. None of the allegations in the petition have been substantiated. But I think what the market, again, we repeat, what the market needs to know, the clarity the market is seeking is whether A, the listed entity, Saman Capital, is it in the purview of these fresh investigations, which CBI and ED, etc., if they start fresh investigations, will Saman Capital's own books be open for scrutiny? That's what we need clarification on, number one. And number two, what happens to the IHC deal? And on that, I don't think we have a definitive statement from Saman Capital just yet. 12%, that's a big knock on the stock coming through. Mayuresh Joshi is with us. Mayuresh, this is a tough one, and I know you don't have enough inputs, I am sure, to answer it, but let me still try and get your sense for shareholders who would have bought, because Saman Capital had started doing well after the IHC deal. There was a lot of excitement around the stock. What would your advice be now?
You're absolutely right. I think I subscribe to your point completely, Surabhi. I think we probably need to wait out now on what probably comes out with the Supreme Court directive and what the MCA probably does. But again, I think this is going to be a long drawn-out process, and there are going to be a lot of ifs and buts in this entire process. So I think the kind of pressure that the stock has now witnessed, specifically after the news has come out, I think it might act as a headwind. And unless we have absolute amount of clarity, I think it's very, very difficult to take a call on this.
Okay, all right, Mayuresh, stay with us. We want to hear a couple of your picks as well from here on. For the time being, we'll slip into a short break, come back. We'll hear Mayuresh's calls on the markets as well as we'll wind it down.
NBFC.
Just one more observation with regard to Sammaan Capital. If you pull up the F&O plate, in all probability, this stock goes into the F&O ban. Because there's a big surge in terms of open interest. So we'll have to keep an eye out on that. I think, in the next 24 hours, we should hear from the management. They should come out and clarify, because shareholders will be worried. You have $1 billion of a deal that's in the works. And whether or not this puts a spoke in it, that's all the clarification that's required from here on. Valuations are secondary. For the time being, we want to know what's the clarification on this. Coming across to you, Mayuresh, any company that stood out for you with regard to numbers looking good in the past quarter and the way ahead from here on, there is earnings visibility and the stock not too expensive. Difficult one, I know, but if you could name a couple of companies.
Afternoon, Nigel. I think from a valuation perspective, I think we are growth investors. So I think we are obviously going to look at stocks where earnings are expected to remain on an elevated level. Having said that, I think a couple of stocks which we are holding out in Markets with India portfolios and are actionables are VST tillers and tractors. Our own sense is that numbers were very, very resilient in the quarter gone by. Specifically, I think the tiller and the power feeder sales have been exceptionally good, both on a year-on-year basis and for the first 9 months on a comparison check done with the 9 months of the earlier year. The tractor sales have been a little bit subdued, and specifically the export of tractors. But again, I think the capacities and the new models that they're probably introducing, both in tillers and tractors, our own sense is that numbers should probably hold up as we head into the second half as well. With a very, very strong balance sheet, the expectations in terms of cash flows remaining strong and earnings remaining very, very resilient and compounding over the next few quarters is something that we are working as a base case scenario. So the rating, ranking, institution holding, all the factors that we see in Canceling working for BST. The second stock is Vishal Mega Mart. Again, I think it's not cheap by any sense, but again, the numbers have been pretty decent in the quarter gone by as well, both in terms of the EBITDA margins in the first half at 9.5%. The expectations in terms of same store sales growth, the kind of repeat customers that probably come through. And obviously, I think the GST rationalization benefits aids them to a certain extent. But the kind of store openings that one looks at, the store positioning that they've probably got, and expectations of strong demand coming back makes us believe that earnings should probably hold up for Vishal Mega Mart as well. And therefore, these two stocks remain actionable as far as our model portfolio is concerned.
Okay, so those are some of the names. What about the new listings, Mayuresh? We had another one today. Anything? Like anything? Want to buy anything? Or staying away?
No, staying away. I think one stock that we've kept on our radar, however, Surbi, is Urban Clap. Our own sense is that there is expectations of a huge paradigm shift that you're probably expected to see in terms of the dynamic changes that we are seeing across households, not just in metro areas, but even in tier 1, tier 2 cities. And therefore, I think the kind of offerings that they have on their plate right now, and the expectations in terms of further offerings coming to at a very, very reasonable price. My own sense is that this is one platform company that we are actually keeping a very, very close watch on.
Got it. Okay. All right. And any of the other companies, Urban Clap company, I recall it went to 200 rupees, then it came down. Any of the other, Lenskart, Physics Wala, a word on actually Tenneco. Though the valuations are not very cheap, more than 20 times EV upon EBITDA, but it seems they have a bit of a tailwind, in the industry tailwind, the product mix, exports as well. And that's why the new listing was up close to around 20%. Any view on this one?
It looks like a very interesting story, Nigel, and I heard the interview of the management that you and Mangalam had in the morning. And therefore, I think the product mix, A, should work out for them. Second, I think the management seems to be very, very positive in terms of the export market. So it's just 5% of their overall top line. But if they're able to expand the export share quite significantly, I think that can create a huge leverage, both in terms of the absolute volumes that they can probably generate and the margins at which these orders can probably come through. Again, I think a large part of their market that they're probably looking at, and again, I think the emission norms, which will keep on changing as we head into the next few years, I think they've clearly got the technological edge and the advantage with them. To answer your question from a valuation perspective, yes, expensive as we speak. But I think there is no clear-cut comparable competitor with an exclusive kind of ownership in this space itself. And therefore, I think the kind of leadership that they probably have might actually continue in the Indian markets.
Okay, all right. Thanks a lot for that, Mayuresh. Let's wind down the markets then for you. It was actually a good trading session in today's trade. The Nifty did well. We ended higher. The Nifty Bank, well, that's been one end of the opening batting pair. That continued to do well. It was up 0.5%. But today, the non-striker came on strike. And the Nifty IT index, that was the one that bazookaed up. A lot of buying that we saw. The big outperformer up close to 3%. And whether it was, L&T Tech, whether it was TCS, Wipro, Tech Mahindra, all of them did see big buying. LTI Mindtree as well, up and about. On the flip side, from the broader markets, well, we had pretty much even Stevens in terms of advancing and to decline ratio. However, the stock that was in focus was Saman Capital. And a clarification is awaited from the management. Stock ending down by close to 13%. It could probably go into the F&O ban as well. So clarification on whether or not that $1 billion deal is, gone into a bit of a flux, or does it see the light of day? That's the most important trigger. Valuation-wise, we know that's cheap. That's the biggest casualty in today's trade. And in terms of winners, Tenneco, that was the beautiful-looking stock today, was up more than 20%. Fantastic listing out there, ending high with a gain of around 23%. And the other one that finally the law of gravity did catch up was Grow, was down close to around 10% in today's trading session with pending sell orders as well. Valuations went out of whack. And today, the large sellers did come in there as well. But otherwise, a good trading session from a bullish perspective. Well, on that note, we'll wrap up on this edition of Closing Bell. Don't go anywhere. The team of Markets Forward comes up next.
The market stages a sharp recovery with the Nifty reclaiming 26,000 and the Nifty Bank reaching a record high. Frontline indices rise nearly 1% from their lows, driven by gains in key sectors including banking and IT.
The rally in Grow is a result of low float driven short squeeze and positions being auctioned on NSE, reports Money Control. The stock ends in a 10% lower circuit as the frenzy fades.
Tenneco Clean Air makes a strong debut on D Street, lists at 27% premium to the issue price. The management says premiumization will aid growth.
And the Supreme Court questions the quote-unquote friendly approach by the CBI and the Ministry of Corporate Affairs in probing allegations against the erstwhile Indiabulls Housing Finance, now known as Samman Capital. The Apex Court pushes CBI to file an FIR, saying that it will strengthen the hands of the Enforcement Directorate. The Samman Capital stock ends over 10% lower.
Shares of KC International drop nearly 10% after Power Grid imposes a 9-month ban on new contracts over contractual violations. However, existing projects executed by KEC will not be impacted. Hello and welcome to Markets Forward, your go-to show where we get you a snapshot of everything that went by in the day in terms of the trading action and prepare you for all the action that's coming up ahead in tomorrow's session. Lots of data points and stock analysis coming your way. I'm Surabhi Upadhyay, and with me is Hormaz Patakia. Hi, Hormaz.
Hi, Surabhi. And if you were in KBC, you would have said Pehla Padav par for the Nifty. Now you have to head towards the next level. Crossed 26,000 today, sustained above it, closed above the intraday highs of both Monday and Tuesday. So that's a positive as well. The index now moving towards the 26,104 mark.
No, absolutely. Indeed, it's been heartening, right? Because after such a long time, third day running, we can say that India outperformed global markets. And we haven't used that phrase too much in all of 2025. But yes, as the world grapples with AI jitters and worries about whether NVIDIA's numbers will keep investors happy or not, today was one more day where against, again, a red sort of a Asian backdrop, we managed to rise from the morning lows. The morning was actually a quiet start, but then the Nifty kept on marching higher and it closed pretty much at the day's high. The only niggling worry or the issue you can say is that mid-caps did not fare as well. The mid-cap index underperformed the Nifty. But within the mid-cap space, there are lots of newsmakers, like you just heard in our headlines, and we'll tell you more about these stocks as we go along. Well, here's the lineup. This is what all we are covering today. We'll put the spotlight on Grow, those shares finally slipping in trade after a 6-day rally. Tenneco Clean Air was today's listing. We'll tell you more about it. And then, as we just mentioned, KC International slipping on issues in terms of their relationship with Power Grid being banned for a period of 9 months. And last but not the least, of course, as always, we get you geared up for tomorrow's trading action. But for now, it's over to Vivek for the movers and shakers of the day.
Well, thank you so much for that. Well, you could call it a session where you actually saw a very sharp recovery, especially in the second half of the trading session amongst quite a few of the names. But then once again, you did see selling pressure emerge, especially in the last half hour or so in the NBFC pack. Well, in terms of stocks and sectors that did quite well, look at the entire Nifty IT space. Clearly, very strong activity over there, very strong buying interest. Infosys also aided by the buyback date news, along with that, a whole host of other names like Persistent, HCL, all of them sharply higher in the session. The other stock on the radar was Latent View, one of the top gainers as far as the NSE 500 index was concerned, and on very good volumes. Latent View Analytics managed to end the session sharply higher. Along with that, PB Fintech or Policy Bazaar, that was the other stock on the radar. Remember, this particular stock has sold off quite significantly in the recent time, but in the last couple of trading sessions has made quite a bit of a sharp recovery, over 2.5% higher. And auto ancillary names, some hopes of maybe an India-US trade deal is something that has led to a little bit of recovery as far as auto ancillaries are concerned. Bharat Forge higher by over 3%. On the other hand, quite a few laggards. Grow, like you mentioned, today taking a bit of a knock, down 10%. The other stock, of course, KC International, one of the largest clients for the company, which is Power Grid, has barred the company for a period of 9 months from going ahead and bidding in T&D contracts. That stock ended low by 9%. Wari Energy's income tax surges at company premises, something that the street didn't like. Biocon, a downgrade, during the course of the session that came in from Citi, is something that led to a bit of a sell-off. And lastly, Samman Capital, legal overhang on this particular name, that particular stock, down by over 12.5% in the session today.
Indeed, as the stock of the last hour of today's session was Sammaan Capital. Vivek, thank you for that summarization of the top movers in today's trade. But the other big mover today was Grow, and for a change, the move was on the downside. After 5 days of gravity-defying moves, where the stock had gained almost 90% from its issue price, the stock was in a 10% lower circuit. It started off lower, and then within the first half an hour, the stock fell to a 10% lower circuit, and it stayed that way. Now, what has happened is, of course, earlier today, the price band for the stock was revised to 10% from 20% earlier. And as of closing, there are 1.65 crore pending sell orders still on the NSE for Grow at this price, and no pending buy orders on the corresponding side. Now, what happened yesterday, of course, was Money Control reporting that over 30 lakh shares were sent into the auction on the NSE, which analysts that they spoke to say that it is an unusually large quantity. Now, why did that happen? It happened because there were traders who had shorted the stock in anticipation that this post-listing rally would cool off. That didn't happen. The stock kept moving higher, and now during settlement, when they could not arrange for the delivery of those shares that they shorted, the stock, those number of shares had to be moved into the delivery. Now, there are enough and more concerns that still lie ahead for Grow. Valuations aside, the valuations is a conversation that we'll keep having. But other than that, the fact that there is very little free float in the market, which explains the frenzied moves on both sides. There is very little. Most of it with the promoter. Most of it is locked in as well. So that is one. There has always been a sharp run up in the first 5 sessions, and we've seen historically that stocks that move up very quickly after listing, they cool off eventually over a period of time. Urban Company is a case in point, as is Lenskart. Of course, we're not saying that the same will happen to Grow, but of course that being a case in point as well. Now, what happens next? The first big trigger for Grow ahead is Friday, when they come out with results for the second quarter, the first after listing, and then on the 10th of December, when the 1 month shareholding lock-in comes into play. That's where around 140 million shares will be freed up for trade. That's just 2% of outstanding, but still we'll see if there is more supply that comes in. So there's a 10% circuit for Grow. We'll see where the stock goes tomorrow.
Absolutely. I think you've laid out very, very important triggers. The one is, on the fundamentals, we'll have to see if their profitability is really, moving along the expected path or not. But yes, that 1 month lock-in ending, to see who stays, who decides to check out, and what happens. So a lot of these technical factors will become self-explanatory over the next few weeks. Well, let's bring in our experts on the show. We have Mayuresh Joshi joining in from William O'Neill, and we also have Shrikant Chauhan with us from Kotak Securities. Gentlemen, good to have you on the show. Before we talk about Grow, Shrikant, let me open with you. Quick thoughts on the Nifty. We are finally, going against the tide, finally outperforming, and now almost back at 26,100. Do you think the Nifty can take out this level this time around?
Yeah, good afternoon, Survi. Good afternoon, Harmas. So, yes, this time it is very clear that the markets are heading higher. Despite there was global uncertainties, we are seeing good amount of relative strength in our markets. Supports have been shifted from the levels of 25,500 to 25,800. And today, when there was weakness in the first half, in the second half, we saw equal amount of buying interest. And the rally is backed by broad-based buying in the market, BFSI as well as IT. Both these sectors participated in this market, and it closed above the mark of 26,000 for the second consecutive day. So broadly, I am of the view that this market is clearly indicating us that we are heading higher, and this time the market is on the verge of crossing its all-time highest level of 26,200, 300 sort of levels. So the maximum retracement that we can see in the coming few days could be around 26,500 sort of levels, and any decline, any dip will be an opportunity for create any long positions.
Any opportunity, any dip is an opportunity to create longs. But Mayuresh, for Grow has been in conversation almost every single day since it has listed. Now, would it be fair to say that the post-listing euphoria has finally died down, and now we get back to reality, wait for numbers, await more clarity, and then see what kind of a multiple the market wants to ascribe the stock?
Oh, absolutely, Harmas. Afternoon to you. I think two things. One, I think in terms of the move on the stock itself, I think quite exceptional that you've probably seen. But with a lot of these recent IPOs which have opened up, I think the first number, specifically after listing, becomes extremely critical. And therefore, I think the numbers which will come through on Friday will deemed to be a defining factor for growth. Obviously, I think the long-term story stays. But as we spoke yesterday as well, I think on yesterday's date and price, I think Grow had a market cap which was more than the exchange platform BSE itself. So I think somewhere these excesses need to get balanced out, which is probably happening in terms of the price that we're probably seeing. But numbers, and again, I think the 1 month lock-in which opens in December, I think they will be defining for Grow as we move ahead.
Indeed, and that is what we'll be keeping an eye out for, firstly for Friday and then for the 10th of December. But of course, as we mentioned, the stock of the last hour of trade today was Sammaan Capital. The stock fell 13% after the Apex Court pushed the CBI to file an FIR saying that it will strengthen the hands of the Enforcement Directorate. The court also questioned what it called quote-unquote double standards by market regulator SEBI. Ashmit is joining in with more details. Ashmit, take us through the court action.
Well, this is, of course, more scrutiny headed perhaps Sammaan Capital's way, especially on account of today's Supreme Court proceedings. The Supreme Court was hearing a petition that has been filed by Citizens Whistleblower Forum, which is an NGO. This was first filed before the Delhi High Court. They lost the case in the Delhi High Court. Then they moved to the Apex Court. It was pending here. And today, essentially, while seeking a status quo of where things stand, where the investigation stands, the Supreme Court had strong words to share. First and foremost, as far as the CBI is concerned, the Supreme Court made stern observations that it was taken aback by the flexible approach, the friendly approach of the CBI as far as these investigations are concerned. This is something that the Apex Court didn't look very kindly on, nudging the CBI to go ahead and to conduct a thorough investigation, to in fact register an FIR as well. That's of course as far as CBI is concerned. Also in the works was a meeting. The ED was proposing that let's convene a meeting of all stakeholders, of all investigating agencies. SEBI was a little hesitant, which again invited strong comments from the Apex Court. The Supreme Court questioned what it called were double standards by SEBI, saying that it's not able to understand the hesitancy by the market regulator, especially when the top court itself is granting SEBI the right, the jurisdiction to investigate in this matter. As far as ED is concerned, they clarified their position that they've done their bit. They've also filed complaints before the EOWs of Delhi, of Mumbai. Those complaints haven't been registered. And subsequently, there is a direction that has now come from the Supreme Court, which asks for more clarity. So clearly, all the stakeholders, all the investigating agencies, the regulators being pulled up by the Apex Court, the Supreme Court asking questions as to what is the status, asking for more details. The hearing in this case, we understand, will resume on December 17th.
Okay, this is going to be a very, very important, issue to track. Ashwin, thank you very much. Clearly, the market quite disturbed with the developments taking place in court today. Let's move on then. Talk about today's new listing. Tenneco Clean Air listed on the street with a 27% premium to the issue price. The 3,600 crore rupee issue was subscribed nearly 60 times, led by strong demand from institutional investors. In a conversation with CNBC-TV18, CEO Arvind Chandrasekaran said that premiumization will be a key growth driver for the company. And he also added that exports, which are currently at 5% of sales, they're poised for a significant uptick.
We have very strong tailwinds. So one is we are sitting on the India Inc. story, right? So already 4 to 6% of growth we're going to see simply because of India's growth and the market growth rate. But beyond that, we have 3 strong tailwinds. One is content per vehicle growth from legislation, emissions legislation, and premiumization of shock absorbers. So from a clean air powertrain business, the legislation will help us, whether it's BS6 going to BS7, CAFE norms coming in, TREM 4 going to TREM 5, or on the premiumization side, because SUVs are getting premiumized very rapidly, and so the move from static to dynamic suspension is also happening very rapidly. So we expect to get a nice boost from growth from just pure content per vehicle increase.
Tenneco Clean Air, the new listing, the new kid on the block today. But Mayuresh, you heard the recent developments taking place at Sammaan Capital. The street, as Surabhi was also highlighting a few minutes ago, that there's assumptions that everything was hunky-dory now after all the headwinds that it faced. But there is a recent spanner that has come in, and that's too after a marquee investor has invested such a large sum in the company.
Absolutely, and that probably creates a lot of headwinds, right, Thomas? And therefore, I think what really comes out of all this, if I'm not wrong, Ashwin mentioned, I think the next hearing might be somewhere in the middle of December. And therefore, I think as all the regulatory agencies start probably probing a tad bit more into this, it does create that element of uncertainty. As far as time is concerned. Obviously, I think in terms of the investors that have probably come on board, what really comes through in this investigations, whether it will be a time-bound process, is something to be watched out for. And therefore, anything like this which happens for any corporate, I think it does create to be a major overhang.
So we need to now wait for more clarity on this particular issue for sure. Let's move on. One more major newsmaker of the day was KEC International. Stock was down 10% after Power Grid banned the company from new tenders for the next 9 months. The state-run power company cited breach in contracts by KEC as being the reason behind its decision. KEC said that the order doesn't impact its ongoing projects. Vinny has more details. Vinny.
Yes, so KEC International was the stock in focus today and under pressure, obviously, because they've been barred by Power Grid for a period of 9 months starting from 18th November 2025. Mainly, there was a case that was going on since March 2025 regarding some contractual provisions, bribery investigations, and there were some arrests made by Power Grid employee as well as KEC International. So because of those concerns, we're seeing that, now they've been barred from participating any new tenders that could come in from Power Grid or any new orders that come in from Power Grid from 18th of November. So an important update there. Now the company is saying that yes, they are not seeing any impact coming in of this on the company's executing orders that are already in place from Power Grid. So they're saying no concern on that front. Now in terms of order intake, they've given a detail that, as of YTD performance, FY26 order intake is at around 17,000 crores. Of that, Power Grid share is 4%. Even in terms of order book, 39,300 crores was the order book as on Q2 FY26, of which the share of Power Grid in that is at 15%. So still a large amount. But the company is saying that they are not expecting any material impact in terms of ongoing operations or financial position of the company. That is what we'll be keeping an eye out on, but the street is not too happy with that, and analysts are not too happy with this barring that has come in from Power Grid for KEC International, and that is why the stock was under pressure today.
Vinny, thank you for that update. Shrikant, on the charts, KEC International, do you believe that there has been a breakdown from important levels? The stock has been an underperformer. It's down in 16 out of the last 19 sessions. But what are the important levels to watch now on the downside?
Yeah, absolutely. What you're saying is right. Since last almost 6 months, if we see the trend of the stock, then it has been under a lot of selling pressure and it has broken all its important level when it started trading below the mark of 750, and today it closed comfortably below the same. So while looking at the entire setup of the stock, I am of the view that the stock is again heading for its immediate lowest level, which was around 625, 630. We can expect further more weakness, but there I'm seeing the stock to consolidate and to steady. So at current levels, it is advisable, if there is any bounce back, it is advisable to reduce some positions. The stock is heading lower.
The stock is heading lower, but yes, that's what is KEC International, 9% lower in today's session. But it was the day that belonged to the IT names, and surprisingly on the positive side, despite the sell-off that you have been witnessing on Wall Street. You look at LTI, Mindtree, HCL, Tech, Infosys, all of them ending with gains of over or close to 4%. And the leading the rally in IT stocks, it was really the anti-AI sentiment. Now, the consensus that is emerging is that India, with its lack of AI plays, is fairly insulated from what is happening on Wall Street. Mayuresh, do you concur with that? Somebody's pain is somebody's gain. The valuations that are unraveling right now on Wall Street, does that behave or act as a sentiment positive for our own IT stocks?
It does, Hormas, for selective mid-cap IT stocks. However, for large-cap IT stocks, I think what will probably come out from NVIDIA's commentary is going to be how is the capex growth that is coming through from hyperscalers, whether it's Meta, Google, Microsoft, because they all continue to contribute quite significantly as far as AI-dominated platform and growth is concerned. Obviously, I think the development of AI chips that is probably happening, the agentic AI agents that are probably now getting deployed, and more platforms that are coming through. I think our large cap IT companies, which traditionally have the outsourcing model need to scale up quite significantly, and that too fast. Both time and cost overruns are going to be extremely crucial at this point of time, and how to avoid that. And therefore, I think we are lagging behind as far as this entire ecosystem is concerned. A few mid-cap IT companies are probably starting to get there, but I think it's still a long way to go. So I think who's gain, who's lost. I think next 1.5 years will probably define that, but we need to pull our socks up and get into this game very, very aggressively and in a very agile fashion.
Okay, all right, gentlemen, thank you very much for joining us today. Good to get all that perspective from both you, Mayuresh, as well as Shrikant. We'll take a quick break, come back on the other side, and we'll get you the top corporate voices along with the key events to watch tomorrow.
Welcome back onto the top corporate voices of the day. Vinati Organics is looking at a strong FY26, according to CEO Vinati Mutreja, who told CNBC-TV18 that the company is expecting around 15% volume growth, revenues rising 10 to 12%, and margins should stay close to the 27% mark.
The CFO of Electronics Mart said that the GST rate cut has triggered a noticeable rise in TV demand. The company is targeting double-digit growth for the full year and expects 30 to 35% expansion in the NCR cluster. On AC sales, the company adds that meaningful post-GST demand will likely emerge in the fourth quarter.
And before we wrap for the day, we bring you some key market events to watch out for. Upasana is standing by with some of those. Upasana.
Well, first up, let me start with the global economic cues. US will be reporting its FOMC meeting minutes will be out tomorrow, even initial jobless claims data and even existing home sales data. And mind you, the most important that we'll be watching out for is the Nvidia third quarter earnings that will be coming out tonight post 12 a.m. Japan will be reporting its adjusted trade balance data, so we'll be keeping an eye out on that as well. Now let us look at the key stocks in news on the back of corporate action. Stocks like Sun TV, Container Corp and Natco Pharma will be in focus as all these stocks go ex-dividend tomorrow. Infosys is the next one on our radar as the 18,000 crore buyback opens tomorrow, that is on November 20th. On the IPO front, Fujiyama Power Systems will be listing on exchanges tomorrow. Mind you that the issue size for this is 828 crore with a fresh issue of 600 crore and OFS of 228 crore. Now moving on towards the other important events for tomorrow, FM Nirmala Sitharaman pre-budget consultation with industry stakeholders will take place tomorrow morning around 10 a.m. And lastly, mind you that the Morgan Stanley's 24th annual Asia Pacific Summit ends tomorrow, which has started today. So all in all, looks like quite an eventful day tomorrow.
Okay, all right, Upasana, thank you very much for all of those details. And with that, it's a wrap on this edition of Markets Forward. Many thanks for watching. We'll be back with more news and updates.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The Sensex and the Nifty recover. An intraday trade led by financials and IT stocks. The Nifty Bank hits a record high. The mid-cap index clocks marginal gains. Fears over an AI valuation continues to keep global markets on the edge as investors await Nvidia's earnings. Microsoft joins hands with Nvidia to pour $15 billion into OpenAI's biggest rival, Anthropic, forming a new alliance. The US has now emerged as India's fourth largest crude oil supplier for the second straight month as volumes in November surpass October. Imports from Russia also surge ahead of the November 21 sanctions deadline to wind down purchases. Adani Group wins the bid for Jaiprakash Associates after 90% of the lenders vote in its favor. Sources say Adani's offer of a higher upfront payment tipped the scales in its favor. NARCL alone controls about 86% of the lenders' votes. Shares of online trading platform Grow see some profit booking today after rallying for 5 consecutive sessions since listing. Money Control reports that the surge in the share price is a result of short sellers getting squeezed due to low float. The Supreme Court questions a friendly approach by the CBI and the Ministry of Corporate Affairs in probing allegations against India Bulls Housing Finance. Also questions double standards by SEBI. The Apex Court pushes the CBI to file an FIR, saying it will strengthen the hand of the Enforcement Directorate. The Supreme Court also strikes down provisions of a central act that limits terms of tribunal members to 4 years, rules that it impacts judicial independence, criticizes the Centre for what it calls legislative overruling of binding judgment, says it's unfortunate that the Centre was not accepting the court's directions. No respite from air pollution in Delhi. The Supreme Court expresses frustration at the lack of action, directs the government to respond, pushes Air Quality Management Authority to consider avoiding sporting activities for school students. President Trump shrugs off the killing of journalist Jamal Khashoggi and hosts Saudi Crown Prince Mohammed bin Salman at the White House. Trump says the Crown Prince knew nothing about the killing and elevates Saudi Arabia as a major non-NATO ally. At least 14 people killed after Israel launches multiple attacks in southern Lebanon, also undertakes attacks in Gaza. Palestinian authorities claim Israel has carried out nearly 400 attacks in violation of the ceasefire, killing 279 people. Nitish Kumar elected as the leader of the NDA in Bihar. He will take oath as the Chief Minister for a historic 10th time tomorrow. Well, straight to the day's trading action. The Lal Street staged a smart recovery today, led by financials and IT stocks. The Nifty reclaiming 26,000, ending at a 3-week high. The Sensex rose 513 points, ending over 0.5% higher. The Nifty Bank, a similar picture there, and 127 points higher there for the mid-cap index. So we saw an intraday recovery coming in. The Nifty Bank hit a record high today for the first time. Mid-caps underperforming the blue chip. Surabhi is here now with the details of the market action. The markets outperformed their global peers, Surabhi.
Well, it was India on top once again, and it's become a bit of a winning streak, though we don't want to jinx it by getting too excited. But yes, the question is, has India emerged, at least for now, as a bit of an anti-AI trade? But well, today, third day running, we had more evidence of that because the market started on a somber note. We had a very weak handover from Wall Street again, but then the market raised to close at the day's high, at least on the Nifty, gain of about 0.5% coming through. And global equities obviously have been under pressure. There's a lot of nervousness ahead of those Nvidia numbers, which is why when we were trading, Asian markets again resumed their slide, and many of them ended almost 0.5% lower. Now let's come to what was the composition of today's rally. So for the large cap space, it was a lot of IT, and PSU banks did very well as well. So let me come to the Nifty gainers. Stocks like Max Healthcare. Max actually was a Nifty winner, biggest mover on the index today. Then the IT brigade, HCL Tech, Infosys, Wipro, TCS, all of these names were doing very well. And it was also a good day for some consumer stocks. So Titan, Nestle, HUL from the large cap space had a good run. Sun Pharma, Cipla, some gainers in pharma. And SBI and ICICI Bank also chipped in. The losers now, Tata Motors, PV, ever since those numbers have come out, the market has just been pushing and punishing that stock because of the growth issues over there. There was Coal India, which was down a bit, Maruti Suzuki and Bajaj Finance seeing some profit taking as well. Now, the mid-cap market today actually underperformed the Nifty. That's what you have to take note of. But it was a day of high drama and very big newsmakers. So let me, call out the three that I'm talking about. One is Grow. Finally, after its relentless run, today Grow was down 10%. It spent, the better part of the day on a down circuit with a lot of pending orders at that freeze level. The second, Saman Capital, casualty of court action, with the Supreme Court's observations, their order, asking investigative agencies to relook at the entire case. That stock was down about 12%. And then KEC International running into some rough weather with Power Grid for future contracts. And Power Grid is one of their big clients. So that was down about 10% as well. Mid-cap IT, however, was completely in a green zone. And look at the kind of buying on mid-cap IT stocks. Persistent, Coforge, L&T Tech up 9%, Hexaware. So IT across the board, large cap and mid-cap did extremely well today.
All right, Surbhi, many thanks for joining us. That was the market action. From equities to cryptos, where the sell-off continues. Bitcoin briefly touched a 7-month low, slipping below the $90,000 mark. The total market cap of cryptocurrency has fallen by $1 trillion in the last 6 weeks. Bitcoin itself has declined 27% in the same period. And staying with what is happening in cryptocurrencies, it's the larger overarching fear over AI valuations, and that is keeping global markets on the edge. Investors are, of course, waiting Nvidia's earnings later tonight. Microsoft, by the way, has joined hands with Nvidia to pour $15 billion into OpenAI's biggest rival, Anthropic, forming a new alliance. Google has launched Gemini 3 as the battle with ChatGPT intensifies. Rachna standing by with all the AI action. Rachna, let's start with Google. Tell us more about Gemini 3.
That's right. Google's newest model, Gemini 3, is being positioned as a major leap in its AI capabilities with stronger reasoning, deeper multimodal analysis, and long context performance. It's already powering AI mode in search and rolling out across Google's apps and enterprise tools. But this breakthrough comes at a moment when market sentiment around AI is beginning to shift. Some of the biggest names that powered this year's AI rally are now giving back significant value. Nvidia has seen more than $500 billion wiped off its market cap after touching a milestone of $5 trillion. Now, Palantir was also dropped sharply, losing almost $90 billion in November alone. And Alphabet, after months of strong gains, has cooled as well, with estimates suggesting it's down roughly $500 billion from its recent peak, as investors reassess just how much optimism is already priced into it. Now, this change in mood is also being echoed from within the industry. And none other than Google CEO Sundar Pichai has publicly now warned that the parts of AI boom are showing elements of irrationality, saying that no company, including Google, is fully insulated if the sector unwinds. Adding to the caution is Michael Burry, the investor who famously predicted the 2008 housing crash, taking large short positions against major AI names. At the same time, the competitive landscape is being reshaped as well by one of the biggest AI alliances announced this year. OpenAI's largest investor, Microsoft, is now joining hands with the ChatGPT maker's biggest rival, Anthropic. Microsoft and Nvidia and Anthropic, they've signed a three-way partnership in a deal that goes far beyond a standard cloud deal. Anthropic has committed up to $30 billion of compute on Microsoft's Azure cloud. Nvidia is investing up to $10 billion into the company, and Microsoft is adding up to $5 billion of its own. The agreement also includes the option for Anthropic to scale to 1 gigawatt of additional compute capacity that will be one of the largest single AI infrastructure commitments on record. As Wall Street now turns cautious on the AI story, big tech is forging several partnerships where rivals are joining hands, hoping to maintain the growth momentum. Back to you.
Well, plenty that's moving in the AI ecosystem. Many thanks, Rachna, for joining us. And Elon Musk's artificial intelligence firm XAI is in advanced talks to raise $15 billion in fresh equity at a valuation of $230 billion. Reports suggest that the terms of the new fundraise were disclosed to investors by Musk's wealth manager Jared Birchall last night. The $230 billion valuation is more than a 100% increase from the $113 billion figure which was disclosed in March. On to commodities. Prices of crude oil easing as rising U.S. inventory sparked concerns of an oversupply. However, the declines were limited by secondary sanctions on Russian crude buyers. Investors are also waiting for OPEC Plus decision on its supply policy when it meets on the 30th of November. And staying with oil, the U.S. is now India's fourth largest crude oil supplier. This for the second straight month as volumes in November surpassed October. However, imports from Russia also surged ahead of that November 21st sanctions deadline to wind down purchases. Sapna is here with the details. Sapna, take us through India's crude oil imports.
Well, as per the latest data from Kepler, clearly, our crude imports from the US have really picked up pace. So for 2 straight months back to back, October and between 1st and 18th November, the crude imports, the volumes from the US are anywhere between 500,000 to 0.6 million barrels a day. This is quite a jump in comparison to the earlier months of the current calendar year, where it was around 0.2 million to 0.3 million barrels per day. So that trend is noteworthy. Basically, US is now the fourth largest crude oil supplier to India. This position had been occupied by the United Arab Emirates since a very long time. UAE's position now goes down in comparison to US. Of course, Iraq and the Saudis, they continue to be firmly entrenched as the second and the third largest crude suppliers to India. But of course, the first spot still goes to Russia. Around 1.9 million barrels per day has been imported between 1st and 18th November. Of course, post 21st November, everyone expects this to kind of peter off. The Russian arrivals are likely to come down dramatically.
All right, many thanks. Sapna. Russia has offered to provide technology transfer of its fifth-generation Sukhoi Su-57 stealth fighter aircraft to India. The Russian government-owned defense conglomerate says all demands from India regarding the fighter jet are, and I quote, completely acceptable. This also comes amid several meetings between officials of both countries, including one between External Affairs Minister S. Jaishankar and Russia's President Vladimir Putin. Shares of online trading platform Grow hit a 10% lower circuit today after nearly doubling from the IPO price in the last 5 sessions. As per a money control report, 30 lakh shares of the company had moved into the auction window. The report suggests that many short sellers misjudged the stock's sharp post-listing rally. They sold shares they did not hold. They expected the rally to fizzle, which would enable them to buy the shares back at lower prices the same day. But that was not the case, and short sellers were caught off guard. They now face hefty penalties in the range of 20 to 25%. And more listings. Tenco Clean Air made a strong stock market debut with the shares listing at a 27% premium to the IPO price. The 3,600 crore rupee issue was subscribed 59 times in the primary market. The company captured a market cap of close to 20,000 crore rupees on day one. Adani Group has won the bids for Jaiprakash Associates after 90% of the lenders voted in its favour. Sources tell CNBC-TV18 that Adani's offer of a higher upfront payment tipped the scales in its favour. Ritu joins us now with more. Ritu, Adani Group having the last say at the end of what has been a long-drawn resolution proceedings.
Well, yes, a big development in the long-drawn resolution process of Jaiprakash Associates, and it looks like the race has a clear winner, with sources telling us that 90% of the lenders that were led by the National Asset Reconstruction Company, or NARCL, voted in favour of Adani Group's bid to take over the company. Now, here's the key factor. NARCL alone controls about 86% of the voting share, so their decision virtually sealed the outcome. Now, a few of the lenders, including SBI and ICICI Bank, that now hold less than 3% of the total vote because they've sold most of the exposure to NARCL, they chose to abstain, but that didn't really impact the final direction of the vote. Now, why did Adani win the lenders over despite Vedanta offering more money overall? Well, sources say the higher upfront payment in the Adani proposal was the clincher. As we've been reporting, Adani offered a total of 13,500 crores, which included about 6,005 crores as upfront payment to the lenders and another 6,700 odd crores after 2 years, meaning in net present value, their offer was evaluated at around 12,000 crore rupees. Vedanta, on the other hand, had put forward a larger overall offer during the Swiss challenge process of roughly 16,000 crores, with only 3,770 crores upfront and the rest only after 5 years. So Vedanta did, we understand, attempt to restructure the payment schedule in order to increase the upfront portion to win over the lenders, but sources say the COC and the resolution professional did not accept the change because the Swiss challenge window had already closed. Now, with the voting now complete, lenders are going to issue a letter of intent to Adani Group, and then the resolution professional is going to file this approved plan with the NCLT seeking their formal approval. But keep in mind, JP Associates is facing claims of more than 57,000 crores under the IBC. So even with this offer, lenders are staring at a steep haircut.
All right. Many thanks, Ritu, for joining us. So Adani is the winner as far as JP Associates is concerned. Up next, the Apex Court questions, and I quote, the friendly approach by the CBI and the Ministry of Corporate Affairs in probing allegations against Indiabulls Housing Finance. Also questions SEBI's quote-unquote double standards. That and more when we return. The Supreme Court has questioned, and I quote, the friendly approach by the CBI and the Ministry of Corporate Affairs in probing allegations against erstwhile India Bulls Housing Finance, which is now called Sammaan Capital. Shares of Sammaan Capital hit the lower circuit in trade after the apex court pushed the CBI to file an FIR saying it will strengthen the hand of the Enforcement Directorate. The court also questioned what it called, I quote again, double standards by market regulator SEBI. Now, Ashmit is here with more details. Ashmit, why has the Supreme Court decided to take this matter up? Who filed the PIL? Where does this now leave the issue of Sammaan Capital?
Well, this issue, in fact, travels back to 2019. That's pre-COVID. This PIL was filed by an NGO called Citizens Whistleblower Forum. This, as one of the members, Prashant Bhushan is one of the members. He was the one who was arguing today. And originally, when this case was filed before the Delhi High Court, it went through the motions. All the parties were made to hear, but it was dismissed. And it is an appeal of that Delhi High Court order that was today listed for hearing before the apex court. The concern that was raised is that Sameer Gehlot, the erstwhile backer, the founder of IHFL, India Bulls Housing Finance Limited, has fled the country. And on that argument is where there was a need felt. There was a argument made for a thorough investigation. Now, that demand, in fact, is what elicited sharp language from the apex court when it spoke of individual investigators. First, the CBI, the Supreme Court, in fact, bench headed by Justice Suryakant, not happy with the conduct of the CBI, questioning what it called was a friendly approach of the CBI, nudging it towards filing an FIR, saying that if CBI were to go ahead, file an FIR, that will strengthen ED's investigations. ED is the one that has been briefing the apex court as far as ongoing investigations are concerned. As far as ED's conduct itself is concerned, well, the ED clarified that, look, we've done our bit. We've reached out and filed complaints before the EOWs of Delhi and Mumbai, but those complaints haven't been taken cognizance of. And to that end, the ED said that we're open to hosting a meeting of all stakeholders put together where we can assess where the gaps in the investigation are and what needs to be done. And they proposed a meeting, including the SFIO, the CBI, ED, of course, as well as SEBI. And that is where SEBI appeared to be a little hesitant, which again invited sharp comments from the apex court, saying that this appears to be a double standards. Again, not understanding, the Supreme Court said, not understanding this hesitancy being shown by the market regulator, going on to say that when it comes on the issue of seizing assets or taking over property, SEBI is quick to act. But here, where there is a need felt for an investigation, SEBI appears to be hesitant, especially with the Supreme Court giving it a nod, giving it the jurisdiction to go ahead and investigate. So clearly at this point, seeking more scrutiny, that's the broad message that the apex court is sending out. But at the same time, important to clarify that no observations or findings were made on the merits of the case. Supreme Court only saying there's a need for more investigation, and to that end has sought for a status report. The next hearing in this case will be on December 17th.
जहाँ तक सम्मान कैपिटल का रास्ता है, तो ये पब्लिक लिस्टेड कंपनी है, ये डिफॉल्टर नहीं है किसी भी सर्कमस्टांस में, किसी का पैसा देना नहीं है, कोई मुकदमा या कोई इन्वेस्टिगेशन किसी भी अथॉरिटी की, सीबीआई, ईडी, सेबी, आरबीआई, कुछ भी पेंडिंग नहीं है। नाउ ये पिटीशन पहले हाईकोर्ट में भी दायर हुई थी, सारी अथॉरिटीज़ ने सब कुछ देखा और कोई गलत काम की आदेशा नहीं दिखाया गया।
Well, that's Mukul Rohtgi there, the counsel for Sammaan Capital. The Supreme Court, meanwhile, has struck down the provisions of the Tribunals Reforms Act relating to the appointments, tenure and service conditions of the members of various tribunals. The court ruled that certain provisions impact judicial independence. A bench led by the Chief Justice B.R. Gavai censured the government for trying to override the apex court's judgment by enacting a law. And more from the court, the Supreme Court has expressed frustration that the government takes no action on air pollution as it peaks in Delhi. The apex court also pushed the Air Quality Management Authority to consider avoiding sporting activities for school students. Remember, school students have moved the courts now. The government was also directed to respond to concerns on missing data and accuracy of AQI monitors. This after law firm Amicus flagged the use of sprinklers around AQI monitoring stations. In international news, President Trump hosted Saudi Crown Prince Mohammed bin Salman at the White House for a dinner last evening. Trump greeted the prince on his arrival with a group of fighter jets flying over. Before the two leaders walked inside, the Crown Prince announced that Saudi will raise its planned investments in America to $1 trillion. They had announced $600 billion of investments when Trump visited the kingdom in May. President Trump also elevated Saudi Arabia as a major non-NATO ally. This was the Crown Prince's first visit to America since the 2018 killing of Washington Post journalist Jamal Khashoggi by Saudi agents in Istanbul. President Trump shrugged off the killing, saying that Salman knew nothing about it.
As far as this gentleman is concerned, he's done a phenomenal job. You're mentioning somebody that was extremely controversial. A lot of people didn't like that gentleman that you're talking about. Whether you like him or didn't like him, things happen. But he knew nothing about it, and we can leave it at that. You don't have to embarrass our guest by asking a question like that.
About the journalists, it's really painful to hear, anyone that been losing his life for, no real purpose or not in a legal way, and it's been painful for us in Saudi Arabia. We've did all the right steps of investigation, etc. in Saudi Arabia, and we've improved our system to be sure that nothing happened like that, and it's painful and it's a huge mistake, and we are doing our best that this doesn't happen again.
Well, MBS was not the only high-profile guest at the White House. Cristiano Ronaldo, who currently plays for a club in Saudi Arabia and is the world's only billionaire footballer, was also present at the dinner table. The world's richest man, Elon Musk, who had a controversial 9-month stint in the Trump administration, was present at the state dinner as well. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
Talk Money.
Hello and welcome to a brand new edition of Let's Talk Money. I'm your host, Surbhi Upadhyay. Now, asset allocation. You've often heard on this show itself, a lot of experts talk about how important it is to diversify our investments across different asset classes. So it's very important not to be squarely focused on any one, equities or gold or fixed income. This is where hybrid funds come in. And within the hybrid category, one category called the multi-asset allocation fund category, this has been garnering a lot of investor attention. In fact, the flows into this category have been going up, and we'll put up some of the data points that highlight that. At a time when mid-cap and small-cap funds, traditional equity funds, they've been getting lesser flows, and I'm talking about the latest numbers which came in from the industry body AMFI. At a time when regular equity funds have seen slight dwindling in flows, this category, the multi-asset allocation category, has been quite steady. As you can see out there, flows have been averaging anywhere between 5,000 to 6,000 crores on a monthly basis. So what's behind this trend? Is it sustainable? And is this fund category really an important one when it comes to us and our journey of wealth creation? That's what we're going to discuss with R. Sivakumar, Head of Products and Corporate Strategy at Axis Mutual Fund. Sivakumar, thank you so much for joining in. It's a pleasure to have you, especially personally, now that you've taken the trip and you've come to our studio. So thank you so much.
Thank you. Thank you for having me.
So, Sivakumar, this is an interesting topic because in your earlier avatar with Axis Mutual Fund, I mean, you're a veteran of the fixed income market anyway. Now you're overseeing a lot of other categories as well. So just walk us through what you've made of the investor psyche and shifting investment trends as we've gone through a year of low returns to almost no returns in the equity category.
Yeah, it's a good place to start. I think equities have had a great run. And I think equity mutual funds have continued to see inflows despite, as you rightly said, well, not poor performance, but I think, consolidating performance, I will say, for the past year or so. It's interesting that flows have continued to be at a steady clip, maybe slightly off from the peaks in terms of net inflows into that category. One of the interesting things that we've seen, especially over the last six years or so, post-COVID, is that investors have continued things like SIPs even when there is market volatility, which was not the case before. Every time the market would slip, you would see SIP cancellations and redemptions because people would, get frightful. This is the first cycle where we have seen kind of an equity culture, if I may say so, getting built, wherein people are staying invested and adding to their investments, even if the market returns, near-term market returns are not very strong. So I think that's the first and most important thing that you can see in terms of investor psyche, let's say over the last few years that we have observed.
Okay, so that's what's happened so far. And then, tying in with that, and we always talk about it when the mutual fund numbers come out and everybody's looking at the net equity number, and sometimes it's lower and it's come down a lot from 40,000 crores per month to about 25,000 odd. But since I do this show and I look at personal finance, I see it as a sign of maturity, because simultaneously flows into hybrid funds and to this particular category, multi-asset category, they have started going up.
Yes.
So would you say that the lesson of asset allocation, that's finally getting learned? Is it getting learned well? And then, how do we look at some of these hybrid categories when it comes to asset allocation?
Yeah, it's a great question. And I think you're absolutely right. Multi-assets flows have remained strong through this entire cycle. So one could argue, why is it if equities are done so well, why is it that people are investing in multi-asset and so on? I think a couple of key factors drive it. One is the relative stability. So when you look at long-term returns from multi-asset as a category versus equities as a category, returns are in the same ballpark, very close to each other. There are some really long periods of time when multi-asset has outperformed equity even, but at a much lower level of risk. And so the first thing is multi-asset as a category, I think, has proven itself. And this is not an India story. This is a global story. Across many markets, you have seen this data that multi-asset as a category has delivered similar return to equity, but at a much lower risk. The second thing that has happened, I think, is the tax change on fixed income funds, which happened a few years ago, and therefore the drop-off of fixed income allocation.
Yeah.
And people have chosen to invest in multi-asset and other hybrid categories as a proxy for debt, meaning to also get some debt exposure. I mean, that's one of the important drivers of flows into hybrid as a category as compared to traditional fixed income as a category. So I think that's something which again multi-asset as a category has managed to capture. That is to say, you get an exposure to fixed income and gold and equity at the same time, and you get a much more tax-advantaged way of playing those three assets together.
That's a very important graphic on our screen right now, and let's just explain that to our viewers. What you're seeing is basically how asset classes perform across different market cycles. And there is never a fixed rule. You can never wake up on the 1st of January and say, this is the asset class that's going to be the winner of the year. Because in this data, we've taken 3 different buckets, 5-year buckets. And you can see in the first bucket, immediately after the global financial crisis, which is 2008 to 2013, equities weren't doing that well. The Nifty 500 is actually down. The 10-year G-Sec yield, basically fixed income was a better performing asset class, 9%, and gold, because we were in a risk-off environment, gold did really well. Come to the next 5-year bucket, 14 to 19, again, the returns are varying. Equity and gold somewhere around the 7 to 8% handle, fixed income 9%. And then the real equity bull market actually took off just after COVID, which is about 17-18% equity return, fixed income 6.5%, but gold did well even in this period. Now, who's to say, at least I cannot extrapolate the next 5 years and fill the 4th column of that table. But that's the thing. So, Shivakumar, let's address this. Asset allocation. For a lot of investors, they equate asset allocation to chasing kaun sa asset class acha karega. Now, gold did well, so let's put some in gold. And, maybe equities did really well, so let's go full hog on equities. How do we break out of that psyche?
It's important that you break up asset allocation into 2 parts. What's called strategic asset allocation and tactical asset allocation. Now, strategic asset allocation has got everything to do with your return risk profile, and when you look at studies which say asset allocation explains all the returns of a portfolio, etc., those studies are based on strategic asset allocation, meaning how much you allocate to the different assets you own substantially explains the returns rather than individual stocks or bonds. It's really how much you allocate which matters a lot when it comes to long-term performance. That's the first part, right? Once you've agreed on a strategic asset allocation, let's say the classic portfolio 60-40, 60% equity, 40% fixed income. And these days, that's up for debate. Does that 60 become 61 or 65, or does it become 55? So how do you, at the margin, make that allocation decision on a year-on-year basis, or even on a 5-year cycle, as your data just showed, that for 5 years you can have different assets perform differently, right? That's where tactical asset allocation comes into play. So tactical asset allocation is about trying to play shorter term cycles, from a few months to a few years, where you take a call on which asset class should be overweighting or underweighting. And I think that's where these multi-asset funds which take asset allocation calls come into play. See, as an asset manager, I cannot create every strategic asset allocation there is. Some investor may be close to 0% equity and some are 100% equity. Can I create products at every mix? Not possible. But we can create products which take these tactical calls.
That's a very important and very interesting thing you said. So first of all, it's okay to take tactical market-related calls with respect to asset allocation. It's not like against the cardinal rules of financial planning. There is the overall asset allocation that you should have depending on the nature of investor that you are. I mean, you're a risk-averse investor or etc. But there is a tactical element to it. And that's where these multi-asset funds fit in.
Correct. And you can do this by having multi-asset funds which buy directly into stocks and bonds and gold, etc. But you can also do through a fund of funds route wherein you're investing across, let's say, equity mutual funds, debt mutual funds, gold ETFs, and so on and so forth. So I think the way to play this is multiple ways. If you're, for example, owning a multi-asset fund in the traditional way, which owns stocks and bonds directly, then it's more of a bottom-up picking of stocks, and with, of course, macro and other overlay. But you can also do a fund of funds approach where you're doing a lot of top-down, right? Trying to figure out top-down, what's the right allocation to have, and then trying to find which funds, which strategies. Do you want to go into thematic or sector funds? Do you want to buy flagship equity funds? Do you want to similarly do on the credit side or a duration side, etc.? So that becomes an interesting way to have 2 or more approaches to tactical asset allocation.
Okay, so that's lesson number 1 that we've learned, that multi-asset funds could be an interesting way of blending more asset classes in a smart way into your portfolio, because we may not know all markets. We do not know which asset class could perform which way. There are, fund managers who have better visibility in all this and are more equipped at taking those calls. Now, Shivakumar, again, lesson number 2 is just understanding what these multi-asset funds look like. What is their structure? So I believe they have to invest in a minimum of 3 asset classes, right?
Correct.
And is there a minimum threshold, holdings? What is their overall, and what is the regulatory framework?
The regulatory framework is, yes, minimum 3, and the minimum within. So, for example, if you have equities, that has to be minimum 10%. If you have commodities, that has to be minimum 10%. So, from a regulatory perspective, to qualify as a multi-asset fund, you need to have minimum 3 asset classes, and each of them have to be meaningful. You cannot have
10%
1 or 2% in an asset class and call that a multi-asset, right? So the idea is to have some meaningful allocation, and the regulatory minimum is 10%. So most of the funds in the industry have gone with equity, fixed income, and gold, or commodities in general, gold, silver, and other commodities, as a way to satisfy this need. And I think that's probably the right approach. You could add global stocks, for example, as another asset class in this. I don't think anyone's really doing it. And in the current situation, of course,
There are limits on the global
limits,
exposure that you can take.
and that creates its own challenges. So therefore, today that may or may not be the right way to do it, but at least you can have minimum of 3, minimum of 10% in each. Whether you do that through direct investments or through a mutual fund, it's fine. But the idea is to have at least 10%. That's something meaningful. The second consideration that comes into play here is, of course, taxation. As we discussed, on debt, taxation is quite punitive in the sense you get marginal tax. Whereas if you do a fund of funds, or if you do a 65% plus equity or a 35% plus non-fixed income, then you get long-term capital gains tax, which is way more beneficial to investors. So that's the other consideration that fund managers have. That in theory, you could have a multi-asset fund which is 80% debt and 10% equity and gold, but it doesn't make sense because it's far more tax inefficient. So you would want to be equity heavy, or you would want to be at least reasonably balanced.
But that's also an interesting dilemma, perhaps, that it raises in itself, taxation. Yes. Because like you explained, that if first of all, there is no standard taxation rule for multi-asset funds. Please be very clear and make sure you keep asking your advisors about this, because the way a multi-asset fund will get taxed will depend on the amount of equity it's holding. If it is holding more than 65% of its assets in equity, only then does it get the advantage of equity taxation, which means that after 1 year, you pay long-term capital gains tax at 12.5%. So that's the most favorable taxation from our perspective, from the investor perspective. But that also raises a question, and just tell us what you see across industry. In order to be tax effective, if most multi-asset funds are anyway loading up on 65% equity, then are they really being true to their mandate, which is offering a great balanced multi-asset portfolio?
Yeah, so there are two choices. One is about 65% equity to qualify for the 1 year long-term capital gains tax. The other is to be above 35% in non-debt. So up to 65% in debt, but not crossing that 65 threshold, which means you get long-term capital gains after 2 years, but the same rate. So which essentially, 2 years is nothing for a asset allocation investor, right? So I think for investors who have beyond 2 years, you do have a greater choice of these multi-asset type of products, because you can do pure equity or equity biased, or you can have a more balanced portfolio. So both options are on the table. I think we take too short a view sometimes, and we believe that 1 year is important, but 1 year is not important from your investment life cycle, right? You are investing maybe for 5 years, 10 years or more, and so it makes sense to look at these funds from a longer term perspective rather than from a 1 year perspective.
Okay, all right. So now we've learned the basics of this category, the multi-asset allocation category. We'll come back, talk about reasonable return expectations from this category, and also figure out what are the kind of funds. How do you choose the right fund? How do you blend it with the rest of your portfolio? That and more after the break.
Let's talk money. Let's talk money.
Welcome back. You're with us on Let's Talk Money. And this week, we are discussing multi-asset allocation funds, why they are important, and just how they can complement your portfolio for better, more balanced, and more sustainable returns. And of course, we have with us our Sivakumar of Axis Mutual Fund for this conversation. So Sivakumar, the most interesting part, returns, right? So experts like yourselves tell us that from equity, I mean, reasonable expectations would be like 12 to 14% compounding returns over long periods of time. In good years, it could touch 15%. Now, if you add more masala to the mix, because you have multi-assets now in this fund category, then what's the return expectation?
I would hope that this category can deliver returns which are broadly similar to equities, but a lower risk rate. So what that means is that, why that happens is because of the two things. One, these funds tend to be less volatile, therefore they have less drawdowns. I mean, if you think mathematically, right, if a fund falls from 100 to 90, there's a 10% fall. To get back to 100, you need 11% gain because 90 plus 10% is only 99. So it's not enough to get back to where it was. So the drawdowns are never fun. I mean, if you go from 100 to 75, which is a 25% fall, you need a 33% return to go back to previous peak, right? So volatility containment is the first way that these funds manage to keep return. The second thing is being able to take calls. I mean, as you pointed out earlier, this cycle gold has, I mean, equities have done really well, but gold has done even better. So how do you kind of have a process around picking which asset class to buy and therefore be able to deliver some alpha through that? And because of this, we expect returns in this to compete with equities. I think in a bull market, it's tough to beat an equity fund, but over a cycle, to be able to compete with equities in terms of performance at a lower rate of risk is what we would expect to do. And as I mentioned before, right, one of the interesting things is this is across the world. It's not an India-specific story. If you look at asset allocation everywhere in the world, you've seen similar to equity returns at a lower rate of risk. So it's globally valid statement that returns for multi-asset will be similar to equities.
Okay, that's quite phenomenal, right? Equity-like returns with lesser volatility. Now, who wouldn't want that? Which also brings me to the question, then how do you pick the right MAF, as they're called? If you hear that acronym MAF, you know we're talking about multi-asset allocation funds. How do you pick the one that's right for you? Because all of them would be running different strategies. Someone would have, more gold, less gold, more equity, less equity. So how do you decide?
I think, first of all, align to the asset allocation choice. I mean, as we discussed, some may have more than 65% equity and therefore bias would be towards higher volatility or higher equity allocation, and others would have a more balanced mix. So take that. Go for the right strategy. I mean, are you doing a pure equity debt approach, or are you doing fund of funds? Because again, that makes a difference to the return profile and the risk profile of that. So I think choices should be made more on the underlying asset allocation or the ranges which the fund managers are guiding, and the investment strategy. Is it a top-down fund of funds approach? Is it a bottom-up stock picking approach? And that would be the primary driving force. And of course, track record does matter. So you'll have to look at whether in the fund house is delivering on that, whether it is through returns or whether it is through actual positioning. I mean, if you are claiming to be an active asset allocator but you run passive, that's not helpful. Similarly, if you expect to be passive but then you're seeing wide ranges, again, that's not helpful. So what does it align with your view? As an investor, does the fund strategy align with my view? And that's going to be the first port of call.
Okay, fair enough. So plenty to think about as you make your final choices. Now tell us, at Axis Mutual Fund, what's the house call on different asset classes? I mean, what are you guys tactically most bullish on as we get into 2026?
The interesting thing is there's been a change in the market outlook over the last year or so. I mean, the most important thing, and I come from a fixed income background, so I'll start there, which is to say that, we've had an RBI which is extraordinarily accommodative, and yet bond yields have risen for the best part of the last several months, which usually is a signal that the economic cycle is turning up. Right? So expectations of inflation are slowly going up, and eventually with a 1 year, 2 year forward view, the market slowly expecting rates also to start moving up. That's what this suggests to me, that why is the market not reacting to today's movement of the RBI? Now, if the economic cycle is turning up, then obviously that's going to mean equities are
positive for equities.
Positive for equities. So really speaking, even though we've had relatively soft equity performance and relatively good bond performance over the last couple of years, I think the script is likely to flip, and bonds are likely to be middling. And I think if the growth cycle comes back, then equities will outperform. The other thing is how India has performed relative to the world. We have underperformed, and underperformed massively. So valuation, or shall we say the valuation premium of India to Asia or to the world has massively corrected.
Reduced, yeah.
Right? And we are now reasonably valued compared to the rest of the world. And if there is a change in the global investor psyche to move away from tech and AI, etc., to going back to fundamentals, then I think India will be a big beneficiary. As an allocation, so much of the money which has gone out of India has gone into tech stocks or China or any of these themes. And if that theme changes, suddenly you will see a big beneficiary. So I think we are a lot more positive on equities. I think fixed income will be more middling. I think gold really is about playing shorter term cycles, figure out gold and silver. Relative performance between gold and silver has been an important theme for us, rather than just absolute call on where gold will go. I think we'll continue to play that.
So still bullish on both gold and silver?
No, like I said, it's not about bullish on gold versus bullish on silver. I think for us, the way we've made money is actually weights between the two, meaning at what point of time do you want to be overweight silver, overweight gold. Keep a reasonable allocation, but play through relative valuations, relative prices, let me say.
All right, so that gives us sort of a broad framework that you at Axis Mutual Fund, your teams are deploying to take those investment calls. Finally, back to multi-asset allocation funds. In an overall portfolio that'll have equity, large cap, mid cap, small cap, it'll have some other maybe these dynamic asset allocation funds as well, because they also move across equity and debt. How much should we give to MAFs?
There is no, we moved it from a realm of asset management into personal finance. And I think it's a great place, it's a great question from that perspective, because it affects all of us individually, right? At a minimum, it should be 10-20% of your portfolio should be in this mid space, meaning it's not pure equity, pure any one asset class. Then you need to have the tactical ability to switch. But then it changes according to every investor. So there is no one way of looking at it. But have a reasonable allocation, because these small cycles, 1 to 3 year cycles, do make a difference when it comes to performance. And as a normal investor, I mean, I work in an asset management company, and yet I myself take a reasonably passive view to my own investments, right? Because I'm not out there trying to make changes on a daily basis. So why not let an asset management company, let a fund manager pick that call, and you make your broader decisions as an investor. And that's why I feel that have a small but meaningful allocation to this hybrid category.
Okay, all right, Shivakumar, thank you very much. Great insights there, and plenty of food for thought, as well as perhaps investors look at getting more involved with their portfolio, adding more hybrids, and adding more than equity in terms of asset classes to their portfolio as well. Thank you so much for this conversation. Well, thank you, viewers, for being with us. Keep sending us your feedback, comments, queries, and of course, we'll see you again next week with another theme.
Let's talk money.
Hello and welcome. You're watching News Center. I am Ashmit Kumar. Now, the air quality in Delhi continues to remain in the very poor category. As per data recorded by the Central Pollution Control Board, the AQI levels at 18 out of 38 monitoring stations stood in the severe category. Early this morning, the Supreme Court has expressed frustration at the lack of action and has sought a response from the government on the concerns raised on pollution. The Supreme Court has ordered that the matter be heard monthly to monitor the action taken by authorities. This comes after an amicus curiae pointed out concerns on missing data from AQI monitors and the alleged use of sprinklers around AQI monitoring stations. Amicus noted that the action plans have been in place since 2018, but implementation has fallen short. An amicus is an independent legal expert appointed by the court to provide assistance in a case. The amicus also told the court that schools were holding sports competitions in November, December. Despite the toxic air, the court has now asked the Air Quality Management Authority to consider halting such activities for students. And well, joining us now to take this discussion ahead is with us Shambhavi Shukla, Program Manager of the Center for Science and Environment, Air Pollution Unit, as well as Amit Bhatt, Managing Director of the International Council on Clean Transport. Mr. Bhatt, Shambhavi, thank you so much for being a part of this conversation. Mr. Bhatt, let me come to you first. The submission that the Delhi government today made before the Apex Court is that, look, the theory is in place. It's the practical, it's the implementation which requires more scrutiny, which in fact elicited a response from the amicus saying that, look, the theory has been in place since 2018. So it's been a long time coming, yet we seem to wake up every time, this time of the year, with AQI numbers north of 300, 400, mammoth numbers. What are the challenges in implementation that we're facing on the ground?
Thanks a lot. So that's a very important question because we know what works, at least in terms of vehicle. And I think that the action is how do we get these things implemented? So, especially when you look at, when we talk about transport, again, global evidence shows there's absolutely no other way but to electrify our transport. But we don't have concrete policies of electrifying everything in them. I mean, if we have to really look at reducing emissions from transport, which is 7 days a week, 12 months a year, we have to absolutely accelerate electrification. And you can see examples either from London, from Beijing, or even in California. The technology is available, but there is no will to implement it. We are still relying on people to to buy these vehicles, not mandating OEMs to sell the vehicles. So at least from transport side, Delhi have to absolutely convert everything to electric as soon as possible, maybe in next 5 years or so.
Interesting. Ms. Shukla, let me come to you. One of the key aspects that was flagged in the previous hearing by the amicus and also today as a part of today's proceedings is fudging of data. Are the numbers that we have on AQI even accurate? That's the question being posed. A lot of media reports have come to light which suggest that as a lot of these monitors, there are 38 of them, a lot of these monitors go dark for large parts of time, large parts of the day, leaving big gaps in the data availability with respect to what the actual AQI numbers is. That's one. And second, of course, there are a whole host of media reports which suggest that sprinklers were deployed near AQI monitoring stations to fudge the numbers, to distort the numbers. What do you make of these charges, these questions?
So, of course, there were times when the data was missing from the portal that we get through. So, of course, there must be something which is happening. But then when we talk about sprinkling of water that's happening around the monitoring station, so that happens because some of them are also hotspots area. And we need to actually reduce the pollution around the hotspots area because there is a lot of dust which is being generated and that is present over there. But then what we require, like actually what we should talk about is what we require right now immediately to make sure that we are not reaching the levels of 500, 600 of AQI right now. So currently the AQI is almost touching 400, which is severe category. So then we should actually look for some systemic infrastructure reforms to be in place so that we can work towards like how this, it's a long-term problem. It's not a short-term problem. And these band-aid solutions actually won't help in reducing the pollution levels of the overall city. So what we require is a long-term sustainable solutions that can be implemented all the year round so that like
maybe after 5 years or what, we can see some change happening. As Amit also rightly said, that
That's an
we
interesting
need
use of language
electrification
there,
target
Ms.
for sector.
Shukla. That's an interesting use of language that you've used. A band-aid solution is not something that will fix this problem that we have on our hands. Let me then ask a follow-up question. There were also conversations not very long back where we were discussing issues and options such as seeding of clouds to have artificial rain in the national capital. Is that a band-aid solution as well, or is that something that's worked overseas that perhaps can yield results, or is it again a shot in the dark here by the Delhi administration?
So see, cloud seeding is a very specific, a short term, of course, a solution to the rising air pollution or the peaking of air pollution when we talk about the severity, basically to decrease the severity and bring some relief to the citizens. So, but then cloud seeding is also not a sustainable solution that we can talk about. Like, of course, it requires a lot. It requires a lot of preemptive things, like a cloud should be in a certain there should be certain humidity in the clouds that should be present, and these are just experimental things that can take place. It's not a permanent solution that whenever the pollution is rising, you can just go ahead doing the cloud seeding process. So that's a lot of preemptive steps that you need to take place before doing that kind
Stopgap
of
measure at best. It's not a sustainable solution. Mr. Bhatt, coming to you, as far as sustainable solutions are concerned, we've seen very smart strategies being deployed by farmers when it comes to paddy burning. We find that they have now coordinated their timings of when to burn the crop residue after the satellites have passed over the northern plains of the country. When we're dealing with such an approach, how difficult again will implementation be on the ground to translate the theory of the policies into the implementation on the ground?
Absolutely, Asad, and that's a very important point that you made. I think what we have to do, and somebody also mentioned that, right? We have to solve problem of two. And one way to solve the problem is to bring technologies that don't emit. Zero emission. And I think in the transport sector, we have these technologies available. So that Delhi has to absolutely convert this to electric, and it also go beyond transport. So I think construction is also a major key. You can also have construction equipment that's zero emission vehicles. You can also have agriculture based on zero emission. Electrical processes. I think electrification has to be a front and center of the conversation. It will take time, but at least we know how we have pathways. The pathway will be reduced emission.
Mr. Bhatt, we have some difficulty connecting you to the studio. I believe there's some difficulty. We're not getting a very clear connection with you. I'll request the production team to get back to you on a cleaner line. But while we do that, Ms. Shukla, again coming to you, when you talk of sustainable solutions, where is the gap in terms of accountability? We have the Supreme Court monitoring this entire issue for very many years. The MC Mehta matter goes back for longer than I've been around. There's also a CAQM that has been instituted. There's an MOEF. There's a state government as well. Where is the lack of accountability here in terms of enforcement?
So even if all the departments, all like you rightly have said, that we have everything in place right now, all the actions are identified, what each government departments have to do, but then what is lagging right now in terms of implementation on the ground is the enforcement thing. So even if you go around Delhi and see that there are a lot of roads which are unpaved, which is causing a lot of dust pollution, but that there is some sprinkling happening, but then there is no work that is acting as a permanent solution to it. So for example, a road may be getting constructed from last 4 years. There must be something project that is going on, but then that is creating a lot of dust pollution. So that is hanging around for a longer time, and there is no enforcement mechanism that is present right now. Even we have apps like Sameer app, Bandeli app, where you can go and complain on the whatever you are seeing around you in your neighborhood, basically, that what are the sources of pollution. You can easily go and complain, but then there is not much resolution that is happening to those complaints right now.
Let me ask a follow-up question. Very often we see how Beijing was at the time when they were hosting the Olympics, the situation there on the ground, the flack that they got from the international media. Now they appear to have sorted out the situation in Beijing. AQI levels is no longer an issue. What seems to have worked in Beijing? Something that we can adopt here, something that we can make work here in Delhi as well?
So see, what worked in Beijing, one thing is their willpower to actually implement and enforce all the actions and the plans that are already in place. So like the major and the biggest thing that has worked actually in Beijing, and the tough actions on each sector. So then what we need right now is sector-wise strategy to how you can reduce pollution. For vehicles, when we talk about, we say that we need like set targets for each segments for electrification. But then at the same time, when we talk about waste burning, so we need proper segregation, proper management of waste, since all the waste together is being, be it organic or inorganic, is being dumped at the waste site right now. So that is not being properly managed.
Right, Ms. Shukla. We happen to have Mr. Bhatt joining us again, this time hopefully on a clearer line. Mr. Bhatt, coming to you, the organization that you work for, ICCT, operates across geographies. Are there solutions overseas that we're not looking at, low-hanging fruits that we could consider for a longer-term resolution of this crisis that we have here in Delhi? We've lost Mr. Bhatt once again. I'll just go back to Ms. Shukla for a final comment. Ms. Shukla, is this, you've been pointing out through the course of this discussion, a lack of implementation, a lack of enforcement. At the heart of it, would you attribute it to perhaps a lack of political capital, political will behind the issue? Very often we see leaders of neighboring states point fingers at each other, but not really work towards a very pointed, specific solution. Is it an issue of political will, political capital that is required for a long-term resolution?
So you have rightly said, the willpower specifically at all the levels, actually, not just political level, but then at the government level, at the citizen level, that is important. And what is happening right now is in Delhi, if we talk about, there is 60% of pollution that is being generated by Delhi itself. So each state, instead of blaming each other, we should work on our own pollution, curbing the emissions that we are generating. Because whenever there is a downwind, state would put allegation to an upwind state that the pollution is coming from them. But then what is happening is Delhi is also getting pollution from other cities, whereas Delhi is also contributing to other cities' pollution. So we should actually work at two levels, where we are working on our at city level as well, and also at a regional level too, because this is a problem of the Indo-Gangetic plain. Overall, the pollution is bad.
Right.
We need to work at the regional level as well to resolve this issue.
Right, Ms. Shukla. Again, Delhiites here, not just Delhiites, in fact, people across, as Ms. Shukla was pointing out, across the Indo-Gangetic plain of North India will be hoping for some political wisdom to be applied to this issue to ensure that there is some longer-term resolution of this crisis-like situation that is affecting the whole of the Indian northern plains. That's all the time that we have. I'd like to thank both of our panelists, Mr. Bhatt for joining us, as well as Ms. Shukla for sharing their insight. But with that, it's time now to head into a very short break. Coming up next, External Affairs Minister S. Jaishankar met with Russian President Vladimir Putin in Moscow ahead of Putin's India visit, briefing Putin and other Russian leaders on the preparations that are underway in the national capital right here. Stay tuned. We'll be back in just a bit. Welcome back. You're watching News Center with me, Ashmit Kumar. Now, External Affairs Minister S. Jaishankar met with Russian President Vladimir Putin in Moscow at the SCO Heads of Government meeting, just a day after talks with his counterpart Sergei Lavrov. The two sides firmed up plans for the India-Russia summit this December, where Putin is set to return to India for the first time since 2021. While Jaishankar was briefing Putin and other Russian leaders, Patrushev, an aide to Putin, met with Prime Minister Narendra Modi to review preparations for the December summit. The Russian embassy in India posted later on X saying that the leaders held detailed discussions on a wide range of issues related to bilateral cooperation, and this summit isn't just routine. It marks the 25th anniversary of the India-Russia Strategic Partnership Declaration and comes at a time when global tensions are high and Trump's tariffs are reshaping geopolitical equations. Joining us now to take this discussion ahead is with us senior Russian journalist Tatiana Kukreva and Professor Amitabh Singh from JNU Center for Russian and Central Asian Studies. I'd like to thank both of our panelists for joining us. First to you, Professor Singh. Just want to get a sense that the big news trigger, of course, that we saw today is that Russia going all out, saying that Sukhoi 57, their frontline fighters, fifth generation stealth fighters, extremely protected technology. Russia says we're open to a transfer of technology arrangement with India. We're open to have the Su-57 being manufactured, being produced here in India. I just want to get a sense, is it merely a reaction to closer ties that India now has with US, with France in terms of military and defense? Or is it perhaps a bigger message that Putin wants to send out before his visit to India in December?
Thank you, Ashmit, for having me here. You know, the difference between when we purchase our defense goods from Russia or from any other country is that Russia generally gives the licensing rights, the production rights, and the transfer of technology to defense components, even the entire defense product for that matter. If you see the development of BrahMos missile, it's jointly developed by India and Russia. We have been making them, selling them to other countries, including Philippines, Armenia, and many other states which are in the pipeline. So that's the difference that we have. It's not about Putin coming to here, coming to India, and it's in the background of this. This has been happening for years now. And it was earlier also during Soviet period that we used to get the technology, unlike the Western counterparts. For example, last year, when Prime Minister Modi went to Washington and met Biden, they agreed to have GE plane engines to be manufactured in India. They transfer the technology, but with the limitation that this transfer of technology cannot be further used to sell it abroad, those engines. So that's the difference. That's why we prefer Russian defense commodities. And for years, we have been doing that, Ashmit.
Fair enough. We also have with us Tatiana Kukreva, who's joining us. Tatiana, thank you so much for being a part of this conversation. Again, I was just having a conversation with Professor Singh on the importance of the Su-57 being offered, transfer of technology being offered. I just want to get a sense that at a time when we have a very hawkish US administration, what kind of ties can Russia and India explore on, even on defense terms, realistically, given as how that even for the S-400, the US was not very happy, Donald Trump has not been very happy, and they're looking to clamp down on this partnership. Realistically, how much more wiggle room is there available for Putin and for the Indian Prime Minister to explore even greater defense ties?
Good evening, and it's a pleasure to be on with you this evening. Look, it has been already, you know, the pressures that have been put on both India and Moscow have been quite extensive. However, this partnership between Moscow and New Delhi has already proven itself as sort of a staple for the global South. You know, the two states who are unafraid to stand up for each other's and their own national interests. And I believe that no matter what the American administration, any American administration wants, you know, we need to remember that the American administration will always work in the concept of America first. So with the understanding that for Prime Minister Modi and for President Putin, it has been about India first and Russia first, respectively. This partnership can still be extremely fruitful for both countries. Because, I think that both have already proven that despite the pressure, the fruits of that partnership, be that economic, be that energetic partnership, be that defense partnership, have already been exceeding all expectations and exceeding the amount of pressure as well.
Well, I just want to ask a follow-up question that this comes at a time when India is negotiating a trade deal with the United States, and India has shown that there are some aspects that it's willing to relent on. It has stopped buying Russian oil, one, and two, has also agreed to buy LPG, 10% of its domestic requirement from the United States. Having shown that, again, I ask the same question that at a time when India is negotiating a trade deal with Donald Trump, when he's looking to slap a lot of tariffs, is there, again, as you said, pressure on both Moscow and Delhi in terms of perhaps peter down the level of cooperation that they can ideally showcase before the world?
Well, this is the tricky part about negotiating with Donald Trump, is that you can't negotiate without having a firm hand. And I believe that Prime Minister Modi has already shown that he has his interests and he's willing to stand up for them. And he's not going to agree to any deal that is not in India's interest. So with that in mind, we need to also remember that Donald Trump's negotiations technique is about trying to push the other side into a corner. I believe that these negotiations are still going to prove very, very interesting in some time to come because, it still comes down to the fact that Prime Minister Modi is very firm about India's interests, and it just so happens that India is allowed in this world to have the interests that not always align with the US ones, and that's okay.
So make Russia... So again, it needs to be a Russia first, India first approach. Professor Singh, I'll again come to you. A similar question that at a time when India is negotiating this trade deal with Donald Trump, again, no clarity on when we can perhaps hope for some clarity on that. The question that I want to ask you is, at the time of these negotiations, hosting Russian president here in the national capital, what message is India looking to send to Washington in the midst of these negotiations and conversations?
Ashmit, first of all, this is an annual exercise which India and Russia has been doing for the past 25 years, except for a few years during the COVID and a year or two after the start of the Ukraine war. We have been doing this. So this should not come as a surprise to the best. The second question, the most important part, that we are negotiating with US on a trade deal. Yes, we are doing that. Prior to that, we had a very good relation with Russia. We used to buy defense goods from them. During the Ukraine war, when the prices of the oil went down in Russia, we started buying oil from them. But because of the sanctions against Lukoil and Rosneft, we have actually, sort of stopped buying oil from them because of the sanctions. Now, this will not have any implications for India-America tariff deal that we are likely going to sign. And we have shown signs of it also earlier. And it's not that Prime Minister Modi is only meeting Putin. President Trump also met Putin earlier. So it's part of a diplomatic exercise and nobody raises eyebrows. But the only fact is that at this time when Donald Trump has been negotiating, or we are trying to negotiate with US, this will come as a sort of diplomatic coup for India, in the sense that we'll try to understand what's there that we can further increase our relationship with Russia. That has been a bone of contention.
That's an interesting perspective that you give to us. That's an interesting perspective that you're giving to us, that it could perhaps play the role of a diplomatic coup, given that Putin is coming after 2021 to India for the first time. We're completely out of time. Professor Singh, I'll just come to you for one final question. Russia also is now developing very close partnership with countries like Pakistan. It has a no-limits partnership with China. This new dynamic that is at play when Putin comes to Delhi, how does that change conversations as to where India-Russia ties can go from here? Does that inherently perhaps put restrictions on Moscow from exploring deeper engagement with the Indian administration?
Russia has made it very clear that in Russia-Pakistan relationship will not be at the cost of India. They have made it in so many words, clear in so many words. Russia-China partnership, it has always been there. And we have always tried to see Russia with our own eyes rather than with the Chinese eyes, so as to say. That relationship with China has, developed and has been closer during the Russia-Ukraine war. But that notwithstanding, we have a tremendous relationship with Russia. Our 70% of military hardware is dependent on Russian supplies, right? And they supply it, they have been supplying it for long. We cannot just simply abandon our relationship because China is closer to Russia. We are much more closer to Russia historically, sentimentally, emotionally, whatever you might call it. And this is going to continue. China is a rival for us, both economically and we have military problems with border issues with each other.
Right, Professor.
But that would not come in between India-Russia relations.
Well, a lot of these questions will get answered perhaps when President Putin lands here in Delhi. We're given to understand it's likely to be in the first week of December. Of course, we'll continue to get our viewers the latest on that visit. But that, unfortunately, is all the time that we have. I'd like to thank both of our panelists, Ms. Kukreva, Professor Singh. Thank you so much for sharing your insight. But with that, it's a wrap on this edition of News Center. More news and updates will continue right here on CNBC-TV18.
Hello and welcome to the Medicine Box. Today we're diving into a subject that often feels more like science fiction than medicine: longevity. The quest to live not just longer but healthier. Recent headlines have pushed this conversation into the mainstream. Indian entrepreneur Dipender Goyal has invested $25 million of his personal wealth into a new scientific initiative, Continue Research, whose first hypothesis suggests that gravity itself may accelerate aging. Hence, an increase in average brain blood flow could help. Globally as well, longevity has become a frontier of bold ideas and even bolder spending. Biohacker Brian Johnson pours over $2 million a year into reversing biological age. Investor Peter Thiel calls death a technical problem waiting to be solved. The X Prize Health Span competition has put up $101 million for innovations that can improve healthy aging, and in March 2025, even the Vatican convened a summit on the future of longevity, underscoring how universal and urgent this topic has become. Meanwhile, research continues to advance rapidly, with new work emerging on drug repurposing and multi-drug interventions that could slow age-related decline. All of this, the capital, the curiosity, and the controversy, raises fundamental questions. Can we safely manipulate our bodies, our biology? Who will actually benefit? And what ethical boundaries must we respect as we push the limits of human lifespan? To help us unpack these ideas, we have with us Dr. Hemant Thakkar and Dr. Sahil Kohli joining in for this discussion. Well, Dr. Thakkar, I'm going to start with you, and let's begin with the headline that everybody is discussing about the fact that this gravity hypothesis by Dipender Goyal's research company, that anti-gravity can actually help in terms of reducing your age or reducing aging and helping in longevity.
I like the term hypothesis because it is a good hypothesis, but still a hypothesis. There is some truth that vascular health and brain health go hand in hand, and that if you stand up, the cerebral circulation drops by 10 to 20%, or if you have diseases like high blood pressure or diabetes, you compromise cerebral circulation, which can cause cognitive decline. But where it remains a hypothesis is that there are no biomarkers to this effect. And the inversion phenomena, even done by NASA, does not show anything to prove that the cerebral blood flow is the lifeline of longevity. So one has to look at it carefully. I agree this is a good hypothesis he has come up with, and one needs more facts.
Okay. Well, Dr. Kohli, this entire conversation about anti-gravity ties into the fact about the discussion about longevity, which is actually picking up so much pace. So when we talk about longevity, Dr. Kohli, what exactly does it mean to doctors such as you?
Longevity means adding life to your years. It doesn't mean adding years to your life. So the good quality of life where you are doing everything on your own, not dependent on others, able to travel yourself, able to cycle yourself, and do most of the things yourself, that is actually good longevity.
Okay. But Dr. Thakkar, when we talk about that, what does longevity mean to you? Because now we have a whole host of people who are almost celebrities becoming longevity advocates, experts. So what, according to you, is longevity?
See, science tells you that living long is not enough alone. You must live well. It's not the quantity of life alone, but the quality of life. If you have life backed with good, vibrant, holistic and science-backed lifestyle maneuvers, which do not give you cognitive decline or chronic illnesses, that's it. If you have a decade longer, but in that decade you're struck with cognitive decline, chronic illnesses, and you have to fight that last decade of life, it is of no use. So a decade long versus a little less but quality, that is, you have to change and chase health span, not lifespan. Health span over lifespan.
Okay. Well, just talking about that, there is data which shows that lifestyle changes itself can add around 12 to 14 years, disease-free years to a person's life. So what are possibly the 3 most evidence-backed changes when it comes to lifestyle in order to possibly extend your health span?
Excellent. Your data is correct. What goes in from the lips, what you eat and drink is most important. That's one. How much you can walk away from aging, which means exercise. Exercise in any form, isotonic, isometric. And 3, the mind over the body. If you sleep well, you have a relaxed mind. If you interact, you have positivity. If you are happy, you have a healthy and heartful, long, lengthy, happy life. So you must look for those three things. And if you adopt these three lifestyle changes, that's the best way. Of course, there is a genetic component which is there. But you can override this genetic component and live quality life, may not be longer, by practicing these three golden rules of lifestyle changes.
Okay. Well, Dr. Kohli, I'm just going to toss that over to you as well, because in your practice, in your practice itself, you must be probably seeing a lot of patients with early onset dementia, early onset Alzheimer's. So in that sense, how much of it is possibly lifestyle related? How much of it is genetic? And what do you tell your patients who are aging in terms of the best habits that they should probably adopt?
What we have to understand is that aging is a normal process. So once a patient of dementia comes to us, we usually try to see, is there a reversible cause of dementia which is sitting there? So there are some vitamins like vitamin B12 deficiencies, vitamin D deficiency. Some people who have other deficiencies can have, dementia. But more oftenly, the people who have comorbidities like hypertension, high blood pressure, high cholesterol, and who are obese, they are more likely to get it. On the other hand, if we are physically active, as Dr. Thakur has clearly told, we are checking on what we are eating. We are not ordering food from outside. We are eating home cooked food. We are being physically active. We are catching enough sleep. And we are having a good social, circle, which motivates to do things better, like maybe going for a walk together, going for a cycling session together. That usually adds to your dementia prevention or aging prevention.
But how much of it is probably lifestyle related? When somebody who is, say, 70 years old, 75 years old comes to you, you see that they have early onset dementia. How much of that is possibly what they've done in their early years, say in their 40s or 50s or maybe even 30s?
See, that is also very important because, see, the diseases which we see in 60s usually start in 30s. If somebody continues to have overweight in their 20s or 30s, they are more likely to have hypertension and diabetes. If somebody is not being physically active and being sedentary, that again adds to inflammation in the body and overall leads to less cognitive ability. So those people who continue to have obesity, don't take care of their hypertension, don't take care of their blood pressure, they are more likely to have it.
Okay. Well, Dr. Thakur, just coming to you with regards to that, 80% of chronic diseases, again, according to data, shows that it begins in the 20s and 30s. So when we are talking about longevity, when should we actually start thinking seriously about longevity?
The seeds of aging are sown as early as the second and third decade of life, because there is erosion of organs, of cells, of hormones and everything else. So which is why you have to practice regularity, punctuality, limited indulgence, and a disciplined exercise, diet, sleep regime. That doesn't mean that I'm sounding like a priest who's going to only preach. You do have lacunae where you can have the sporadic bursts, what we call a diabetic date in our diabetics. But all in all, you have to follow the rule of lifestyle. If you start early, a stitch in time gains 9. So you have to start early so you don't bring on the diabetes, the hypertension, the lipids, which are accelerators of aging.
But who's thinking about all this when in their 20s and 30s?
We have to think. We are today talking not only for our 70-year-old citizens. We are talking to them so that they can advise their 20 and 30 and 40-year-old relatives or friends to begin early. Because if you want to reap the fruits, you must have a good harvest and a good sowing season.
So what should they start practicing in their 20s and 30s, or what should they refrain from?
You know, Saturday nights in our country means party, late night, binge, everything else. Saturday night in some countries means sleeping early, so you can go rowing, you can go camping, you can go sporting the next day. So you have to cultivate this art of sleeping well to do physical exercise, of eating healthy. That doesn't mean you don't party. And if you have good interaction with happy, healthy, not chasing target lifeline, that sows the seeds and you begin early.
But how much of this is probably genetic, aging?
Definitely 20%, maybe 30%. Because if you have the genes passed on to you which tell you that, look, in your family, this is the programming of the chromosomes, then you have a 70% chance of altering your lifestyle to not pamper the bad genes, but to play to the gallery of the other genes and slowly work towards lengthening it.
That just brings, it just sort of gives me an example of cardiovascular diseases as well. A lot of people have genetic cardiovascular risks as well. But there is this whole condition of VO2 max, which is basically trying to see the endurance that you have in, or the maximum amount of oxygen you intake when you are exercising. Have you looked into that? Are patients talking about it?
In fact, you will find that the knowledgeable ones and the enlightened firms are all inculcating gyms, health programs. At one of the leading media houses where I am attached to, they have a canteen which gives health food. The servings are all programmed from that point of view. At offices where I am advising, they have a gym in the office. So if you can't walk and work out in the evening after a long day, you get that 30 minutes in the daytime. So you can begin. It's not impossible. Where there is a will, there is a way. And if the will tells you that you want to burn the candle longer, then you need to work brighter on the candle so you can enjoy longevity.
Well, Dr. Kohli, just wanted to come to you about preventive testing, because when you speak to, most of your peers or your friends, they say, oh, nothing's wrong. I don't need to get any sort of preventive testing done. Hum to theek hai, until something goes wrong. What do you tell your patients? What is the checklist of, say, preventive testing that you subscribe to your patients, and at what age would you prescribe it, rather?
See, we have to see the diseases like hypertension, diabetes, high cholesterol. They are very important and they are not picked up. So there is a saying about hypertension that only 50% of the people who have hypertension, that they know they have hypertension, out of which half of them do not even get treated and half of them are undertreated. So conditions like hypertension, if there is a family history, and even if there is no family history, they have to be regularly checked. So at least once a year, there should be a checkup where we check about how is our thyroid doing, how is the blood sugar doing, and there should be regular monitoring of blood pressure as well. If there is we are being overweight and BMI is high, that also needs to be monitored and the weight needs to be reduced.
Okay, so if you had to if you had to recommend maybe the lowest effort, highest impact change in lifestyle, what would it be, Dr. Kohli? Because, some people say that 8,000 steps, 10,000 steps, or even 12,000 steps reduces your mortality risk significantly. So what is it that you would recommend as a doctor?
See, it depends upon what person likes, which they don't feel burdened to do it. So it has to come naturally and effortlessly. See, it can be as simple as walking 7 to 8,000 steps in a day, or maybe doing some kind of aerobic exercises, or doing some kind of strength training 1 to 2 times a week, or going for a cycling 30 minutes for at least 2 to 3 times a day. So any kind of physical activity which they do regularly and persistently over a period of time will actually help them.
Okay, so you would put exercise at the top of the list?
Yes, exercise, yes. And dietary, definitely the second one, because diet is also very important. We are eating all kinds of processed foods which are having high refined carbohydrates and not eating proteins, especially in our Indian population, which leads to ultimately sarcopenia and low muscle mass, because muscle needs proteins to grow up. And once the muscle mass is less, there are more chances, you're becoming more vulnerable to have infections, you're more vulnerable to have falls, you're more vulnerable to, not recover very well from the illnesses, and the cardiovascular as well as your brain health deteriorates because.
Okay, but there is a whole set of people who believe in a plant-based diet and who believe that, vegan diet results in longevity as well. So how do you balance the protein part of it there?
So they have to take supplements for that, and they have to be more physically active, and they have to make sure, especially those people who have a family history. So they have to be more physically active, and even the vegan diet is okay, but then they have, for making proteins, they have to take some supplements also. And on top of that, they can go to, the strength training can be a major part for them so that their muscle mass gets maintained.
Okay, so is strength training possibly more important as we age? If you could just give us more details in terms of how important strength training is and from what age especially.
So strength training is very simple. More strength training means better muscles. Better muscles means we are able to endure more and we age slowly. And the strength training should begin early, even if, ideally it should begin early, but even if we are in 50s and 60s, we do some kind of a moderate strength training, which can be, the functional training part also without using weights. That also adds up to making muscles, toning up the muscles and falling less sick.
Okay. All right. Well, Dr. Thakkar, we've spoken about exercise now, and that probably is one of the top of the list in terms of increasing your longevity. But a typical Indian diet is quite high in terms of carbohydrates. So how important is diet when it comes to aging, or diet when it comes to longevity? And what would you recommend for the Indian diet?
So diet is probably the most important, because depending on what you eat, you will make in the body, and what you don't make in the body, you will accumulate in the body. As my colleague said, proteins are extremely important. In the formative years more, in the later years also important, because if you're doing some strength training, the protein requirement also is high. So you need a significant amount of good first-class protein, which you have to moderate in your diet. You also need non-trans fats. And then the Indian habit of having carbohydrates for everything has to be toned down. I'm not saying don't have carbohydrates. And whatever you have should be easily assimilable and easily expendable. The Indian habit of celebrating everything with sweets is something which is a very crushing phenomena to the body as a hormonal system. It's a very lovely phenomena to the tongue and the eyes and the taste buds. But you have to be careful regarding how you balance the proteins and carbohydrates and fats. And having said that, especially for the aging population, nutritional supplementation, micronutrients, essential supplements, from magnesium to zinc to so many other components are extremely important. And they come into play not necessarily in the age of 50s and 60s, but omega-3 fatty acids, B12, vitamin D3 are all important constituents that you need at every phase of life.
But you must do a possible blood test before you get it done to see what your levels are and go to a physician.
If you do a blood test and you know what your levels are, then you can implement a regime. And if you are punctual and loyal to the regime, you don't need frequent blood tests. After the 5th decade, you need annual tests. But I wouldn't tell my 30-year-old necessarily to go and do a test every year. He can do it every other year.
Now, just, you spoke about celebrations. So one of the other points which is widely spoken about is about how relationships and social connections, in fact, play into longevity. And of course, we have the Harvard study which identifies that. And it is expected to be a top predictor of long-term health, even above smoking alcohol. So how important is social connections for longevity?
Very important. Companionship, camaraderie, social interaction, wanting to be with somebody, belonging somewhere, interacting with different people. It not only stimulates the mind, but the neurotransmitters thereafter go and help in keeping. Remember, a happy person is a healthy person. We have patients in the hospital who are happy, who heal earlier and go home a couple of days early. The same logic implies, rather than a grouchy, solitude, isolated person, a healthy, happy person who mixes, who probably has a shoulder or many shoulders to lean on, to talk with, those interactions are as important as food.
Just a few minutes left, so we have a rapid fire. So I'm going to just ask Dr. Thakkar as well as Dr. Kohli a couple of questions. And if you could just answer them in, maybe a word or so. So Dr. Thakkar, I'm going to ask you first. Aging, can it actually be slowed? Yes or no?
Yes.
Okay. Dr. Kohli, one test every Indian above 30 years of age must do.
HbA1c and thyroid levels.
Okay. Dr. Thakkar, one daily habit that adds the most years to life.
Walking.
Okay. And is 8,000 steps enough, or do we really need 10,000 or even 12,000?
8,000 is enough. 7,500 is also enough.
Okay. All right. Dr. Kohli, what's more important for longevity, sleep or exercise?
Both. Sleep early, get up early and go for exercise.
Okay. One food, Dr. Kohli, Indians must cut down on immediately.
Mithai.
Okay. Dr. Thakkar, fasting, is it a longevity booster or is it just a trend?
Intermittent fasting is a trend. Regular fasting that you do for 12 hours when you eat early and sleep early is healthy.
Okay. One supplement, Dr. Thakkar, that's overrated.
One supplement that's overrated, General B complex vitamins.
Okay. And one supplement that actually works.
Vitamin D.
Okay. And Dr. Kohli, I'm going to end with you. Is longevity expensive, or can most of the gains come from free habits?
It can come from free habits.
Okay. And what would be the top habits?
Watch what you eat, get physical activity going, take less stress, have a good social circle which motivates you, and get your regular checkups done. And yes, it can be, prolonged.
Okay. All right, Dr. Kohli as well as Dr. Thakkar, thank you very much for joining in and speaking with us on CNBC.
Hopefully, we'll meet 40 years from now because we are going to practice what we preach on the same program.
Absolutely. That 100%, Dr. Thakkar. Thank you very much for joining in.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines we're tracking for you this evening. The Sensex and the Nifty recover. An intraday trade led by financials and IT stocks. The Nifty Bank hits a record high. The mid-cap index clocks marginal gains. Fears over an AI valuation continues to keep global markets on the edge as investors await Nvidia's earnings. Microsoft joins hands with Nvidia to pour $15 billion into OpenAI's biggest rival, Anthropic, forming a new alliance. The US has now emerged as India's fourth largest crude oil supplier for the second straight month as volumes in November surpass October. Imports from Russia also surge ahead of the November 21 sanctions deadline to wind down purchases. Adani Group wins the bid for Jaiprakash Associates after 90% of the lenders vote in its favor. Sources say Adani's offer of a higher upfront payment tipped the scales in its favor. NARCL alone controls about 86% of the lenders' votes. Shares of online trading platform Grow see some profit booking today after rallying for 5 consecutive sessions since listing. Money Control reports that the surge in the share price is a result of short sellers getting squeezed due to low float. The Supreme Court questions a friendly approach by the CBI and the Ministry of Corporate Affairs in probing allegations against India Bulls Housing Finance, also questions double standards by SEBI. The Apex Court pushes the CBI to file an FIR, saying it will strengthen the hand of the Enforcement Directorate. The Supreme Court also strikes down provisions of a central act that limits terms of tribunal members to 4 years, rules that it impacts judicial independence, criticizes the Centre for what it calls legislative overruling of binding judgment, says it's unfortunate that the Centre was not accepting the court's directions. No respite from air pollution in Delhi. The Supreme Court expresses frustration at the lack of action, directs the government to respond, pushes Air Quality Management Authority to consider avoiding sporting activities for school students. President Trump shrugs off the killing of journalist Jamal Khashoggi and hosts Saudi Crown Prince Mohammed bin Salman at the White House. Trump says the Crown Prince knew nothing about the killing and elevates Saudi Arabia as a major non-NATO ally. At least 14 people killed after Israel launches multiple attacks in southern Lebanon, also undertakes attacks in Gaza. Palestinian authorities claim Israel has carried out nearly 400 attacks in violation of the ceasefire, killing 279 people. Nitish Kumar elected as the leader of the NDA in Bihar. He will take oath as the chief minister for a historic 10th time tomorrow. Well, straight to the day's trading action. The Wall Street staged a smart recovery today, led by financials and IT stocks. The Nifty reclaiming 26,000, ending at a 3-week high. The Sensex rose 513 points, ending over 0.5% higher. The Nifty Bank, a similar picture there, and 127 points higher there for the mid-cap index. So we saw an intraday recovery coming in. The Nifty Bank hit a record high today. For the first time, mid-caps underperforming the blue chip. Surabhi is here now with the details of the market action. The markets outperformed their global peers, Surabhi.
Well, it was India on top once again, and it's become a bit of a winning streak, though we don't want to jinx it by getting too excited. But yes, the question is, has India emerged, at least for now, as a bit of an anti-AI trade? But well, today, third day running, we had more evidence of that because the market started on a somber note. We had a very weak handover from Wall Street again, but then the market raised to close at the day's high, at least on the Nifty, gain of about 0.5% coming through. And global equities obviously have been under pressure. There's a lot of nervousness ahead of those NVIDIA numbers, which is why when we were trading, Asian markets again resumed their slide and many of them ended almost 0.5% lower. Now let's come to what was the composition of today's rally. So for the large cap space, it was a lot of IT, and PSU banks did very well as well. So let me come to the Nifty gainers. Stocks like Max Healthcare. Max actually was a Nifty winner, biggest mover on the index today. Then the IT brigade, HCL Tech, Infosys, Wipro, TCS, all of these names were doing very well. And it was also a good day for some consumer stocks. So Titan, Nestle, HUL from the large cap space had a good run. Sun Pharma, Cipla, some gainers in pharma. And SBI and ICICI Bank also chipped in. The losers now, Tata Motors, PV, ever since those numbers have come out, the market has just been pushing and punishing that stock because of the growth issues over there. There was Coal India, which was down a bit, Maruti Suzuki and Bajaj Finance seeing some profit taking as well. Now, the mid-cap market today actually underperformed the Nifty. That's what you have to take note of. But it was a day of high drama and very big newsmakers. So let me, call out the three that I'm talking about. One is Grow. Finally, after its relentless run, today Grow was down 10%. It spent, the better part of the day on a down circuit with a lot of pending orders at that freeze level. The second, Saman Capital, casualty of court action with the Supreme Court's observations, their order asking investigative agencies to relook at the entire case. That stock was down about 12%. And then KEC International running into some rough weather with Power Grid for future contracts, and Power Grid is one of their big clients. So that was down about 10% as well. Mid-cap IT, however, was completely in a green zone. And look at the kind of buying on mid-cap IT stocks. Persistent, Coforge, L&T Tech up 9%, Hexaware. So IT across the board, large cap and mid-cap did extremely well today.
All right, Surabhi, many thanks for joining us. That was the market action. From equities to cryptos, where the sell-off continues. Bitcoin briefly touched a 7-month low, slipping below the $90,000 mark. The total market cap of cryptocurrency has fallen by $1 trillion in the last 6 weeks. Bitcoin itself has declined 27% in the same period. And staying with what is happening in cryptocurrencies, it's the larger overarching fear over AI valuations, and that is keeping global markets on the edge. Investors are, of course, waiting NVIDIA's earnings later tonight. Microsoft, by the way, has joined hands with NVIDIA to pour $15 billion into OpenAI's biggest rival, Anthropic, forming a new alliance. Google has launched Gemini 3 as the battle with ChatGPT intensifies. Rachna standing by with all the AI action. Rachna, let's start with Google. Tell us more about Gemini 3.
That's right. Google's newest model, Gemini 3, is being positioned as a major leap in its AI capabilities with stronger reasoning, deeper multimodal analysis, and long context performance. It's already powering AI mode in search and rolling out across Google's apps and enterprise tools. But this breakthrough comes at a moment when market sentiment around AI is beginning to shift. Some of the biggest names that powered this year's AI rally are now giving back significant value. NVIDIA has seen more than $500 billion wiped off its market cap after touching a milestone of $5 trillion. Now, Palantir was also dropped sharply, losing almost $90 billion in November alone. And Alphabet, after months of strong gains, has cooled as well, with estimates suggesting it's down roughly $500 billion from its recent peak as investors reassess just how much optimism is already priced into it. Now, this change in mood is also being echoed from within the industry. And none other than Google CEO Sundar Pichai has publicly now warned that the parts of AI boom are showing elements of irrationality, saying that no company, including Google, is fully insulated if the sector unwinds. Adding to the caution is Michael Burry, the investor who famously predicted the 2008 housing crash, taking large short positions against major AI names. At the same time, the competitive landscape is being reshaped as well by one of the biggest AI alliances announced this year. OpenAI's largest investor, Microsoft, is now joining hands with the ChatGPT maker's biggest rival, Anthropic. Microsoft and NVIDIA and Anthropic, they've signed a three-way partnership in a deal that goes far beyond a standard cloud deal. Anthropic has committed up to $30 billion of compute on Microsoft's Azure cloud. NVIDIA is investing up to $10 billion into the company, and Microsoft is adding up to $5 billion of its own. The agreement also includes the option for Anthropic to scale to 1 gigawatt of additional compute capacity that will be one of the largest single AI infrastructure commitments on record. As Wall Street now turns cautious on the AI story, big tech is forging several partnerships where rivals are joining hands, hoping to maintain the growth momentum. Back to you.
Well, plenty that's moving in the AI ecosystem. Many thanks, Rachna, for joining us. And Elon Musk's artificial intelligence firm XAI is in advanced talks to raise $15 billion in fresh equity at a valuation of $230 billion. Reports suggest that the terms of the new fundraise were disclosed to investors by Musk's wealth manager Jared Birchall last night. The $230 billion valuation is more than a 100% increase from the $113 billion figure which was disclosed in March. On to commodities. Prices of crude oil easing as rising U.S. inventory sparked concerns of an oversupply. However, the declines were limited by secondary sanctions on Russian crude buyers. Investors are also waiting for OPEC Plus decision on its supply policy when it meets on the 30th of November. And staying with oil, the U.S. is now India's fourth largest crude oil supplier. This for the second straight month as volumes in November surpassed October. However, imports from Russia also surged ahead of that November 21st sanctions deadline to wind down purchases. Sapna is here with the details. Sapna, take us through India's crude oil imports.
Well, as per the latest data from Kepler, clearly, our crude imports from the US have really picked up pace. So for 2 straight months back to back, October and between 1st and 18 November, the crude imports, the volumes from the US are anywhere between 500,000 to 0.6 million barrels a day. This is quite a jump in comparison to the earlier months of the current calendar year, where it was around 0.2 million to 0.3 million barrels per day. So that trend is noteworthy. Basically, US is now the fourth largest crude oil supplier to India. This position had been occupied by the United Arab Emirates since a very long time. UAE's position now goes down in comparison to US. Of course, Iraq and the Saudis, they continue to be firmly entrenched as the second and the third largest crude suppliers to India. But of course, the first spot still goes to Russia. Around 1.9 million barrels per day has been imported between 1st and 18 November. Of course, post 21st November, everyone expects this to kind of peter off. The Russian arrivals are likely to come down dramatically.
All right, many thanks. Sapna. Russia has offered to provide technology transfer of its fifth-generation Sukhoi Su-57 stealth fighter aircraft to India. The Russian government-owned defense conglomerate says all demands from India regarding the fighter jet are, and I quote, completely acceptable. This also comes amid several meetings between officials of both countries, including one between External Affairs Minister S. Jaishankar and Russia's President Vladimir. A money control report, 30 lakh shares of the company had moved into the auction window. The report suggests that many short sellers misjudged the stock's sharp post-listing rally. They sold shares they did not hold. They expected the rally to fizzle, which would enable them to buy the shares back at lower prices the same day. But that was not the case, and short sellers were caught off guard. They now face hefty penalties in the range of 20 to 25%. And more listings. Tenco Clean Air made a strong stock market debut with the shares listing at a 27% premium to the IPO price. The 3,600 crore rupee issue was subscribed 59 times in the primary market. The company captured a market cap of close to 20,000 crore rupees on day one. Adani Group has won the bids for Jaiprakash Associates after 90% of the lenders voted in its favour. Sources tell CNBC-TV18 that Adani's offer of a higher upfront payment tipped the scales in its favour. Ritu joins us now with more. Ritu, Adani Group having the last say at the end of what has been a long-drawn resolution proceedings.
Well, yes, a big development in the long-drawn resolution process of Jaiprakash Associates, and it looks like the race has a clear winner, with sources telling us that 90% of the lenders that were led by the National Asset Reconstruction Company, or NARCL, voted in favour of Adani Group's bid to take over the company. Now, here's the key factor. NARCL alone controls about 86% of the voting share, so their decision virtually sealed the outcome. Now, a few of the lenders, including SBI and ICICI Bank, that now hold less than 3% of the total vote because they've sold most of the exposure to NARCL, they chose to abstain, but that didn't really impact the final direction of the vote. Now, why did Adani win the lenders over despite Vedanta offering more money overall? Well, sources say the higher upfront payment in the Adani proposal was the clincher. As we've been reporting, Adani offered a total of 13,500 crores, which included about 6,005 crores as upfront payment to the lenders and another 6,700 odd crores after 2 years, meaning in net present value, their offer was evaluated at around 12,000 crore rupees. Vedanta, on the other hand, had put forward a larger overall offer during the Swiss challenge process of roughly 16,000 crores, with only 3,770 crores upfront and the rest only after 5 years. So Vedanta did, we understand, attempt to restructure the payment schedule in order to increase the upfront portion to win over the lenders, but sources say the COC and the resolution professional did not accept the change because the Swiss challenge window had already closed. Now, with the voting now complete, lenders are going to issue a letter of intent to Adani Group, and then the resolution professional is going to file this approved plan with the NCLT seeking their formal approval. But keep in mind, JP Associates is facing claims of more than 57,000 crores under the IBC. So even with this offer, lenders are staring at a steep haircut.
All right. Many thanks, Ritu, for joining us. So Adani is the winner as far as JP Associates is concerned. Up next, the Apex Court questions, and I quote, the friendly approach by the CBI and the Ministry of Corporate Affairs in probing allegations against Indiabulls Housing Finance. Also questions SEBI's quote-unquote double standards. That and more when we return. The Supreme Court has questioned, and I quote, the friendly approach by the CBI and the Ministry of Corporate Affairs in probing allegations against erstwhile India Bulls Housing Finance, which is now called Sammaan Capital. Shares of Sammaan Capital hit the lower circuit in trade after the apex court pushed the CBI to file an FIR saying it will strengthen the hand of the Enforcement Directorate. The court also questioned what it called, I quote again, double standards by market regulator SEBI. Now, Ashmit is here with more details. Ashmit, why has the Supreme Court decided to take this matter up? Who filed the PIL? Where does this now leave the issue of Sammaan Capital?
Well, this issue, in fact, travels back to 2019. That's pre-COVID. This PIL was filed by an NGO called Citizens Whistleblower Forum. This, as one of the members, Prashant Bhushan is one of the members. He was the one who was arguing today. And originally, when this case was filed before the Delhi High Court, it went through the motions. All the parties were made to hear, but it was dismissed. And it is an appeal of that Delhi High Court order that was today listed for hearing before the apex court. The concern that was raised is that Sameer Gehlot, the erstwhile backer, the founder of IHFL, India Bulls Housing Finance Limited, has fled the country. And on that argument is where there was a need felt. There was a argument made for a thorough investigation. Now, that demand, in fact, is what elicited sharp language from the apex court when it spoke of individual investigators. First, the CBI, the Supreme Court, in fact, bench headed by Justice Suryakant, not happy with the conduct of the CBI, questioning what it called was a friendly approach of the CBI, nudging it towards filing an FIR, saying that if CBI were to go ahead, file an FIR, that will strengthen ED's investigations. ED is the one that has been briefing the apex court as far as ongoing investigations are concerned. As far as ED's conduct itself is concerned, well, the ED clarified that, look, we've done our bit. We've reached out and filed complaints before the EOWs of Delhi and Mumbai, but those complaints haven't been taken cognizance of. And to that end, the ED said that we're open to hosting a meeting of all stakeholders put together where we can assess where the gaps in the investigation are and what needs to be done. And they proposed a meeting, including the SFIO, the CBI, ED, of course, as well as SEBI. And that is where SEBI appeared to be a little hesitant, which again invited sharp comments from the apex court, saying that this appears to be a double standards. Again, not understanding, the Supreme Court said, not understanding this hesitancy being shown by the market regulator, going on to say that when it comes on the issue of seizing assets or taking over property, SEBI is quick to act. But here, where there is a need felt for an investigation, SEBI appears to be hesitant, especially with the Supreme Court giving it a nod, giving it the jurisdiction to go ahead and investigate. So clearly at this point, seeking more scrutiny, that's the broad message that the apex court is sending out. But at the same time, important to clarify that no observations or findings were made on the merits of the case. Supreme Court only saying there's a need for more investigation, and to that end has sought for a status report. The next hearing in this case will be on December 17th.
जहाँ तक सम्मान कैपिटल का वास्ता है, तो ये पब्लिक लिस्टेड कंपनी है, ये डिफॉल्टर नहीं है किसी भी सर्कमस्टांस में, किसी का पैसा देना नहीं है, कोई मुकदमा या कोई इन्वेस्टिगेशन किसी भी अथॉरिटी की, सीबीआई, ईडी, सेबी, आरबीआई, कुछ भी पेंडिंग नहीं है। नाउ ये पिटीशन पहले हाईकोर्ट में भी दायर हुई थी, सारी अथॉरिटीज़ ने सब कुछ देखा और कोई गलत काम की आदेशा नहीं दिखाया गया।
Well, that's Mukul Rohtgi there, the counsel for Sammaan Capital. The Supreme Court, meanwhile, has struck down the provisions of the Tribunals Reforms Act relating to the appointments, tenure and service conditions of the members of various tribunals. The court ruled that certain provisions impact judicial independence. A bench led by the Chief Justice B.R. Gavai censured the government for trying to override the apex court's judgment by enacting a law. And more from the court, the Supreme Court has expressed frustration that the government takes no action on air pollution as it peaks in Delhi. The apex court also pushed the Air Quality Management Authority to consider avoiding sporting activities for school students. Remember, school students have moved the courts now. The government was also directed to respond to concerns on missing data and accuracy of AQI monitors. This after law firm Amicus flagged the use of sprinklers around AQI monitoring stations. In international news, President Trump hosted Saudi Crown Prince Mohammed bin Salman at the White House for a dinner last evening. Trump greeted the prince on his arrival with a group of fighter jets flying over. Before the two leaders walked inside, the Crown Prince announced that Saudi will raise its planned investments in America to $1 trillion. They had announced $600 billion of investments When Trump visited the kingdom in May, President Trump also elevated Saudi Arabia as a major non-NATO ally. This was the Crown Prince's first visit to America since the 2018 killing of Washington Post journalist Jamal Khashoggi by Saudi agents in Istanbul. President Trump shrugged off the killing, saying that Salman knew nothing about it.
As far as this gentleman is concerned, he's done a phenomenal job. You're mentioning somebody that was extremely controversial. A lot of people didn't like that gentleman that you're talking about. Whether you like him or didn't like him, things happen. But he knew nothing about it. And we can leave it at that. You don't have to embarrass our guest by asking a question like that.
About the journalists, it's really painful to hear, anyone that been losing his life for, no real purpose or not in a legal way. And it's been painful for us in Saudi Arabia. We've did all the right steps of investigation, etc. in Saudi Arabia, and we've improved our system to be sure that nothing happened like that. And it's painful and it's a huge mistake, and we are doing our best that this doesn't happen again.
Well, MBS was not the only high-profile guest at the White House. Cristiano Ronaldo, who currently plays for a club in Saudi Arabia and is the world's only billionaire footballer, was also present at the dinner table. The world's richest man, Elon Musk, who had a controversial 9-month stint in the Trump administration, was present at the state dinner as well. And with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a moment with more.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Shares of online trading platform Grow see profit booking after rallying for 5 consecutive sessions since the listing. Money Control reports the surge in share price is the result of short sellers getting squeezed due to low float.
Rural auto fintech firm Tractor Junction adds $22.6 million to its kitty in a mix of equity and debt. The equity part was led by Asthanor, will use the funds to scale its marketplace, expand stores and accelerate its fintech arm.
Logistics intelligence platform Pidge bags 120 crore rupees in growth capital. Round was led by global business leader Thomas Myers, Live VC. Pidge clocks 10x year-on-year growth with an ARR of 250 crore rupees.
Mobile-first social gaming platform Stan gets investment from Sony Innovation Fund, raises $10.5 million in its Series A round, will use the funds to expand AI-led personalization, build creator monetization tools, strengthen publisher integrations, and accelerate its entry into other mobile-first markets.
Fears over AI valuation continues to keep global markets on edge, and as investors await NVIDIA earnings, Microsoft joins hands with NVIDIA to pour $15 billion into OpenAI's biggest rival, Anthropic, forming a new alliance. Google launches Gemini 3 as the battle with ChatGPT intensifies.
Elon Musk's AI firm xAI in advanced talks to raise $15 billion in fresh equity at a valuation of $230 billion. Reports say valuation is more than 100% increase from the $113 billion figure disclosed in March. Those were the headlines that we're tracking for you this evening. But on what's brewing today, India's rural mobility and agri-fintech sector just got a major push. Tractor Junction, a rural auto fintech platform, has raised $22.6 million in a Series A round. The round was a mix of equity and debt, and the equity part was led by global impact investor Asthanor, with participation from InfoEdge and Omnivore. The company, which has grown revenues 13x in 3 years, plans to use the fresh capital to scale its used vehicles marketplace, expand company-owned and operated stores, and accelerate its fintech arm, FinJ, which has already dispersed over 1,500 crore rupees in loans. To discuss this further is Rajat Gupta, the founder and CEO of Tractor Junction. Rajat, thank you so much for taking time out and being here with us on, Startup Street. First of all, Tractor Junction today is more than just a marketplace, right? It's a rural auto fintech platform. What makes your model uniquely positioned to solve the mobility and credit gaps in India's rural economy? And what's the impact that you're trying to create?
Arundhati, thanks for having me here. So we are building a unique business out of that. We started as an tractor or content discovery platform back in 2018 from Alwar, Rajasthan. Even we are still operating from Alwar, Rajasthan and having an office in Noida. So we started solving the unique, you can say, pricing and information arbitrage which exists in this category. Where we started from, and being that India is the world's largest market for tractor, there's a lot of pricing and information arbitrage exists in this category. Prior to this, my family is in tractor business, and that's why I have a background that even tractor right now is the most expensive purchase in any of the farmer's life. There's a lot of missale happening, and that was the idea. That's how we started this building upon. Over the period of time, we find out that we cannot only build business on the digital. Then we started back in 22 our offline stores, and currently we are operating 70 company-owned, company-operated outlet across Rajasthan, MP and Maharashtra, and we are selling almost, you can say, 300-350 used tractors on a monthly basis. Even we started 3 more states as a pilot state in the last, you can say, 4-5 months, where you can say the growth will be coming in the future.
All right. You've raised this $22.6 million in a Series A round, right? It's a mix of equity and debt. What are the top 3 areas where this capital will be deployed? There's tech, on-ground expansion, scaling your fintech business. So where is the money going to go?
3 things, as we have a 3 revenue stream, platform business, commerce business, and the financial vertical. So money will be going into all 3 put together. You can say similar amount of money is going in the FinJ, where we are scaling from current 12 states to almost, you can say, 18 states in the near future. We are currently almost, you can say, 20% or 30% penetration in the existing states. We are going to double down this penetration over the period of time. At the same time, our presence in the current, you can say, commerce business, mostly in the Rajasthan and MP, where we are operating almost 50 odd outlets. We will be doubling down in the existing states. At the same time, we are planning to expand to almost 250 outlets or the company-owned, company-operated center by the next, you can say, 18 to 24 months. So almost, you can say, 50 crore will be going into this. The rest 50 crore will be, you can say, we are putting upon mostly into the platform where we are building AI-led, you can say, platform so that farmer can get the right research about based on their application, they can choose the right tractor.
Sure.
So
And
that's how we are going to use the money. Yeah.
All right. You know, your revenues have multiplied 13 times recently over the last 3 years, right? So you've got these different business verticals. If you could tell us what's driving this momentum, how do you see the mix evolving, and where do you hope to end this year?
This year we will be closing somewhere around 225 to 250 crore, somewhere in between, because of this new GST design. There's a slow in the used vehicles purchase. There's a more push towards the new vehicle. That's why there is an impact. Otherwise, we would be crossing 250 crore for sure. What's the other question?
Which part of the business do you see driving the momentum for you, and how do you see the mix evolving going forward?
So mix will be, you can say that it will be more the commerce business, because you can say there's a bigger opportunity exists in India. Almost 1 million 10 lakh new tractors are getting sold. Almost 15 lakh used tractors are getting sold. We are just selling, you can say, 4,000 odd tractors this year. So it would be more on the commerce side and the fintech side, because platform we are already having like 60% market share in terms of the digital traffic over the tractor and the trucks. So we are the largest platform operating in the rural auto category. We are having more than 70 lakh farmer users visiting us on a monthly basis.
All right. So you see the commerce business driving the growth going forward. You know, like you mentioned, your fintech arm was launched just last year, right, in 2024, and you've already disbursed over 1,500 crore rupees in credit. With this fresh capital, how do you sort of plan to expand your loan products, underwriting capabilities, and partnerships with institutional lenders?
So we find out this opportunity after our commerce business. When we were doing the commerce business, almost 70% of our sales is happening on the financing, and then that's how we partnered with all the lenders. And then we find out there's a bigger opportunity, or the bigger problem exists from the farmers and the small, you can say, customers' point of view. They are hardly able to get the funds for their used vehicles purchase. So we started disbursing, or you can say, association with the beyond our ecosystem. That's how we launched Finge in January 24. And in the first year of the operation, we disbursed almost 330 crore. This year, we are planning to disburse 1,700 odd crore. And going forward in the next 2 years, it will be at least tripling down from here every year. So next year could be 5,000 crore, and down the line, it could be 15,000 crore. What's kind of, you can say, rule engine we are trying to build? The biggest problem from any of the lenders' point of view is how can they price a vehicle when they are planning to fund that. So here are, you can say, core competency coming, because we are operating the used vehicles or the commerce business at ground. We are already buying thousands of tractor, you can say, quarterly. At the same time, because we are valuing them, this valuation is getting used by all these lenders, and that's how they are being able to fund, you can say, the right asset, and we are able to source them the right customer, and that's how we are stitching, or you can say, all three businesses together.
All right. And you know, you have 50 plus OEM partners and 25 lending partners already, right? How important are these collaborations for scaling your rural mechanization? And what new partnership opportunities are you exploring right now?
So we are having fairly good, you can say, partnerships across right now in the OEM per se, be it a tractor and the trucks. Our two new platforms are, you can say, Bike Junction and the Infra Junction, because 70% of the even two-wheeler sales happening right now in the Tier 3 and the Tier 4 India. At the same time, you can say backhoe loader, which is the biggest selling product in the rural India. 70-80% of the sales is happening in the rural India. So we started these two platforms in the last year only, and we are doubling down and expanding the partnership. We are already working with few 4 or 5 partners in the bike and the construction equipment category, but we are planning to expand it to almost, you can say, 10-15 in the near future. At the same time, on the lending side, we are still figuring out how can we collaborate more in terms of right now we are behaving like in you can say sourcing partner them. We are able to optimize their cost of you can say acquisition of any of the customer. We are able to give them that right pricing engine which we are using for us. We are planning to go beyond how can we help them in terms of the credit underwriting. We are building a smart rule engine because we are already sourcing almost you can say 20 or 1,000 application at our end. Out of these 5,000 applications are getting passed. So we are building a smart you can say credit led rule engine at our end, which will definitely going to fuel our Finch business in the future.
All right, Rajat. Thank you so much for taking time out and being here with us on Startup Street. We wish you all the best on this journey going forward.
Thanks, Andrea. Thanks.
All right. From rural mobility and agri-fintech, let's shift focus to the logistics space. Interoperability last mile logistics platform Pidge has raised 120 crore rupees in Series A funding led by LVEC, the entrepreneur-led fund founded by global business leader Thomas Mayer, with 10x year-on-year growth of 250 crore rupee annualized run rate and a valuation that's jumped 5x since its last round in February this year. Pidge says it's ready to digitize and equalize one of India's most fragmented sectors. From AI innovations like Titan and more to Tier 2, Tier 3 and global expansion plans, the company is betting big on becoming the logistics operating system for Indian commerce. Joining me now is the man driving this vision, Ratnesh Verma, founder and CEO of Pidge. Ratnesh, welcome to Startup Street. 120 crore rupees in growth capital led by LVEC. First, tell us how hands-on are they as partners given their entrepreneurial DNA, and where does this round place your current valuation?
Well, thank you very much for having me here. For us, it was very clear to get an investor who was completely aligned with the vision, who was able to contribute to building a global brand, building a B2B brand. And Thomas is a very experienced entrepreneur and has built brands globally. So having an investor who was not just deploying capital, but also being able to align with the vision and contribute to delivering on that vision. And that's why our preference with Thomas. I've known Thomas previously as well, but it's great to have him on the cap table. In terms of evaluation, as you rightly said, we've grown quite significantly. We are a highly capital efficient company, and currently our valuation firmly places us in a triple-digit $1 million club.
All right, a triple-digit $1 million number. Ratnesh, like I mentioned earlier, Pidge has reported 10x year-on-year growth, a 250 crore rupee annualized run rate with strong margins. What's powering this mix of scale and efficiency?
Well, at the end of the day, look, I think we got to take a step back. E-commerce in India is doubling every 3 years. Supply is not. What happens to e-commerce when you can't end it in a delivery? That jeopardizes the entire ecosystem. Population is not growing, supply is not growing. We were firmly, structured around getting more with less. Interoperability, making sure that we are able to create that digital equalization. 87% of India is undigitized. And how do you bring that digital equalization? How do you bring them at par with the larger companies? So we're on a mission to create that digital equalization and to build that interoperability. What is really powering is this, on one hand, the businesses are able to deliver more, deliver faster with Pidge, and in a more seamless manner. They seem to grow their revenues by up to about 20%, reduce their costs, increase their customer satisfaction. And on the other hand, the vendors, who basically are the delivery companies, who are unorganized, are now able to participate in the ecosystem as equals and also generate more revenue. So we're trying to grow the ecosystem at large, and that is what the purpose of Pidge is.
All right. Ratnesh, you're also targeting Tier 2 and Tier 3 expansion aggressively, as well as planning international pilots. So what are the opportunities you see outside metros? How different is the logistics problem there? And globally, which markets are you eyeing?
Well, up until now, infrastructure played a big role in the lack of e-commerce going into the deeper parts of India. We know that over 70% of e-commerce is restricted to metros and tier one markets. But with the infrastructure improving and with accessible technology that Pitch brings to the ecosystem, we hope to go deeper in driving that adoption, in making digital commerce a reality for the entire country. Bharat needs to be digital, and Pitch is very much at the forefront in trying to make that happen. In terms of the international expansion, look, Pitch is designed for 80% of the world. 80% of the world that is high growth like India, 80% of the world that has low digital adoption and has infrastructure, in the pipeline. We are designed for that. So we will be piloting Pitch especially in the Southeast Asian region, which is something that I'm very, very familiar with and completely ripe and mirrors India's macro fundamentals.
Sure. Let's now talk about Titan and more, your AI-led reliability innovations. What problem do they solve that traditional logistics players haven't cracked yet? And what's the tech moat here?
Yeah, well, look, I think at the end of the day, the consumer behavior has changed.
Yes.
Consumer wants a faster delivery. Whether it's 10 minutes or it's 30 minutes or it's 2 hours, consumer does not expect a 2-day delivery, 3-day delivery. That's the first thing that's happened. That's putting more pressure on supply because 5 years ago, the rider could come with 50 packets and deliver it. There was that efficiency there.
Sure.
Today, the rider has to go one order at a time. Now, if you want to deliver faster to meet the consumer expectation, you need to be able to find allocation that is happening in seconds, not in minutes. Otherwise, it fails. And this is where Titan, a self-learning AI allocation engine, is really smart. It customizes to individual businesses' needs. And similarly, more is really our real-time order clubbing module. We're the first ones who are able to optimize the rider's capacity. The whole idea of getting more with less is to optimize latency, optimize the idle time.
Sure. Currently, you serve 20,000 plus brands across 50 plus cities, working with partners like Zomato, Swiggy, KFC, and Tata 1MG. What's the next big unlock for Pitch?
Well, I think the next big unlock is really our small and medium enterprise sector. The MSME website says 60 million. We know for a fact that there are over 10 million merchants across India that do some delivery. We want to be able to power them. We want to be able to enable them to grow.
All right. India is pushing towards single-digit logistics costs, like you mentioned earlier, and 2x e-commerce growth every 3 years. Where does Pitch fit into this national scale transformation?
I think you got to ask yourself, why is our logistics cost 14% of the GDP when the more mature economies are in single digit? And the big answer lies with building efficiency and digitization. That is exactly the purpose of Pitch. With accessible technology, we want to bring enterprise-grade SaaS on every individual's mobile phone, and thereby bringing that digital equalization. That is where we help build optimization. That is where we help build efficiency, and that hopefully will drive the single-digit logistics cost in our country.
All right, one final question before I let you go, Ratnesh. You've often spoken about building organizational capability and a high-performance, data-driven culture. What does that mean for talent and scale at Pitch?
Well, I think this is all driven by the customers and our consumers as well. Gone are the days when you could please the customer just purely on relationship. Yes, that's really important, but until you can go and demonstrate the tangible benefits to them, to their revenue, to their costs, there is increasing pressure there. So the culture at Pitch really is, data is our God. At the end of the day, data speaks the loudest. And we want to have we are building an organization that is very data-led, that's very objective, that is very factual. And that is really, where we want to differentiate ourselves to any organization as well.
All right. So data is God and it speaks the loudest. On this note, let me wrap up our conversation. Many thanks, Ratnesh, for joining us on Startup Street. Wish the very best with all your aggressive plans.
Thank you so much for having me here.
On that note, it is time for us to head into a short break. But coming up next, Plum looks to cross 500 crore rupees in revenue this fiscal year. However, the D2C beauty brand has no plans for a listing debut. We check in with the firm's founder on the other side. Stay tuned.
Welcome back to Startup Street. D2C beauty brand Plum is doubling down on its skincare and body care segment as it looks to cross 500 crore rupees in revenue this fiscal, but says it has no IPO plans in the near future. Speaking to Shilpa Ranipeta, the company's founder Shankar Prasad said the company's niacinamide range has crossed over 10 million customers and it plans to further innovate and expand this range. Listen in.
It initially started with very, very small, circle of people beginning to like the product. And about only 2 or 2.5 years back, we celebrated 1 million bright faces, which is when 1 million niacinamide products got sold. And within a short period of time, it started almost going viral in a good way. And we are today celebrating 10 million plus niacinamide products sold, and we call it 10 million bright faces. This is a range that has since expanded from just a serum into face wash, toner, serum, moisturizer, sunscreen, face mask, and lots of other products coming down the line.
Help me understand from a business point of view, with respect to revenue, what is the split looking like now? And going forward, what is your focus area going to be like?
So in fact, we started with skincare largely and then body care. And skincare still is the bulk of our revenue. More than 2/3 of our revenue comes from skincare.
Right.
Body care does very well as well. So overall, between skin, hair and body, we are talking about more than 95% of the revenue coming in.
Right. As of FY25, you've crossed about 400 crores in revenue. You've also turned profitable, and something that's sort of like a rarity today when we look at D2C brands as well. So, really, what's the next leg of growth then? And, what's the kind of growth you're expecting going forward also? Do you believe that a 25-30% range of growth is still sustainable or it's doable for you going forward?
Yeah. If I look at the macros, a 25-30% is a very, very meaningful target to take, a very, I would say, reasonable target to take. So we have to balance the quality of growth with the magnitude of growth that we are doing. So 25-30% is a number that we will be absolutely very happy to chase.
So you think within this year you will be a 500 crore plus brand?
Fingers crossed. We're already at a run rate level. We are there.
Okay.
For the full year, we definitely will give it our best to get there.
Right. And what's your online-offline mix like?
Sure. So about 70% of our revenue today is online, and about 30% is coming from offline. Offline is something we started in 2017,
right.
And we've been very measured in our rollout of offline expansion, whether it is exclusive outlets, whether it is general trade, whether it is modern trade, whether it is exports outside of India, which is also largely offline. So for us, the trajectory has been one of steady build out in the offline space. Very fast growth in the online space, but the remarkable thing is this number of 2/3, 1/3 has roughly remained the same over the last 4 or 5 years.
Right.
So both segments seem to be matching their growth.
Right. And you've seen about 400 crores in revenue. You're profitable now. So next, what are you looking at investing in? Do you believe that there are new categories that you can enter? Do you see makeup, for instance, something that's also taking off? Or do you want to first consolidate your presence and expand further in the existing categories of skincare, hair care and body care?
Yeah, to be very honest, there's so much opportunity inside each of these segments, and we have not clearly fully exploited all the opportunities we can in terms of growth. So there really is no need for us to do anything new. Okay. Having said that, makeup, for example, is a big request from people around. But that's not something we are very, very active about. It's something that we are thinking through. Having said that, none of this will distract us from the task in front of us, the opportunity in front of us in skincare, body care and hair care.
Right. And in closing, we've seen a wave of startups now hitting the capital markets. Is that something that you're also eyeing? Do you have like a goalpost to get there? Any timelines, anything you can share about that?
Not actively looking at any sort of corporate actions at the moment. I think our plate is full in terms of the execution opportunity, and that really has hands full doing that. So at the moment, we don't have anything.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Welcome to Indianomics. The finance minister just confirmed earlier this month that the government is thinking about amalgamating banks to create more big world-class banks that India needs for growth. The announcement led investors in small banks like Bank of Maharashtra and IOB to worry if their bank will be merged into a larger bank which grows more slowly. It led bankers, on the other hand, to worry about the problems of cultural and technology integration and employee morale. To understand how best the consolidation may be done and what are the costs and benefits, I have with me 4 veteran elite bankers. S.S. Mundra, former Deputy Governor of the Reserve Bank and former Chairman and Managing Director of BOB. Dinesh Khara, former Chairman, State Bank of India. Padmaja Chandru, former Managing Director of Indian Bank. And Sunil Mehta, former MD of PNB. Mrs. Chandru and Mehta both piloted a merger in their time as MD. So, gentlemen, and Mrs. Chandru, welcome to the show. Mr. Mundra, let me start with you. A slightly hatke question for our stock market audience. You know, in the previous round, when Dena merged into BOB, etc., the weaker bank merged into the large bank. So there wasn't much shareholder, disgruntlement. But now the small bank, like say for instance, Bank of Maharashtra, they've grown some 200% in the last 5 years. So there is a bit of a worry that we may be merged into a slightly slowly growing bank. How do you think this will be a factor at all when the government arranges amalgamation?
Okay. Thanks, Lata, for opening salvo. See, the one point is the banks which you are talking about, government continue to be the majority shareholder.
Yes.
And I think the shareholder value would be equally weighing on the mind of the largest shareholders as well. I really don't think that shareholders would be really unduly worried about it. There may be some short-term concerns because, it's a mixed bag. While, okay, growth in terms of percentage may look like, okay, I'm growing at 20%, other is growing at 12%. But then I think the informed investors also understand that you are growing on a large base rather than a small base. You are also getting the benefit of size, of scale, technology and all that. So that's a mixed bag. But having said that, I would just confine myself to a little bit of opening comments so that I don't occupy too much of time. See, let us be say realistic about it. Previous round of merger, 1920, we can say in some way it had been a success. There were short-term pains in the beginning, but in long-term, profit and efficiency gain has been achieved. So and that is visible in the share performance and everything. But as you rightly mentioned in your opening comments, technology, other things, integration is fine. But as far as I understand and I hear from my friends, the cultural integration continue to remain a key challenge. And if that is the case, the point is whether you are surviving reasonably well or you have been put in a position to exploit your potential to the full extent. I think second is still something where a lot of questions are there. And also the fact that the market capitalization of 5 top private banks today is still higher than all the public sector banks put together. So I think it raises a lot of questions. I'm sure in coming round we will be discussing that.
Yes.
I'll just stop at this point of time.
Yes, that is a very important policy question which I will raise a little later in the show. First, what do you think, Mr. Khara, will be the mechanics of the merger? Immediately the shareholders think that, will Bank of, those 5 amalgamated banks, Central, UCO, BOM and IOB, will they be merged into Bank of India and create one big pool? Or do you think, the finance minister did not say about the unmerged banks. She only said India needs large banks for growth and the amalgamation will also have a growth angle. Do you think merging the already merged banks, Union and BOB, will also be something? Because that will create a 25-30 trillion deposit base.
Well,
Lata, when it comes to, if you look at the way the banking system is stacked up currently, SBI balance sheet would be about 800 billion plus, and the others are quite small. So I think if at all the scale is intended to be achieved the way it is there with the global banks, the biggest one would be from China, about $7 trillion US equivalent. And then the next would be maybe JP Morgan would be about 4 trillion plus. So I think if at all we have to scale up to those levels, maybe I think merging the bigger may not really be of much value. But I would like to subscribe to the view that if at all merger has to happen, merger should actually lead to strengthening of the growth levers in the banks. So which actually means that unless and until there is a synergy which will flow post-merger, it may not really yield the desired results. The intention should be that if at all merger has to happen, then the subsequent growth should be significantly higher. That is what it should be. And for that, there's a need for the stronger muscles, and those stronger muscles will essentially come from the skill, the technology, and also the ability to take the risk. And of course, consolidation of the capital, because capital being the one scarce commodity, unless and until it is put to good use, which actually means that the higher capital adequacy ratio is also not a welcome situation.
I agree.
So I think optimally, if at all, we can have a situation where the banks which have got a higher capital, they can be merged with the one which are having lower capital base, and also they can offer synergies in the in the sense that their ability to underwrite better risk will also emerge. So I think that should be the focus.
No, I think both you and Mr. Mundra are pointing to the same thing. Let's think growth and profitability and not let that be the guiding star. Very quickly, Mr. Khara, do you think State Bank will be left untouched? Because that's under a different act. And the PSU banks are under the Nationalization of Takeover of Banking Companies Act. So do you think in this round or in any round, even in the previous, only the State Bank babies were merged into SBI. You think the others will not, you won't have a Bank of India or a BOM getting into State Bank. You think so?
No, I think we have, in the last round of merger, we actually even merged the Bharatiya Mahila Bank, which was part of the State Bank group. So I think that is not a challenge. That can perhaps be looked into. There are ways, and we have already done it also. So I think that's not a challenge. But as I mentioned, that if at all, unless and until we address the core fundamental, what are we going to gain out of merger? And is it really, I mean, what will be the contours of the merger? Are they really addressing the basic issue? That is something which I would like to really
Okay. So concentrate on financials, concentrate on the operational gains, is what both of you are saying. Mr. Mehta, what's your sense? Since you have gone through this, Oriental Bank of Commerce was one of the banks that was merged into PNB in your time. Do you think merger should be geographical? That is, people of the same geography merge so that common branches are closed. There is genuine, savings. Or should it be the other way around, that, you merge into a region where PNB is not, well spread, say with a southern bank? Should it be geographical or should it be cultural? If two northern banks merge, then culture is more easy to handle. How should the government think?
So, Lata, in my opinion, consolidation is just not an arithmetic sum up of the balance sheet. What the finance minister has signaled and is that basically they are creating a financial architecture which can support the country's aspiration of 5 trillion economy and becoming a developed economy by 47. And to that direction, I think the supporting banking system will be necessary to fund that. And I totally subscribe to what Kharaji said and all that. In fact, there is a need to create a large size banks which can support that type of country's ambition. And for that matter, I think a lot of consideration, like what you say, whether the technology or the geography, in my opinion, there are strategic business advantages every bank has. Somewhere they have a niche segment, somewhere they have a different segment. So it has to be strategically thought of.
Okay.
What are the value the merger will bring to the table, and those because last time it was basically on the technology, because that gives a convenience of integration. But I think now we have crossed that stage, and we can swing to the other levers that can facilitate the value creation in terms of capital size, profitability, and the efficiency indicator.
I take your point that every bank will come with some kind of a strategic advantage. And the fact that size, I mean, today I think it's only State Bank which can finance a 15,000 crore project or something. The other banks will not go beyond 7,000-8,000 crore. So the size will have its own advantage. Mrs. Chandra, actually similar question like I asked Mr. Mehta, but more a human angle. You had to take Indian Bank, which is largely a South-based bank, had to handhold or take in Allahabad Bank, which is more a Eastern Northern bank. Are cultural integrations very difficult, so much so that they may actually impact profitability?
Lata, I think, we learned a lot from that merger. Yes, in the beginning when it was announced, there was a kind of a apprehension that, the cultures don't fit in. IT does to some extent, so that was sort of managed. But culture was a big challenge. I think it depends on the way you take it up, the narrative that you give from the beginning. Where whichever two banks merge, I'm sure there would be a culture challenge.
Yes.
But yes, more so in this case. When you position it as a merger of equals, there is no victor or vanquished here. It's all the same owner. We are all working with the government mandate. I think that message again and again, communication plays a big role. Also, fairness and transparency in handling the people. I think people make or mar an organization. Whichever merger, whichever consolidation, unless we take care of people, it's not going to succeed. I think in Indian Bank, we could focus on the right areas, and then it's where it is today. I think it's doing very well. Yeah.
No, take your point. But, I want to just start the other big conversation that Mr. Mundra began and then go to my first break. Mr. Mundra, you said the fact of the matter is that the market cap of the first 5 public sector banks is not equal to the private sector banks. Now, a private sector bank like RBL managed a huge foreign bank welcoming into it very well. So, they got that much of capital, 26,000 crores of capital. Do you think we have to recast the Bank Nationalization Act altogether? There have been advice from the past. Dr. Y.V. Reddy did that. PJ Nayak has recommended in various ways that first let us do away with that act, bring all the banks under Companies Act. Then there will be 51% independent members. The board becomes independent. In a matter of years, it takes time for the board to be independent. Let the board decide what is the profitable one to merge into. Do you think that is the way to go?
That is a larger question, Lata, and I think we have debated several times
on this.
But as you know, there is a business angle to it, there is a political angle to it. But I partially agree with you, because I think that will be a right way of starting it. And even if you are going up to 49, you are not changing the structure of basic control, which can always remain. But I think FM, while talking about the merger, has given certain subtle hint about it. So I think it is also occupying the mind space of the government and all those who matter. And probably some work would happen into there. Because, see, to my mind, scale is not the only thing. Scale, for the size of scale, doesn't really achieve anything. See, in running a bank, there are other issues like how you create a meaningful network of partnership, how smart is your technology, how much is good is your customer connect, how you are innovating. I think those are the things which become very important, which bring the profitability and which ultimately leads to the market capitalization. So how you design the merger, how you phase it. And important point is, when you create behemoth like this, your regulation should also be at the same time need to be really plugged up to meet with the challenge. Otherwise, there could be risk. Actually, Lata, there are two larger questions. Maybe I think
after the break, sir,
we can discuss that. But let me put those questions. What do we want to achieve by this merger? right? And what are the risks involved? I
Yes.
think it will be worth debating on those 2 points.
We will, sir. We'll do that exactly after the break and also ask, you know, there's a bigger challenge emerging for the entire banking space, private sector included, that a company like Grow has a bigger market capitalization than most of the banks. Technology is tearing and taking away the customers of banks. So those questions after the break.